Who they got you on styrofoam? I'm that nigga.
All right, guys. Good morning. Sorry about that. Again, I don't like to start off my streams like that, so I got to get that fixed. Anyway, good morning, everybody. I hope everybody is doing well. Markets are moving slow for the most part on the overall indexes. Trying to grab this dang OBS. Just give me 1 second. It's like no. Late. I don't understand what the hell goes on. Wait, what?
Earnings, basically zero earnings versus $3.34 for the 3 months ending June 30th, 2023.
Oh, I just had to go slow. That's what it was. So what's up, guys? Hit that like button, subscribe. Let's go cover some of the things that are going on this morning. We talked a little bit about it yesterday, so that you guys are.
NVDA AI chip smuggling to China becomes
industry. Listen up. So they're saying that it becomes an industry, I guess a black market. So they're saying that just came across the wire with NVIDIA's chips. I mean, I'm pretty sure that is common sense. If China wants, or any country wants, or if anyone wants GPUs from NVIDIA, they'll find a way to get it. Speaking of Robinhood, okay, real quick, do not let me forget this. You know what? I'm going to write it down right now. LMT, Lockheed Martin. Just putting it on my list. I'm just putting it on my list. So I didn't discuss yesterday. I after the stream last night, I ended up thinking about the amount of trades that we took. So we got short LUMN last week, and I forgot about this one. So it just really goes to show I probably had at least 12, like maybe 8 to 10 trades like total last week. I forgot that I traded this. But I am watching it to see if we can see if we can break 5. Let me not get ahead of myself. So there's some type of technology, like there's something going on, and companies are going to be, there's like, I don't know, kind of like a Vegas get together type thing. I'm not saying that it's in Vegas. They haven't posted news of it on here. Let's see. No, they haven't. But I'm pretty sure Lumen is one of the companies that are going to be there. And I think it is for, don't quote me, but I think it's for like it's like a solar convention or something like that. So be aware that if you're going to look at any of these names. So Lumen's going to be on the watch list, Lockheed Martin, the stuff that we talked about yesterday. Let's go look at NVIDIA really quickly. It's just hanging out on the 100-day moving average. Let me get this stuff saved so that we can get ready to go. I was up a little late last night. That's why the stream was late today. Again, I don't think I ended up falling asleep till around 2. And then my cat comes in at 4:30, 5 o'clock to wake me up. I get up and then I fall back asleep. I've been having a really hard time getting up. It's been like so hard. Anyway, so let's talk about what we have going on. We talked about Starbucks yesterday. Let's pull this up. So Starbucks, if the market, I might take a shot at this. So Starbucks, you guys know that there was some activist news. I don't know if I brought it up to your guys' attention or not yesterday, but I did post it on Twitter. So after hours, you had another pretty much activist stake come out from Starboard that, said that they're going to take a stake in Starbucks. So we could look for a pullback. I'm going to eye up 76 to 75. 75 is your support level. 75 is your support level that you'd want to watch for. All right, but I want to see us hold these previous highs. All right, you quickly tried to you know what? If we can't get back above this 100-day, I may just end up shorting this off the bell right back into 76, 75. I just might end up doing that. There's a trade both ways here. Now what I'm getting at is the pullback and hold of 76 and even 75. You could get a reversal. You can see they've held up 75 pretty damn well. So watch 76 and 75. If you see a pop on this thing off the bell for whatever reason, you know, if you end up rejecting and not being able to get through the 50-day, or even this level up here at 78, you know, if we get through the 50-day and we go back to retest 78, let me see here. Let me just do that really quick. Let me do this analysis really quickly. Oh, you know what? I don't think I did. Thank you. I didn't. Thank you. I appreciate that. Tested 78 Friday. We'll see here. Let's see what happens. I could come up with all kinds of levels now, but I'm watching 76, right? If we get a pop off the bell here, which, let's see, let me pull this up, which we could, and if we do, yeah, it looks like it might do that. So let's look for a pop off the bell on Starbucks. Alright, if we do get this pop, if you get like a quick wick, like right into like 77.50, 78, I'm going to look for a short. And I'm going to target 76 to 75. Just give me 1 second here. See, ready to So again, you guys can see here on the bottom left of my chart that you did this. What is this? 78, 77. So we try every time we try to get above this area, it just seems like it has no luck of holding at 78. So you held it a while ago on their earnings. Their earnings, we had a nice pop there on earnings. And you're now back below it. It's pretty simple, right? Watch the 50-day, watch $78. If we do spike right off the bell and it feels like we can't get up there, then you could look for that short up in front of the 50-day at 77.50 to 78. And look for pullbacks into taking profits in front of 76 and see if you can get down into 75. I would imagine the first try pulling back into 76 is going to hold. So I'm going to be taking my money depending on how we sell off. I'm going to be taking the majority of it off the table in front of 76. We'll see. We'll see how it looks. Maybe I'm going to keep it on because I do think, if we get back down to 76 and it feels like we're not making any progress back up there, we can't regain 78, then, I'm going to look for 75. All right. So if you pull back off the bell, or what time is it? It's 9:09. So if we are actually, if we're up near 78, or like sitting on top of the 50-day, or like, because you can see now, look at it, it's just hanging out. That's my plan, right? If we open up down here at $76, look for the pop, which I don't think is going to be the case. I think you're going to more so be up here and pop. You're going to come in, I'm pretty sure, with a gap up. The probability, I should say. The probability. So, play that. 78, 76, that's the two major levels there, with that 50-day being right there at 77.50. So, Key Corp, really quickly, Walt Disney. What does this say here? unprecedented what is this? Experiences. Okay, Walt Disney Experiences unveils unprecedented expansions at its parks and resorts at D23. I don't know what the hell that is. I have no idea what that is. But this is something that's on the news today, and you are breaking above that level here, that you're regaining that low at 86. So if 86 holds, you could look for a move back up to 90. I'd be taking the majority of those profits in front of 88, but look for a move back up to 90 if this thing holds. It's got a lot of selling pressure. I probably won't fool with this, but it has been getting kicked in the teeth. It's so overdone. Sorry, that's just a squawk. So that's one that's on the list. Tesla, okay? We'll go look at that. Tesla stopped accepting orders for least expensive Cybertrucks. So I guess ones with lower upgrades, and they're morely focused on ones that have, upgraded packages. So Tesla stopped accepting orders for the least expensive Cybertruck while it offers a premium model according to Reuters. Let's go look at Tesla. And I have some other ideas here that we'll go over. Tesla's still just hanging out. Again, I personally still want to look for... I still want to see if Tesla can give us that pullback at 190, 192, 193 in front of that 100-day moving average. Act like it's going to break down. And see if we can't get a nice... I mean, if we can get down into low 190s, guys, that's a good $20 to 210, right? That's a good $20 to get to 210 if we can get back above the 100-day. Okay, so here we go. There you go there. All right, so here's the hourly chart. It's just consolidating and consolidating. I didn't want to see this level. Well, I did if I wanted to be long. I think it's relatively easy. You should just look for, I don't know, 194.50, 195. Let me pull up the 15-minute to get a little bit more in depth here. Let's see. We might actually end up just popping right off of this level here. Hold up. You're holding on to this level. Be careful. Be careful with Tesla. It doesn't seem like this news is... it is selling off pre-market, but other than that, it's a little tough right now. So don't force it. There's not really... And then we talked about CSCO yesterday. Them doing layoffs, mentioning a mass layoff right in front of an earnings call. So, again, I'll let you guys know. I'm thinking, so what I didn't get clear yesterday was that pre-earnings run up or pre-earnings sell off, whatever it decides to do. It may not decide to do any of it, but you can see here you popped back into that 46.50 level. And let's look for a pullback. I want you guys to see something also that I did not see. Look at CCJ. Look at this. We were trading breakouts up there at 50 to, that $50 range. And then I looked randomly yesterday after the stream, and this thing just got hammered. Look where it's bouncing back into. It's bouncing right back into that $40 support area. So, naturally, we look to see, can CCJ hold up at $40 and get above it? Right now, you are trading just slightly above $40. There was, not that uranium, I don't know, listen, I'm not a scientist, but not necessarily does uranium have to do with nuclear stuff. Maybe it does, maybe it doesn't. But there's a nice range here back to $44. If you can, grab a 40 long, you're going to have that 20-day moving in on you. Look for, see if you can't get a little bounce back. You got some nice volume there on the daily chart with CCJ here, even though you are running a little bit out of steam. You turn that into support Friday, $39. You turned 39 into support Friday. So there was there's a fire going on in Russia and Ukraine war. All right. There is, I don't know if it's a big deal because this channel is honestly a joke, because you can tell that they are one-sided and just wanting to talk shit on Russians and saying how bad Russia's doing, this, that, and the third. You know, they come out, they'll say things like, oh, there's theories. Here's the example that they gave. They listed all three examples that were given why this nuclear, facility's on fire. And then they say, at the end of it, like, they made comments going along like, oh, we don't know what to believe or what it could be or what happened, blah, blah, blah. And they're like, yeah, the Russians are lying. And it's like, wait, so you can tell that, giving the Ukraine statement, giving the IFC or whatever it is statement, and giving the Russian statement, they were like, we don't know, we can't really say anything. And then in the end, they're like, oh, Russia just lied and blah, 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 blah. You don't know. No, you don't know. So an unbiased person would say, honestly, we still don't know until we know or have subject of some type of proof to what had happened. So it's really, and they just want to, so it's a one-minded thing. So they brought that up. I saw that on YouTube yesterday. I don't know if it's even a big deal because everything they try to make a big deal to get an audience. So anyway, CCJ. Pulling back there. Let's go check in on some of these other names here. Apple. So Apple's holding up pretty well. It's coming in with a slight gap up. 216. I figured we were going to have to do that. Yeah, I'm going to continue to watch Apple today. I will continue to watch Apple here. We have, let's see here. We're trying to break, man, we're struggling. Not necessarily, but alright, so we're right there at that close from yesterday on Apple. Right on the close. Let's look at Meta. Meta, you have a nice level that I showed you guys yesterday, 510. It's a nice breakout level. If you can't hold 510, or if you seem to pop back into 520, again, you're coming into a bit of an area of resistance. You could look for the opposite side to this trade. Again, you want to have follow through. You don't want to just attempt to do something. What I'm getting at is Meta could just consolidate from like 515 to 520, 522 and just consolidate. But if you start to notice that it's not making any progress and the volume is light, you could look for a sell-off back to 510. All right, Palantir. Hold up here 1 second. Let me get this stuff going here. All right. Isn't ready to die. Trying to find.
If he got on the board, it would be meaningful. Because I look at the board, and the board is made up of really busy people who, and I mean busy not in a negative way. I mean like people who are focused on other aspects. I mean look, Satya had to leave it because it doesn't have time.
Yeah, Satya Nadella stepped off the board. This would be essentially replacing his place on the board.
So I'm just going through some of this news here. Let's go look at. So Palantir's going to be coming in with a gap up. Palantir's trying, not really. Just hanging out at prior highs. You do have some rockets being fired, unfortunately, over in the Middle East. So there is, you guys will see with the title, there is some escalation there in the Middle East. You guys know that I do have a USO call. It's just, I've had this on for about a week now. Palantir's a nice pullback to the 200-day. Nice reversal off of there. Okay, so if you guys notice here, if you do get above that prior high and you hold it, look at the gap fill you have right to like $32. I mean, really, the gap fill takes you to like $32.69, something like that. Right there. I mean, really, there's your gap fill right there. Just right in front of $32. Keep an eye on that. Keep an eye on if you can. Keep an eye on if you can hold $30 there. Look for that 30 to hold. See if it can hold, and see if you can get another like final extension there. But the thing is you did not break it on an increase in volume, so that would be the first thing that would have me worried.
David Faber on CNBC said
And
Starbucks
pullbacks
discussing a settlement.
down to 28 would be ideal. All right, pullbacks down into this area here at like 29, 28. That pre-market, or not pre-market, but that earnings high on Palantir, that would be a nice like 2-day pullback consolidation into this level here. You know, you want to hold 29. You don't necessarily want to break it. You want to have like in my opinion, when you see something that's strong, you want to have it. You want to see that consistency, right? And what's funny is Palantir kind of has the same setup as what I'm about to show you, right? So if here's the daily chart. And if you bring up Meta, right? Some of you guys may not know this, but back during the IPO, see, it's not gonna go back. It kind of had the same setup here. Kind of had the same setup. So, damn, let me see here. Let me go. Yeah, it's not going to be able. It's not going back and far enough on the daily chart. So look at this, right? You have that pullback. You're making your way up here, right? This would be the $30, $29 level on Palantir, right there, right? See if you can get up through there, and maybe it drops back down, and now you're breaking back out. You know, this thing could, and then look, it just went on to run and run and run. So if history, you know, is to tell us anything, it would mean to me that Palantir could be a really good buy before it gets too late. Right, so again, take it slow today so you guys can see here the bounce consolidation. It sells off and then it bounces right back into it. So let's see if we can start making like 27.50 support. Maybe get a little breakout past it to like $32, $35, consolidate, and then try to extend. Again, you cannot tell me that this here does not remind you of literally Meta's IPO. It's not going to resemble it to a T. Sell off, bounce, resistance, pulls back. Okay, they buy the dip. You get back up to this level here, right? And then you're right. That's kind of where we are there. You know, it doesn't have to follow it exactly, but there is a nice resemblance there on you can see the rally, pullback, resistance, sell off, rally, right back to that resistance zone. So let's start to see if we can hold 27.50 and start to like fill in this range up here, right? It would kind of be like this range up here. There's your gap fill too at $32. Consolidate and then try to see if we can extend, even if it pulls back. Even if it pulls back, you know, buy it. Be thankful. All right, we have just a couple minutes here. Let's get down to business. It's time to get down to business. All right, I do have to use the restroom before this bell rings. Let me set and save everything that I have here. Again, I want to watch LMT. I just looked at it this morning. Watch this 550 level. If you can hold this 550, I'm not sure what the escalations are going to mean for it, but you know, I'm not saying we're going to break out 2 new highs, but you have some nice room to 560. So if we can get a nice little run there, and maybe even you break out to new highs, all right, that's a nice hold on an increase in volume. So you know, it's not going to be something that I'm going to be and look, remember, Upstart, Shopify shorts. Shit, I gotta pee. There's so many. There's so much going on. Like, there's so much opportunity in this market. Be thankful. All right, this is what quantitative tightening brings. Brings and breeds opportunity, baby. Brings and breeds opportunity. So, Shopify still hasn't broken down just yet, but I'm still watching that wedge. All right, I'm still watching this wedge here. For those that may not know, looks like, you know, this will be the second ascending wedge. All right, be the second ascending wedge right here. If for anybody that is watching that's new that doesn't see it, right there, and that is your signal of a trend reversal right in front of a major resistance zone. Right. So that's what I'm going to be watching for, is that pullback off of this level. If we break 69, stop yelling, bro. Damn. All right, 69. If we break 69, that'll be. I'll look for that entry. If we get a quick pop there in the 70, I'll do a quick look at the whatchamacallits. If NVIDIA starts to go, all right, if NVIDIA starts to go, I gotta save everything, all right. Watch this 108 level. It's like 107, 108. Take profits in front of that level, but how do I say this? You know, if you get through it, you have room at 110. It gets really crowded there for NVIDIA. Okay, it's going to start to get really crowded with all your moving averages starting to like rain in on you, if you know what I'm saying. All right, so if you want to get long NVIDIA, cool. You know, it could be a nice move right into 108. Take the majority of your profit right in front of 108. You're going to have this 20-day coming in on you if you want to attempt to get to the 20-day. You know, this could be a nice move here, right? If you can just get through 108 tomorrow, try to hold it, and then try to extend higher back up into that top side of like 115, 116. That could be a nice trade. That could be a nice trade this week. All right. Me personally, I'm not sure how this week is going to go. I'd attempt to.
1 minute to the spot and open.
Fucking 1 minute. I'm not even going to be able to use the restroom. All right, guys. Good luck today. I will say that I will be looking for pullbacks in the prior day's high here on NVIDIA if I do trade it.
Let's get to a mad dash a minute and a half before we get an opening bell. The food group.
Damn. I can't believe it just went by that quick. I seriously cannot believe that. I'm going to save my stuff really quickly, guys. Just give me 1 second. Give me 1 second.
All right, let's get to half before we get an opening bell. The food group in focus.
Goldman has a really good piece out today because we're all trying to figure out where to put these given stocks. They trade as a unit. They shouldn't. They start with a buy for ConAgra, which is probably one of the most hated stocks in the group. Has a good yield, and this frozen food and snack, they like their selection. And then, David, a little pair action
104,
here. General
I'm sorry,
Mills,
105
you buy.
would be the entry.
We have times you sell.
For NVIDIA.
Mondelez, you
If
buy.
I take that.
Hershey, you sell.
Look for
Hershey has been
pullbacks,
so
guys.
sticky.
Look for
It doesn't go
pullback
down. But
longs.
Mondelez has been the winner in the group.
We're gonna take
General Mills
that.
had a good quarter, even though I wanted even more from Blue Buff.
look at
And
me. I'm just
Kraft Heinz, I
fixing
totally
my
get it. It's done
charts.
nothing for years, and it will continue to do
Trying
nothing.
to sell, aren't they? Trying to sell what Oscar Mayer or something, right? They've got some
They
things for
always say
sale.
That's the worst I mean, Conagra portfolio, a lot of people think it's not that great, but
something about-
it appeals to younger people because they have these single servings.
CMP.
Kraft Heinz, I don't know. I mean, my mom always gave me those
Look at that
slices that were in
resistance zone up there in front of
cellophane,
108.
whatever.
Be careful.
Enjoy your.
Industrial average up 68.54. S&P 500 up 12.80. Nasdaq is up 41.93.
Watch that resistance zone up there in front of 108. Chickens ain't ready to die.
Why not just start on the one name that over the weekend everybody was pinging me and wondering, and are we going to get a deal? Kellanova. No deal this morning. My understanding, though, is ours is still
And there you go. There's your first pullback attempt off of 108.
last week when others were reporting imminent.
Oh my God. That was such a beautiful...
The leak may have been a bit early.
That was a really nice thing that I had there.
They're going to get to the finish line there. I wish I had more detail. Obviously, we know it will be a cash transaction.
All right, so we are right now... Let's see here.
To do it, they certainly can have the financing to do it. They have plenty of cash on hand as well. But we are waiting for what would be one of the larger deals of the year, and we're still waiting. And again, a lot of hope and fervor over the weekend, a lot of texts. Oh, it's happening, it's coming. No, not here yet.
But what's interesting about Mars, I've met with
See if you can hold this level here. No. So you already held that. You already held that. 106. Looks like I'm not going to be using the restroom.
which is a snack company, Pringles, Pop-Tarts. Yeah, in a world where GOP -1 does everything, it makes your sex life better, you get to it to 100, and you don't eat quick, I don't know, maybe you don't eat Rice Krispies for all I know. But I mean, the GOP -1, by the way, really is pushed to get, now that, there's an informative call, right? I'm not even going to mention, who made that call, because I have no desire to make fun of, well, never mind.
It's another bounce. Another bounce into this level, guys. On NVIDIA. It's another bounce in front of 108.
On our chart there, you can make it out. It's that little circle at the end, so you see that blue left there.
So far, a little bit of relative strength. Let's go ahead and look at the SPY. I have to use the restroom real quick. Look at Shopify. Damn, something happened here with Shopify. Look at Shopify. Huge breakout over 70, guys. Huge breakout. Does that mean Palantir's going? Wow. Look at Look at Shopify. Let's see here. Sucks that the...
So I come back and say, maybe Lilly has a great plan and their drug is better.
Damn, look at that, bro. That's crazy. Missed that one. And LUMN selling off right now? You gotta be kidding me. Alright, niggas ain't ready to die. Alright, so I want to look for this break of $5 here on LUMN. Let me make sure that these,
And look, it is true that it's not like there's like 20 million people on it. But not one, because who would
oh shit, so it did wick up in the 550 already this morning.
pay our business being killed by something that is really great for you? Go get this because it's like better than our food. No one wants to admit it, but they all seem to have data. And I mean this, like PepsiCo had data, like before and after.
I gotta wait for bounces in the 550.
And that's
I need to bounce back into 550 again to take that.
and he definitely showed me, Jim, you're wrong. And I believe it because his data is so impeccable.
Palantir. Look, these things are breaking out again, you guys. Breaking out again.
And as they become more broadly used through the population, and at some point an oral formulation comes and have more people on
A lot of these mid-cap names are breaking out. If you guys see anything that with volume, is Lockheed Martin not trading or something? What the hell is going on here?
And what's really necessary is
I don't see anything on the chart. Bro, what's going on with Lockheed Martin? Bro, what's going on with Lockheed Martin? There's no candles. Yo, does anybody have Lockheed Martin on their charts? It's not showing it. Dude, what is up with that? Somebody's not at their desk or something. What the fuck? Let's see. Fuck it. Whatever. Whatever. Nice job. You got that break, guys. Now it's time to break it out. There you go. Look for the breakout on NVIDIA. I gotta use the restroom. I'll be right back. Look for moves back into the 20-day moving average there on NVIDIA. 110. That's so weird that Lockheed Martin. Yeah, that's so weird that it's not trading today. I don't know if it's because the Middle East break, like, I don't know if the government told them not to fucking have it on today because of an attack or something, but that's ridiculous. That's ridiculous. That's why I'm so sick of big government. Listen, I'm not saying they did, but it would not surprise me that with these talks and escalations that they would do something like that on these type of platforms. I have to go look into some other let me see here. Let's see. I'm gonna look on wait, what the fuck is yeah, it's hold on. Let's go look right here real quick. Because I'm just curious. Like, they didn't move tickers or anything, did they? Yeah, it's on TradingView, so it's weird. All right, so NVIDIA, you can see here, had a nice bounce off the open. I think you got to look for 110 to be your target. 110, you can get through 110 and look for the 20-day moving average on the daily chart, which is coming in right now as we speak. Let me use the restroom so I can get my head in the game here. So I'd like to put on an alert for LUMN. Just so tired of these charts already. They're already pissing me off. Alright, here we go. That's good. I can live with that. I can live with that. Alright, I can live with that. So LUMN, Meta, Reddit, Roblox, Shopify broke out already, for anybody that doesn't know. Huge breakout on those mid-cap names. Sorry, I rushed through this really quickly.
economic growth or even a recession, what credit quality is going to look like.
The Midwest is boom town. You get the Midwest is boom town. Someone the other day was telling me I ought to go to Toledo. That Toledo's never been as good, and I didn't realize that Toledo was ever good. Toledo.
So yeah, 110.
Rejected by the Toledo Blade, something or other. It was like one of the 53 papers that rejected me. And you know, I have them all on a wall. Most of them are gone, and I feel pretty good about it.
I know. They all lived to regret it, Jim. They did.
Oh,
They all
yeah.
lived to regret it. They
Any
wish.
one of them could have died.
Who knows? You could still be the columnist for the Toledo Blade.
I almost was this full-time
You'd be a
FSU
beloved.
columnist.
You would be a beloved figure in the community.
Yes, I would, and I'd go to the Elks every night.
Yeah. Would have been a good life. Too bad.
Instead, I chose to partner with you.
It is weird. It is weird.
I don't know. You want
It is weird.
to say on CBS or
It's not our fault that, you know, like, I get it, but, you know, nobody likes to profit off of stuff like that, right? Nobody likes to profit off of it, but it's okay for, you know, and again, I'm not saying anything, but it's okay for the government to, you know what I'm saying, spread money between them and their friends and break bread together when, you know what I'm saying? It's okay for them to not want to solve the Ukraine-Russia war, but they want to solve the other one. Like, it's okay for them to kill and, you know, profit off of war. I'm not saying that's what, you know, we're doing here. It was just an observation. I'm not saying that they did. Something could just be with the exchange. You know, it could be you know, a broker thing. Could be a thinkorswim issue there. It is weird. It is weird. It was a nice setup, too. It was a pretty nice setup. All right, so there's your rejection on NVIDIA. I'm going to pull this pan this back out because I want to see support, resistance. So you just turned VWAP into a rejection point. Yeah, 108, you got above it. Let's see if you can double top back at it. Watch for another bounce back up into 108. Let's watch the overall markets here on NVIDIA. Or to see if we can get a like a double top there on NVIDIA. It's actually just cranking back to the downside, guys. Take notice to the move to the downside. Take notice to that move.
and the journal detailing the fact that many of them are pressured not to actually sign timesheets, so that that the senior executives, or at least those who monitor these things, know just how many hours they're working. You know, at this point, go to law school, man. I'm telling you. I mean, you're going to work really hard, but you're going to make more money. If it's about the money.
No, I got bad news for you.
What?
The law
I thought about going to law school. They're just talking about it on CNBC.
I mean,
I was really thinking about it.
I know make more money than the bankers, except the most senior bankers.
well, but I do worry.
They're going to work on
So here's your prior day's high, guys. There's prior day's high.
equity, or as we like to call them now, the LBO guys. Although they're not anymore. They're alternative asset managers.
It's another rejection up there. It's why we said look for that long take profits in front of like 107 to 108. It gets pretty tough up there. This is still a low volume pullback. At the end of the day, you can't argue that that's still a low volume pullback.
Yeah, no, maybe not this fall. Maybe a few.
Well, I think they're all trying to figure out how much proofreading there is, and that AI is a better proofreader than an individual. It's really good at that.
It is. But you still need somebody to actually deal with the client.
Well,
in
yeah,
some
but
way
if
and
people are
say,
twice as productive, why do you need?
Could be range bound, but if you get 105 and you notice you can hold 105, then maybe you look for another attempt. Semiconductors have been weak though, compared to the overall markets. You guys saw last week, you know, semiconductor sector was just pretty weak. It just didn't get out of bed. It just didn't want to show up. So, Shopify pulling back also. Shit, I need to be up on my shit. Like right now is where we need to be taking these things. Okay, there's the, oh shit, so there's the SPY. Again, I'm just trying to catch up here. Watch the cues here. Watch the cues. Watch the cues. It's gonna break. All right, cues looking for 445. If we break here, watch 445. This is actually a nice zone that you made support Friday. Look at that. Prior double top. Nice base to put like some to make a support area. Let's see if we can hold this. Watch the clock. We just got into it. It's 9:45. Watch the clock. See if we sit here for about 10 minutes, 15 minutes. It kind of shakes some people out. It tries to rally, and then it can't. All right. All right, let's watch the clock. Oh, look at the volume, though. Look at that volume. All right, so if we get any pops here, I'm going to look to probably see if we can break that level. I'll probably do it at like 450.50. I'll probably grab some puts. I'm probably just going to grab some puts, guys. Not for the sake of grabbing puts, but I'm going to pull it up right now. QQQ. What did I say? 450.60? Pre-market lows? 450.50. 450.50. Let's go have a look. All right, and I'm going to target on the Qs. We're going to target, what did we say, 440? We said 440, right? 440 area. I mean, if you break there, guys, I mean, it's pretty self-explanatory where this thing's going to go. Oh my God. Let's see. Your support isn't until down there. Let's see here. It's already going to start to break. I need a bounce back. I need a bounce back. Oh shit, so that's why. It started to turn this level here at 450.01 into resistance. This is still this little area. Look for Friday's low. Watch Friday's low on the Qs. If you're already in it, great job. Good job there. I never got the bounce back. You gotta be kidding me. Yep, there's your wicks. Okay. It's not over with. It's still not over with. Alright. I'm not making a conviction here just yet on a direction. But I gotta move that down. So that was just a pullback right into prior day's VWAP. Prior day's VWAP. Damn it. I mean, I don't know, guys. That's kind of just, I need at least a bounce back into, like, it feels like it already did it to 450. Let's just watch the clock again. We'll watch the clock here. If the volume starts to dry up, look for, like, the volume to just get lower. Obviously, unless we're just going to break this level and we're going to go test Friday's low. And once again, fall out of bed. You assholes. God damn it. That sucks. I mean, we should have known with the overall markets bouncing into resistance. We should have known. I should have known at least.
Report PIMCO, a global leader in active fixed income.
Is it possible to be more capable and more practical? Be able to perform here and here, make a statement without barely making a sound, and command the road as well as what lies ahead. How we get there matters. Get exceptional offers.
Are you going for it, NVIDIA? Keep your eye on the volume here. This is going to be important. This is going to be important. If we can hold down there, this is going to be an important watch here.
So you can feel confident in your financial choices.
They really know how to put two and two together. Oh yeah, well planned, well invested, well protected.
Dude, I hate these charts. I really do. I really gotta get a different. I gotta get a new. I gotta get different setup here.
You must have American Home Shield.
How'd you know?
I can tell your appliances and home systems are protected. Covered repairs and replacements are taken care of. Warren Sheen never lies. Have a cookie dough. American Home Shield. Don't worry, be warranty. I'm about to put you on something.
Okay, here we go. Wait, look at that. Look how it just got stuffed. NVIDIA just got stuffed right there. See this level 2. Oh shit.
This isn't a real company. There's no way to fake how Upwork can help your business. Upwork is half the cost of our old
Do me a big one, guys. Do me a big favor. Hit the like button for me. I know you guys can. It would just help the stream out a lot. It would help my mental it'll help my mental state as well. Right? Start seeing some progress here. So far we're just
What's best for everyone who depends on it. Solving today's challenges while creating future opportunities. It takes balance. CLA.
Did I just get my 450? I just got my 450 test on the Qs, guys, and I missed it. Look at that. Just like that. Just like that. Oh, shit. I just want to make sure I have all of my moving averages where they need to be. Let's see. So we're still above here, kind of just holding. Yeah, let's see what happens here. Let's not jump to any conclusions. But that was ultimately something you want to watch, because that volume really started to lift itself there. And the higher, you know, that volume on that breakdown pretty much kind of gives you insight to what may happen today. So, what is that, 450? 450, just trying to look at, yeah, right there. You can see you tried to make that support. This is a nice area, nice resistance zone. Turned it into support. If we just continue to run the clock down, we gotta. I'm thinking about taking this move back to the downside. And what are we? We are down. We are red. We're kind of flat. We are flat. I just think a hold of like 451 and like not breaking 451 would have really sent a more bullish signal in the Qs. It's important to just go ahead and look what's in the sector and see what it is that they're doing. Communication information. You know, we were kind of leaning to the downside here with some of these names. But so watch this 450. It's like 449.96, 450 area. You just have to understand that you have some resistance up here at 450 that because you broke it. So it's 451, 450.96. Okay, here I'll put a dotted line here because this is ultimately where I'd like to try and get a short, but I don't think I'm going to get that. I think this right there is where it's going to have to be. All right, which is where we're at right now. All right, just keep an eye on the volume and watch this area here. Let's see where are we at. Where's the 15-minute chart? I think I'm going to just go after it. I'm going to go after it. Let me see here. Hold up. Hold on. Never. Hold on. It does not. Still. You guys leaning long? This could be nice. This could be really nice here. This could be really nice. Yeah, let's go. I'm going to go long, guys. That volume was very... So here's the thing is, like, I hate when I don't have conviction. All right, but I'm going to go long. I'm going to go actually look at the long. Again, look at the volume that came in on that breakdown. Just be conscious. Let's let this thing do what it needs to do. Look at the volume that came in there, guys. Look at that. You don't ignore that. You know, I think we still are a bit overdone. See if we can put in a double bottom. And I want to see if we get back to the upside. Some volume really start to come in on the upside, and it's got to be greater than that. Like, it was more than the opening price, guys. It was more than the opening bell. That's why I'm, you know, really leaning on the, that's just why, it's why I'm making a big deal about it. You know, this is an area that's also really, like, packed with orders, buy and sell orders on your volume profile. Upstart selling off. That's okay. Had a feeling this was going to happen. LUMN broke $5. Nice job. I wanted that bounce back to at least 550. I never got it. Never got it. You know, it gave it to you right off the bell, but you had to be watching LUMN. You know, maybe we could look for... You have to watch 480. Watch 480 on LUMN. If you take the short down there at $5, you know, ultimately you would want to be targeting 4. Take profits in front of 480, 440. All right, that's how I'd be playing it. I'd be watching this level right here, taking profits in front of 480. Right there. And then looking for this level at 440. Blah, 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 blah. Looking for $4.
Meet Laser Photonics on the NASDAQ, stock symbol LASE, a vertically integrated manufacturer.
It's already down 10%.
Center for industrial laser technologies with a 40-year history, and now LASE.
All right, so the SPY is already down at Friday's. Oh, hold on. Yeah, the SPY is already down at Friday lows.
Laser Photonics, everything laser, LASE on the NASDAQ. This bakery needs new equipment fast to keep up with demand.
It tried to recover there, but damn.
The online lender that makes it easy to choose your loan.
It's unfortunate. It's unfortunate.
Your loan is on deck.
All right, let's do this. I think I gotta go further along here. I see both sides to this trade, so be careful.
Thank you. It's home, not home.
I'm probably, I got eyed up a 451 long here on the Qs. Level 2, the depth on these is really on the sell side. It's still really deep, guys. You're still seeing 2,000 sells coming through there. So, is that a 5,000 buy?
LTRN, Lantern, Pharma, Exact Small Cap Research out with a $26 price target, limit tagged over
Let's
November.
watch. All right, so it's 10 o'clock. It's 10 o'clock. All right, so I took those guys. I am in those now. QQQ 451 call for today. Man, we got to get up there, though. We have a lot in our way. Shit, I should have taken that off. Damn, that was a mean reversal. I don't like that. That was a mean reversal.
HII, Hill awarded $209 million contract
It's
for U.S. Air Force weapons
should
systems.
have. Let me see here. See if I can. I paid too much for it.
That's Hotel India.
I paid way too much for that.
Good Monday morning. Welcome to another hour of Squawk on the Street. I'm
Let's
Sarah
go.
Dillon with David Faber live.
Watch that rejection level up there. We gotta get. See, it's still rejecting up there, guys.
Take a look at
Still rejecting.
the S&P 500 down 0.25%. Nothing happened in the last week, right?
And the volume just fell out of bed right there. What's the SPY doing?
Trade, no, market unchanged after all of that. But there's the S&P right now. What's green on the screen is technology and energy.
I knew I should have just went with my gut and went with the volume there.
Industrials all weaker. That's why the Nasdaq's outperforming a little bit. It's down 0.2%. The one
Damn it.
on the Nasdaq up 3%. The year-to-date gains now up a little more than 11% right now. You've got Starbucks, Supermicro,
Come on, baby.
Interactive. That's all helping the
Get back up there. Just get back up there. Just get back up there. Give us a nice run. Let's break it out. Let's go. Let's break it out.
as well. The 10-year
Come on. Let's go. The volume's drying up.
have come off of the lows, the 2-year at 4%. We're 30 minutes into the trading session. Here are three big movers we're watching. KeyCorp shares surging on news. Scotiabank is making a $2.8 billion in minority investment in the name. With
I don't like that, guys.
commercial opportunities to
I don't like it. We gotta get some upside up here. I gotta take some of this off.
lagging today, downgraded to neutral by Wolf Research.
Nice. I gotta take some of that off, guys. Okay, there you go. That's a nice breakout on volume. Man, I should have just waited just a few seconds later. But look, you still have this 3-minute volume. All right, so we have some profits in the bag here. I'm still concerned. I'm still a little, there's a few different things that are going on here that I still am a little, I want to see us kind of make some progress here. You got to watch this level here at 450. Watch 450. Look at the bids. The bids were just more than the asking price. There's something going on with the market. And that could be why the volume is a little I mean, I doubt that, because I was watching time and sales, and the orders that were getting filled were pretty big. There's another 1,000 to the sell side. It doesn't. There's orders that it's not going to show, but I still have yet to see, which I'm sure there was, but so far the bigger orders that I'm seeing get filled are to the sell side. Don't quote me on that, because there could be ones that I missed and orders that it's not showing.
The economy is not that bad. So for all those, chalking up the drama of last week to a growth scare, the Fed's way behind the curve. They need to
We gotta get above here in VWAP, See, the thing is that I don't like about that. That's a nice low volume pullback. Here we go. Let's see if things can start to change. I paid too much for those. My entry was not the best, in my opinion. My entry was not that great.
so we'll see. And there's now some
Now those sellers just kind of like disappeared. That's so weird, bro.
where we were coming into this
That's so weird. They just like disappeared.
and that wasn't justified. That's why this week is going to be important. Also, Fed Chair Powell is going to speak the following week at Jackson Hole to
God damn it.
But CPI, no
Damn
doubt,
it.
very important. I just wanted to point out the Atlanta Fed GDP tracker because we are still tracking for 2.9% growth this quarter. That's not an economy that is necessarily falling into a recession. Now, consumer spending is a big part of it.
It's still a possible goodbye. I just I don't
Moved down. So that's good. It's actually moved up. The previous forecast, you can see it was for 2.5% growth, and then it
I
recently
just want to let it show me that we're going to make some progress.
much lower growth.
I don't want to front run a move.
Percent range. Atlanta Fed always tracks above that, and has been, not.
But yes, we need to start getting above the 9 EMA, which we're starting to on the 1 minute.
Apollo, Torsten Slot,
Got to get above this 450 level and hold that as support. And there it goes. Look at that breakout. Nice. So it's doing it on.
spending, just to show that again, we're not seeing a collapse in the consumer, and this is a consumer-driven economy.
It is. There was a lot of concern last week, though, about travel-related spending. We talked a good amount about that.
Oh man, that sucks. So you see why sometimes if I don't get the entry that I want, that
And that's
I don't take stocks, or I don't take it. If I don't get the price that I want, it's because again I could throw myself on tilt. I could throw myself on tilt, and I need to, once I pay a cheaper price, I can stay cool, calm, and collective, right? I was a little worried there because I was paying attention to that rejection. That was some mean rejections up there. And we started to break this level. We regained it. Let's look for pullback longs, guys. Look for pullback longs. Let's get it. Let's get this cake. Let's get this money, guys. Let's get it. Let's have a great week this week. Come on, man. What the fuck is going on with this thing?
One chart that I just picked up that I don't think is getting a lot of play is temp hiring, which has ticked up to a 3-year high. And that's something worth watching, right? The amount of people working part-time for economic reasons, because it's a signal that things have turned for the worse, and it's the kind of thing that the Fed should be looking at. Does it mean they need to emergency cut or go to 50 basis points? Not sure, but does it mean they might maybe should have gone
It's not going to give us the pullback. It's not going to give us the pullback. It might, but be careful. So far, let's see. You know what? Maybe I could go up. So that's a nice trade there. You got those at like $1.25, $1.20. They're at $1.80. It's not bad, It's not a bad trade there, guys, on the Qs. I would like to try to target 455. I would like to try to target that level. And that would take us, let's see here, we're 0.9. What would like a 0.8% day take us? 453.
Let's get more on the road ahead for stocks because our next guest remains bullish on large cap value, dividend payers, and what they call old school capex beneficiaries.
455.
Securities, head of U.S. equity strategy. Savita Subramanian joins us now. And Savita, just in this conversation, do you think the market is too ahead of what the Fed is going to do on the cutting front, and that presents a risk?
Watch Friday's high. You broke it on an increase in volume. Just keep an eye there. Don't just think that, everything is gravy. I mean, in my opinion, I think our chances of
We're seeing that now. I think the idea that we're going to see a real hard landing unless the Fed cuts excessively is not necessarily the story. So, I would argue that what we're seeing is a reasonably, healthy.
there you go. It just broke it. And we have room, guys. We have some room here. We have some room. That's a nice trade. Great job, man. Good job, guys. For anybody that took that, great job. Great job. Damn. Damn it. They're already up a lot. Okay, so these are nice. 452s. So I traded the 451s, I think it was, orders. Let's see here. Yeah, 451 calls. They're at $2 now. So, you know, there's 80% on those trades right now. That's an 80% trade for anybody that I'd be taking that. There's your day right there. That reversal. That was a nice reversal. Nice reversal, guys. Nice job. Nice job. That's 80%. Let's see if they start taking some profit. It's just look. It's just gonna be one of those days. It's just gonna be one of those days. Look at the volume. And still, just understand what we had this morning. All right, understand what we had this morning. Like, don't forget about this. Don't forget about that downside, because they might show back up at any minute. Whether it's at highs, whether it's in front of like the 100-day moving average, they just got a piece off. All right, they got a piece off. So just understand what's still underneath the just understand what's I don't know how to word it, because I'm kind of tired. Let's look for pullbacks. Let's see here. I think this is a nice level here. All right, 451. Look for 451 area to hold and see if we can't break back through 452. Now 0.8 on the Qs would take us to like 453 or so, at least from down here. So right now we're 0.16. So 15. So that's 65. Like, to close green today, like a percent, you could look for a move up to 454. All right, right around that area. Oh my gosh, bro, those things are already 100%. Oh my god, the 454s. Was that what I was looking at? No, I'm sorry. 455. It's way out of the money. Okay, it's way out of the money. Just understand what the thing is here. Like, if you're looking for a scalp, shit, they're already going to 50. God damn it! I'm already paying a nickel higher. I'm not in anything right now. Yeah, I haven't been like steady looking, but you're not seeing like a fulfillment, like thousands of orders being filled to the buy side. I still am. That's one thing that I'm not seeing here. Please hit the like button, and if you have not subscribed, please subscribe, because I'm going to be doing a giveaway. I'm really trying to get to 1,000 subscribers, and with your help we can get there. Again, I want to help you guys make some money, and I mean, it helps being in a group. You know, I'm trying to make this stuff for free, so, you know, it's the least that, you know, others can do is hit the like button. If we help you make any money today, and you want to give back to the stream, that link's in the description if you want to sign up for a one-on-one. See, look, they're buying up. There's 45 cent calls on the 455s. I'm still just going to be patient here. So this is our first test back up. Never mind. See what I mean? They're eating them things up. Look at that. I told you. As soon as they get down to like 45 cents, they were eating them up. Eating them up. That's a nice reversal, guys. A beautiful reversal. Nice double bottom right down there. Be careful, though. Be careful. And we could still have news that comes out at any minute with this, you know, Middle East, Israel, and Iran, Hamas, Palestine ordeal. Oh my God. All right, so there you go. I think I just seen I know it was over 1,000. I want to say it's 1,700. Look, and it's just met with, it was either 17 or 11. Look, then it's met with 2,000 to the sell side. Like right after that got filled. So there's somebody taking profits on this extension back higher. Wait, let's see here. Yeah, let's give us a little pullback.
More cost effective than ever before. And with Max doing the heavy lifting, even more people can join the team. Solar energy is changing the world. AES is changing the world of solar.
It was a nice job, guys. So those won. Let's go take a look back. I'm a little upset with myself, but not really. So those 451 calls, again, listen, I paid a little too much for them. They're up well over 100% now. It kind of messed me up there that what was going, like, as soon as I got in, guys, this reversal tail and it moved, it just like popped in it and then boom, it took it back so quick, and I'm like, shit. So I'm tying that up with this volume here on the sell side that may not come back in until later. Like you can see now, this climb is just lower in volume, but so that kind of messed me up. Just understanding that I wouldn't have cared if I paid less, but I paid right around 10 cents more, pretty much, 10% more, 15% more. Granted, looking at things now, it wouldn't have mattered, but if we would have broke down, it would have been a problem because I would have been down quick. That's what you're not seeing, is how the little bit of moves there were really, really sinking into those options. It was right around 10 cents or so that it was losing. I don't know what the delta was at the time, but nice job. Let's keep it going. Let's keep it going. Oh my God. They're not neck and neck. I would hope at least that they're not, because that's ridiculous. You can't trust Kamala Harris as far as you can throw her. So we have that. What is that? 460, 455. All right, let's go. Let's start going out to new highs here. Let's look for a pullback. Let's look for pullback longs. And let's look for an extension higher. See, look, once again, look at that volume that's coming in on the sell side, guys. So be careful. It looks like we're going to get that 11:30, 12 o'clock random sell-off again. Is what could be in our future. I'm really trying to fucking stick it to them today, too. I don't understand what... they don't like it because he's actually going to give us... He allows the people to live. And they want big government so bad, it's not even funny. And it's so clear. It's so clear. They want to regulate. They don't want people being able to, not have their... their privacy invoked. And
PSNL, Personalis, another pop here, $4.14 on increasing volume now.
Ever since 9/11, man.
PSNL.
The issues of healthcare, abortion, and Social Security. So, for former President Trump, the way to the White House looks to be improving his approval rating among these swing voters. The Vice President Harris is
the fucking TV is so fucking stupid. They go from one side to the other. Alright guys, watch this up here. I still think that we could go higher, but just take notice of the volume. And
it could be that, Sarah. So
question is an interesting one. They asked, who do you trust more on the economy? And that breaks 42% to 40.
They asked, who do you trust more with the economy? I was never asked that question. Who did you ask? Is the question, because I wasn't asked. I don't think anybody in the chat was asked who they thought would be better for the economy. And I don't think at the end of the day, people are worried about the economy. Sure, they're worried about it, but I think their civil rights are a little bit more important. And not having a prosecutor who gets brought a case and is just like, you know, I don't give a shit whether you're guilty or not guilty. I'm just going to try the case because the cop brought it to me. He's got evidence that you had this, so I got to prove that you had this, whether it was pinned on you or not. As a prosecutor, that's my job. So, I don't know. I mean, again, there are little things that they have to obey. As far as the overall court and just kind of doing what's right, but they step out of that power all the time. You see it with the Young Thug trial. You see it with the Trump trial. Because if you watch the Young Thug trial, which I'll probably watch today, you'll notice why other judges didn't take it on, because the state did not bring forth a case. And you're seeing a case here where it's the same situation. It is an opinionated case where they'll just take whatever judge will take it on, and they're just gonna try it. They're gonna try it. Look, there's that extension. Damn, I never got the. Wait, we did pull back. We pulled back there. Oh, that sucks. That sucks. Damn, $3. Damn, chat, $3. Those 451s are at $3 now. I fumbled the bag there, guys. I fumbled the bag there. I fumbled the bag. Fumbled that shit. But, you know, it could have been worse. We could have dropped. You could have had news come out. That volume could have stepped right back in, and I could have been, you know, just as quickly been down on a move back down than be up. So that's why I'm really keen on my entries and exits, because it helps your state of mind when you're in the trade, when you pay the right price, you know, and start having here's one thing you could look for. Right now, start looking for pullbacks into the 9 EMA on that 15-minute time frame, and look for a pullback. You should start to get a little pullback here. You should. Doesn't mean that you will, but if you can get that pullback, see, that one's way above. That's crazy. Damn, this move here is really gonna... I see what's going on here. You guys see what's going on? Watch out for this move back into the 100-day. This sharp move is really starting to throw you in oversold territory, like quickly. Quickly. Which is going to line up to that hourly time frame where it's putting in that, you know, lower high, and it's at resistance, and then you're going to start having your 5-minute, 15-minute, and all these other time frames. Every time frame, for the most part, is going to be an oversold territory. And I'm going to be honest. See, it depends on where it happens. But if it happens like up here at like 454, yeah, 455, 454. Hold on here. 453.65. Let's just see what happens here. Let's just see what happens. I'm still on the belief here that we're gonna have a pullback come in. See, that one's like, this sucks. This is like the worst. I'm telling you, it's just the worst. Damn, bro, these things are going to be $4 by the end. By here, like these things, I wouldn't be surprised if these things get to $3, $3.50, $4. They will start to decay. Not really decay, but they'll start to some of that I think it starts with the E. I can't think. I haven't had much sleep. Just give me 1 second and I'll think about it. I'll think of it. I promise. I'll think of it. Shit. It's pretty much the time and how far you are in the money with how much time you have. I'm thinking of, it's not theta, right? It's not theta, but it's the other two words. Oh, intrinsic and extrinsic value. That's what I was looking for. Extrinsic value. So, look, there's 3. There's 3. You'll probably get close to 4. They might top out at 350. That's wild. These things are going to be up, y'all. Up. We literally caught the low on this. I can't believe it. I'm such a goof. I fucking fumbled the bag. That was it. That was the big one. That was the big one. That was the trade. Fuck. I'm so mad at myself. Just have to move on now. I gotta move on. Because again, I paid way too much. Let's look for pullbacks, which I think might start to come in here. Watch. Take notice of time and sales. Keep an eye on it. Understand the depth. Watch your spread. Watch level 2.
Because we get a big report this week on CPI and expecting a little softness on hotels. I'm just wondering who has the best pricing power and where you see that trend going.
I am.
Hotels or
That's crazy.
what kind of travel? As I said, on the air ticket prices, those have been coming down for a number of quarters. Car rental days, which had gone way and where you see hotels or what kind of travel?
Yeah, as I said, on the air ticket prices, those have been coming down for a number of quarters. Car rental days, which had gone way up during sort of the post-COVID recovery, are also coming down. On hotels, it's early days. As I said, some of what we're seeing is a consumer trade down. We're not seeing as much like-for-like prices coming down, but we'll keep a close eye on it.
This is an election year. The travel industry, I know Expedia is a member of the U.S. Travel Association. What's your biggest ask, regardless of whoever wins?
Our biggest ask is, let's let people continue to come travel into the U.S., out of the U.S. I think one of the important things that happened during COVID is a lot of governments around the world realized the importance of the travel and tourism sector to growth. It's 10% of GDP around the world, and it's an important sector. We need to make sure that we continue to create jobs and allow people to keep on traveling all around.
So no travel bans. Got it. Erin, thank you. Ariane Gorin, new CEO of Expedia. Pleasure to have you here on set.
Thank you for having me.
Seema, thank you for bringing her to us as well. Let's get a news update now, and for that we're going to go to Bertha Coombs. Bertha.
Thanks, David. The U.S. is sending a guided missile submarine to the Middle East and speeding the arrival of aircraft carrier strike group as Israel braces for retaliatory attacks from Iran and its proxies after the assassination of senior members of Hamas and Hezbollah. The Pentagon confirmed late Sunday that Defense Secretary Lloyd Austin had ordered the dispatch of the USS Georgia guided missile submarine to the region. Hundreds of firefighters backed by more than 30 water-dropping planes are battling a major forest fire raging out of control Monday on the northern fringes of Athens. Hospitals and residential suburbs were evacuated, and officials are calling the fire exceptionally dangerous. And former YouTube CEO Susan Wojcicki has died of cancer at the age of 56. Her family and former colleagues announced the news in social media posts on Friday night. Wojcicki was a key partner in Google's early years and one of the highest-profile female executives in Silicon Valley. In a note sent to employees, Google CEO Sundar Pichai described Wojcicki as one of the most active and vibrant people I have ever met. Squawk on the Street. We'll be right back.
So there you go. A lot of things working off the watch list. Got some money in our pockets this morning. Beautiful trade here on the QQQ. Monster trade. Those went to about a little over $3 from $1.20. I paid more than $1.20. I paid I think like $1.27, $1.28. Paid up for it, but it's a nice trade there. Told you guys this week I'm going to be out for blood if it gives it to me. Just don't forget about what we had this morning, all right? Like, I just, in my opinion, I can't let this go. All right, there was a lot there. I'm not letting that go. So if we get that move back up into that area, which again, I will reiterate, right now we're up, 0.5%. Worst case, if we end up just like up 8% or down 8%. All right, so here, there's 50% right there. That's 455. Just some ideas to look at. Now, if we close down flat and or down, 0.5%, the risk to reward has, you think about those things, right? So there's 0.62. And you are green right now, 0.6. So you would have to close 0.6. That'd be 120. That would take you right down there, which you kind of made it support. So it'd be just under a low a day. That would be a pretty serious move down there at 448 or so. I mean, on average, what's it been doing? Like 1.8, 2% on a slower day. I'm not sure. I haven't really traded the Qs in a while, and I haven't been watching it. I know volatility's been ramped up, but so let's look at the daily chart really. I mean, previously, you're talking 456.
Checking in on stocks just an hour into trading, and S&P's gone positive again. We started out the day strong, lost the momentum, and now climbing again, up 1/3%. The Nasdaq too, up 0.6%. So we're gaining steam here throughout the session. It's energy and tech that are leading the market.
NVIDIA up over 5%.
That helps. Yep.
Yeah, it does.
It's still 20% off the 52-week highs. Earnings the 28th for for the most important stock in the market. Let's get to Dom Chu with more on what he's watching. Hi, Dom.
One of those is NVIDIA for sure. But we're going to start, David and Sarah, with shares of Eli Lilly. This is a healthcare giant at this point now. The shares are up fractionally right now, just about 1/10%.
So about
thanks in part to analysts at Deutsche Bank. They've upgraded that stock to a buy from a hold. They also raised the target price to $1,025 a share. It was $725 before. They're citing, amongst other things, the giant's big beat on diabetes drug Mounjaro, also obesity drug Zepbound, also its high growth, low volatility appeal for certain investors. So Eli Lilly is in focus. Next up, you got shares of Take-Two Interactive higher by about 2 to 2% right now. One of the best performers in the S&P so far, the video game publisher behind those blockbuster titles like Grand Theft Auto and Red Dead Redemption, also Zynga Mobile Games, is getting help from an upgraded HSBC to a buy from a hold. The target price goes up to 179 from 154. They're citing things like better performance from that mobile gaming and more clarity around future game releases, so watch Take-Two. And then we'll cap it off with NVIDIA. Got to show it. It's higher by just about 5% right now. UBS has reiterated the world's most valuable computer chip company by market value as a buy-rated stock. Now, the stock has gotten back everything it lost from last Monday's sell-off. You can kind of see from here. And also, by the way, the bounce back happens after last week's news that Jensen Huang, the CEO, sold roughly $323 million of stock last month. Again, worth noting, NVIDIA has seen a 10% bounce in the last week. That is the best one-week performance of any of the so-called Magnificent Seven mega-cap stocks. So, David, keep an eye on NVIDIA, a big driver of that NASDAQ trade. I'll send things back over to you guys.
Yeah, no, I'm glad we got to it. Obviously, very important. Dom, thank you. Big tech, as Dom also just indicated, coming off what was a volatile week last week, certainly the Mag 7 did underperform, or have been so far for this month. Our next guest remains bullish on the sector, saying AI demand is strong and forecasting a renaissance of growth for Apple in particular. Wedbush Dan Ives joins us now, ready to break it all down. Dan, where do we find you on this fine morning here in New York, but perhaps where you are, it may be a bit later.
Yeah, I'm in Tokyo right now, and look, as we've talked about on the program, I mean, when it comes to AI and it comes to checks, it's not going to be sitting in an office building, right? I mean, and I think what we're continuing to see gives us just further confidence that this AI revolution from semis to software is just beginning.
All right, so what is it you're continuing to see? And tell our viewers, you're in Tokyo. You know, they're well acquainted with your channel checks, but I'd be curious to know what that actually means, A, what you actually do, and then what you're seeing that's giving you the confidence in this raised forecast in terms of how many iPhone 16 shipments there will be.
Yeah, and that's really across Asia in terms of suppliers, how we've always been able to really, I think, get a beat in terms of our view of the supply chain for iPhone. And this started off units coming out, we're calling 80 to 84 million for iPhone 16. And now we're at, we believe, about 90 million and potentially higher. And that's important because that's essentially what Apple is telling suppliers in terms of what the demand outlook looks like on iPhone 16. And we continue to believe this is the start of an AI-driven super cycle for Apple.
China remains important. You're in the region. You're obviously not in that country right now, but does that extend to your so-called channel checks, Dan? Do you get a sense for demand there, given how important that would be overall for the iPhone 16?
Yeah, and that's a big part of what we're doing, and we'll be back in a few weeks in Asia. I think China is going to be key in terms of from a growth perspective. I mean, we believe there's 100 million iPhones in a window of an upgrade opportunity. And those are going to be 80, 85% Pro and Pro Max. And what's important there is that's just going to further drive ASPs. In our opinion, we could now be looking at over.
So I'm going to look for a 452 pullback. All right, 452 pullback. If it gives it to me. That's what I'm looking for. Looking for 452, like pretty much this 15-minute trade line here. I want it to pop up in the Friday's high a day, and I want to pull back into that and see if we can hold it as support. Remember, all right. Remember, look how far already we are extended above VWAP. VWAP's going to have to start catching up if we're going to make, you know, some, you know, to have, you know, more room higher. You're already coming into the double bottom here at the 100-day at 454, 455 area. So I don't know standard deviation how far we are up above VWAP, but I would be careful because this thing's going to have to start coming up and, you know, in order to go higher. And look at the 15-minute chart. Look how far extended you are above VWAP and the 9 EMA. So this extension here should help bring it up a little bit, and then we start pulling it back, and let's meet 452 and turn that into support and see if we can extend here going into the end of the day. The Dow is still stuck below high of the day. Some weakness there. Same for the IWM. So you can see information technology leading us higher. All we needed was semiconductors to break out. They were, depending on how you want to look at it, they were slacking a little bit. But it looks like they're joining the party now. So, with that said, let's see. Let's see if we can get ARM back to 130 in that 100-day moving average. That would be on pullbacks to 120, and look for that bounce to 129, 130 in that 100-day. Let's see here. Disney, this could be a possible short. It feels like the queues and everything should start to run out of steam. I'm not saying it is a short, but just keep an eye on if the markets are a bit extended and that, you know, if the Dow starts pulling back with the overall markets here. Watch. Watch. Let's see if that's a rejection. Okay, so now it wants to show me LMT. Just no volume on that, is there? So I'm watching LMT. If it continues to stay above 550, I'd like to see an extension higher back into 560. You have to pay attention to the volume. So, Starbucks, as of now, is above 78. Okay. It's above 78. Oh, I didn't look at MSOS. Just keep an eye on it. If it does bounce, you got room to 79, 80, but... Oh, that's because it did pull back. So it did pull back to 76 first. I'm sorry. So there you go. It did it. It pulled right in there to 76. We said watch 76. All right, 76 and 78. If you get a bounce into 78, look for the rejection into 76. Or if you pull back into 76 first, look for that bounce into the 50-day and $78. And maybe you have enough volume, which look, it did. It had some really nice volume today. To take it through the 50-day and really extend higher. Let's go look at some of the other names. MSOS and Reddit, LUMN. All right, watch MSOS here. This had some nice volume. What did we say? Low 190s. Look for that failed breakdown. Look at the volume today. Today's volume on Tesla is actually really nice. And there's the Qs again, starting to turn around. But look at that. That's exactly what we talked about yesterday. And look at that thick volume. That's what she said. And let's see if we can get a bounce again. This would be like a $20 move if I can get it cheap enough. And listen, on top of the Cybertruck news, you have Elon Musk and Donald tonight on X. Like, they're just having a conversation, addressing some stuff. Of course, Elon's going to try and stay cool and be like, yeah, I'm not with him. But he knows damn well who he's for and who he's not for. Right? I know. I can just see it. And it sucks that you can't even be okay with, you know, voicing who you like. You know, we should all have respect for everyone's opinions. So let's watch Tesla here at 197. The volume is pretty heavy. I mean, even for the Qs. The Qs had some pretty heavy sell-side volume too. So if we... I'll just wait and be patient with this. Looks like we tested Friday's low already. Right? I think that's Friday's wick low. Yeah, Friday's wick low. And watch this wedge and see if we can continue higher to the make a run to the top side of it, but I don't know. There's a couple things I see here. It's just either another plain rejection. It's just going to consolidate. I don't know. Tesla's just stuck. It's just stuck, unfortunately, right now. So what else? Reddit, RDDT. Again, you'll have to excuse me. I had to get some crackers. I had to get something to eat. So watch this 52 level. If it can start to hold and gain some ground. You are right now rejecting prior day's VWAP and prior day's Friday's close. So we'll find out very soon if VWAP holds or not, and we'll look for the Qs or, you know, even the IWM, which the IWM is weak. So if the overall markets can continue, I just think, again, I'm watching that level here because if we break this level, guys, we got some room to the downside. Reddit's going to go back to 40, I'm telling you. If we break $50, that $49.50, $50, I'm telling you, man, this thing's got some room. And the first target is a break of 52 and take that thing back down to 50. Hold on. So there is a gap here. It does have a gap up there at 55.
been following it in part because of Elliot is the activist or reports as well. The Starboard's there, unclear to me exactly if anything's going to develop for that.
It's a nice break and retest here on ARM.
Whether or not there would be an opportunity for them to get at least one direct.
Look at that. Those QQQ calls are at 340 now from $1.20. Keep an eye out on the ARM here. It's a little overdone, but I want to see if this is a failed hold. Yeah, I want to see if this fails. I want to see if ARM fails there. Look. Double top from Friday's high. All right, Friday's high right here. Double top, 1, 2, or you could look 1, 2, 3, whatever you want to call it. I would just use this whole pattern right there as a double top. Oh my God, what happened?
And new customers, getting new customers in beyond just the loyalists for Starbucks. But the stock is getting a boost maybe on all this activist activity and interest.
The expectation of some kind of a settlement. Again, we'll see whether in fact we get that. But yeah, to your point, still stock down, what, 22, almost 23% for the last 12 months. Quick programming note from me. Tomorrow, don't miss it. We get an interview with Blackstone's president and COO, Jonathan Gray. That'll be right here at Post 9.
Sorry, I didn't know I had the mic on, you guys. I don't mean to be chewing crackers. I just need something to eat here. I'm waiting to see if we get a pullback. Waiting to see if we get a pullback.
Better, faster, cheaper.
In fashion, it was very whippy around to the upside here. As you can tell, it's going back and forth instead of in a tight range and a wide one. We'll see if we can get something back into this 218 and a quarter. Apple Strong want to only be long. That one, I did mention briefly that ARM, I like to short at the 120 level. That was early. Now you're trending to the upside. That's the thing. If you like a stock at a certain price, once it starts showing strength in the other direction, you don't have to.
The 100-day moving average and the 200-day. So like 190, like the low 190s on the bottom, and then 210, 200. Really, it's like 190 to 210. I would keep an eye on that. You know, I don't have conviction in a way. I'm looking at this because just about every time that we have, you know, a breakout between two major moving averages and it breaks out, it gives you that follow through. So I'm waiting to see here. You know, can it give us some room? You have the 50-day also sitting up here at 210. So you have a nice pullback hold here. Let's see. The volume's pretty heavy. I would just be careful. It's not really setting up right yet to trade it. It is something I'm keeping on watch. Just doesn't have much meat on the bone. You know, once you break, you're running into a lot of resistance, moving averages, and I'd honestly be looking at something else.
To fight this one.
Pulls back, but it's lunch. Oh, this is going to be pretty good for me because I'm going to test it out. I went to a 152-year-old, one of the most famous fish and chip shops in London. And that was fantastic.
We were on Baba early, guys.
So that's today for lunch is fish and chips. So we're going to find out about that. Obviously, we'll be having a salad here. Probably will be tuna, and obviously not as good. So that's no chance. It's not made fresh right in front of you. You know, I mean, a little different there. We also went to St. John in Smithfield. That was fantastic. That's Michelin star award winning. Our friend, that's like number one on his bucket list. Yeah. He has yet to have been. And so he was all about that. That was wonderful, lovely. Some saffron halibut was had there with a pea mashed. It was really, really good. All right, so anyways, end of the day here. By the way, number one in your heart, maybe not, XOM right there. What a trade for me here on ExxonMobil, man.
I saw that yesterday, XOM.
Look what names are on the sticky note. XOM, 1 for 1. Yesterday. Amazon, 2 for 2. Robinhood, 2 for 3. Apple, we don't have it, but I think good trades over there. And then the TQs. I'm going to equate the TQs to Apple. I mean, you know, strong market, strong Apple. But there it goes right now for XOM, man. I mean, this is a 40-cent winner, and we're just ho-humming this trade. So it's a nice little trade there for XOM. Again, we looked at these bottoms. This is when I trade the best. Be able to find where levels are and just attack them. And, you know, hopefully they work out. So right there, that was a good
that reaction, though, on the Qs was nerve-wracking, guys.
For that, it is.
It was nerve-wracking for me because I paid up for it.
XOM as it continues to go higher and higher. So, yeah, mushy peas. Yeah, exactly. I mean, you know,
I wanted to stay in it so bad, but after it paid me a little bit, I said, you know what, I got to take a little bit off. I got to take it off the table because
and it was really, really, really great.
I screwed up the entry. I paid too much for it, and I just wasn't. My mental state was not going to be okay.
All right, now
put that work in, man.
Yeah,
and I talk about that a lot. Is if you miss something, I mean, unless you're a person that can sit through stuff and, you know, sit through draw. I don't know. You know, you know yourself. I just know me. And, you know, sometimes it might seem like I'm trying to be a perfectionist, but I only do that because it really helps me. Like, if I can enter correctly, then I'm worry free. You know, I get that move. I know that I've bought the bottom, even if I gotta wait. You know what I'm saying? I've bought just about the best price I could have bought, even though at the time I didn't know it, but I just about did. All right, so here it is. Let's watch this pullback. So I'm looking for a pullback in the Friday and this morning's high, guys. Right there at like 452. Right there. Oh my God, bro. I'm so tired of this fucking chart. Excuse my language. All right, here we go. The volume's falling out of bed. Like, part of me wants to think about puts here, but I don't know. Like a little scalp. I think I might go for it. Yep, no problem, Matt.
It will take billions of solar panels to power the world today. AES is making scale like that closer to a reality. Introducing Maximo, our new AI-enabled solar robot, designed and built in America. With Max on the team, AES is transforming how solar farms are constructed. What was once strenuous is now faster, safer, smarter. At AES, we designed Max with powerful features that accelerate solar construction.
All right, come on, it's time. It's almost time. Let's just do it and get it over with. Just pull it back. Pull it back to 450, 192.
And a mobile microgrid gives Max the endurance to run carbon-free for extended shifts. At the heart of Max, a supercharged GPU empowers it to learn and adapt. Solar energy is changing the world. AES is changing the world of
And there goes ARM. ARM broke down, guys. ARM broke 120. Could not hold it. That's a failed break. AMD is nice and strong today. Feels like ever since that earnings call, ever since ARM's earnings, it has not traded. It just feels a lot weaker than it was. There was a lot of strength, and I don't know if there was something said on that earnings call, but you can see the underlying sentiment of ARM not holding breakouts and shit is a pretty clear sign. Now, I don't know if it's because they have a lockup agreement or something that could be, I don't know. I don't know what they have going on and don't have going on. So, but I do know that it's breaking out, trying to hold, and it just feels like it's just a lot weaker than it was.
Skater ring.
I don't recall.
Is the Cascade Skater ring in Atlanta?
I don't recall.
Coming up as well, what do you make of the action that we've seen so far?
So I heard you were telling me that was fun. I'm happy to hear it. My weekend, I cleaned my room, which was nice, did some writing, actually it was a nice productive weekend, and I also slept because we always know that is kind of part and parcel for me, living my life. So good times there. Honestly, no complaints and zero regrets. To shout out, we're the Millers / I know Obi's kind of taking that mantra as well. But nice look there. I'm just in this Apple trade right now. I know I put in the chat, Apple bro, what are you doing? Because I wasn't getting filled at that time. But then Apple was like, oh, Adara, you actually can get this beautiful dip buy at 218.16. You know what? I'll let you add as well. So very happy here. I have just, thank you, I appreciate that. I've got I mathed this position very oddly. I have a scintilla of shares left. I have one out left here. If we keep bouncing here off 218.90s, I'm tempted to add. If not, if we get below 80s, I'll get out. I was risking here into 30s, so I've already risk or reward for me. That's fine if I got in at 60s. Please just punch. And I didn't chase. I didn't think I'd get 60s, but I waited. We have this wick down into 60s, then we come back up. So I said, thank you, Apple. Come again. And so this happened here. If we keep bouncing off 218.90s, I love what we're doing on the book at 218.90s. I will get involved. But as I posted on my Instagram, I'm also looking here at IWM and Eli Lilly, so check out the Insta story. Trader TV Adara, shameless self-plug there, if you want to take a look at some names I'm looking at today that are not the Apple one. How are you
Love
doing?
it. Yes, I was looking at the exact same trade as Apple as you. I love how you executed on that. This is a former area of resistance that became the support. I'm assuming you're looking at that 218.50, 218.60-ish area. And then, you clear it by some distance. You dance with 219. You come into an obvious consolidation area and take the long. I love it. I hope you print up a storm on that. The Fuge is printing at the high of day 18,758. I haven't looked at the NQ quite yet, but it's a good day right now for the Mag 7, for the chips. Keeping an eye on those bad boys. SMCI is up almost 10%. Wow. Okay. So SMCI really recovering off that bathroom visit that it had last week. So we'll keep an eye on that. I'm involved in BBAI. I almost got printed at 39s, but it's coming down into my area over here. Very small position just to kind of keep things interesting. Let's get started. The lesson du jour. Guys, I'm sorry I'm low on energy today, so you're going to have to forgive me. I will do my best to keep things exciting, but the energy is of very little amounts. So much so, dear, I forgot to load up my lesson, but here it is. Good stuff. That was quick. All right, we're talking about trading earnings today after hours, so let's get right to it, as the title there suggests. I don't know where the hell my lesson keeps going. I'm going to have to do this one more time. All right, here we go. One more time. Lesson. There we go. It loaded it up. Good job, computer.
Good job, computer.
All right, trading after hours markets is a unique trading environment. It's characterized by increased volatility.
Yeah. Let's see here. Can we get it? Can we finally now start to get this pullback to 452? They have damn it, I know his name, but I forget it. I'm gonna make sure it's right before I say it out loud. On CNBC, if you guys turn it on CNBC, I can't put it on because I'll get copyrighted. I think it's Rory and Timmer. This guy's really good. And listen to what he's saying. I'm actually going to listen to it myself here. And I'll let you guys know what I'm looking for here. I'm looking for a move back to 452. It's not really showing it right yet. Yuri and Timmer. That's his name, Yuri and Timmer.
And so I do think the fundamentals remain good, and that we're not, on the cusp of a recession, but there is a slowdown, which in part, of course, is good because that does allow to reduce the cost of capital, and it does allow inflation, at least the inflation rate, to come back down to.
Come on, man.
Welcome back to Trading 360. I'm Caroline Woods. It's time for the big three stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. And here to take us through the trades is Mike Shore, Director of Trading Education at Prosper Trading Academy. Ben, Mike, so good to have you both. Mike, let's start with you. Your first trade is AMD. It's a winner today, up about 2.4%, although down about 5% this month. Tell us why you're trading this one.
Yeah, just I call it a bottom feeder type of trade, and just seeing how the semis have reacted as of late, it's a value play. So I'm looking for that breakout. My breakout price is 138.15. So I'm looking for a breakout on the hourly channel.
Okay, before we get into more of the trade. Not quite there yet. AMD is at 137.52 right now. Before we get more into the trade, though, Ben, I want to talk to you about the technicals that you're seeing for AMD. Is it a bottom feeder, as Mike says?
Very possible here, Caroline. Good morning. Good to see you guys. Not quite there yet, I guess, is the best way of describing it, because we are trying to establish a bit of a bottom at a key level, but still some heavy lifting to do for the bulls, and still have yet to reverse this trend to the downside. Let's just begin first and foremost with an hourly candle chart, and then we can get into a little bit of a bigger picture time frame, and I'll show you what I'm talking about in terms of potential for this to be a buying opportunity. But first and foremost, the 60-minute candles show value still moving lower, right? As you take a look, you can see these areas where the market kind of pauses and consolidates and sort of regains composure. As we just take a look at this, my eye is drawn to an area here. We're talking around that, we'll call it 182, 183 area, a very brief period where we consolidated around 165. Again, kind of sideways consolidation. You start to see the staircase type pattern establishing itself to the downside as we work our way lower. Now, the most recent area to focus on is right around this 145 level, because again, until we get back up above that, this area, we're still in a bit of a downtrend. So let's step away from the 1-hour candle chart. I'm going to show you what's going on with a bit more of a longer term chart. Now, I want to point to the fact that on this chart, you can see value has actually been moving higher, but we have seen a significant retracement off the recent highs of around 227 from earlier this year. Again, down to and below 130 briefly, but still holding above 115. So not necessarily what the bulls wanted to see, but again, if they could start to establish a bit of a bottom here, for example, get back above 170, well, that opens up a door for a retest of 227. Now, this is a very optimistic way of looking at price activity here on this stock. I want to show you, last time we took a close look at shares of AMD, we talked about how we were currently testing the lower extreme of balance that formed around 190. You can see further weakness ensued, and so what I actually did, well, step back. I went ahead and just kind of moved this value area, this balance area that's been forming a little bit lower here. The same chart, basically bouncing around 170 right now. So again, Caroline, not what the bulls wanted to see in terms of some of the recent weakness, but I don't think all out lost on these longer-term charts still.
Okay, so Mike, want to give you a chance to respond to the technicals that Ben just broke down and talk to us a little bit more about your trade.
Yeah, I totally agree. I'm playing this far inside that 170 level. So I'm looking at just the August 23rd, 144, 147 call spread. We should be able to trade that for about 90 cents if we get to that breakout price that I talked about. That's going to give you a reward to risk of 3.44 to 1 if we can get up in that 147 area.
So, Mike, just quickly, in terms of AMD and really the other chip stocks as well, does this mean that you think the weakness is behind us, that we saw the best buying opportunities last week and now we're back on the way up?
I do. Obviously last week was a big reaction, a big overreaction. And so, and if we go up, the chips are going to be the ones driving it. They drive us down, they drive us up. That's like the biggest correlation to look at it, especially with the Qs.
Okay. All right, Mike, let's talk about your next trade. It's DoorDash. It's essentially flat right now, but it's higher on the month, up about 11.5% this month. Tell us what you're doing with DoorDash.
So another one, but this is breaking out on the daily candle. So in a lot of these trades that I've been looking at is, we've seen the market react violently to the downside, violently to the upside. So, trying to pick these little areas in the middle is kind of tough. So I'm going to wait until DoorDash takes out those highs on the daily channel. And then I see a next leg up and more of a grinding type of move. I don't think Dash is going to move quite to the extent that that AMD is, not the same type of stocks. So I'm going to play this one with a calendar spread and not a vertical.
Okay, so talk to us about the levels in terms of the highs on the daily candle.
Yeah, so that's 126.37 is what I'm looking at. And so if we get above there, then I'm looking at the August 23rd versus September 6th, 134 calendar. And you should be able to buy that for about $1.50. I modeled that out. Obviously, our risk is whatever we paid for the spread. And I modeled it out that we can make about $1.80 on that. So on a calendar spread, you're getting about 1.2 to 1, which is a nice return to risk on a more, on a safer type of play.
Okay. Ben, talk us through the technicals for DoorDash. It has been, I mentioned it's a big winner this month, but it's also a big winner year to date, up about 25%, up 56% over the past 1 year. Do those levels make sense to you?
Yeah, I was trying to see if our levels kind of matched up here, but it's not so much they do dollar for dollar, but I think the sentiment here is very similar when you're taking a look at shares of Dash. They've been on the move higher. I wanted to begin first and foremost with a more granular look at price activity, and then as always kind of work our way up. But just you can see the conviction associated with this trade that we saw. It was last week into that weakness DoorDash had and was exhibiting some strength all the way up to 126. You can see no rejection of this upper level. Take a step back. You'll see again on the left side of your screens really where the high conviction came into play, and then you get this consolidation. That's acceptance. Simply put, as value gets formed at a higher level. But even within this pattern, as I like to point out, you're going to see it play out multiple times where you get, again, a big move up, sideways consolidation. So basically seeking value, establishing value, wash, rinse, repeat. Only two phases of price development. You're either in a vertical phase or you're in a horizontal. We are currently in that random horizontal phase on the 5-minute candle chart, balancing around 124, but a bullish pattern to say the least. Let's step away from the 5-minute candle chart, because speaking of a bullish pattern, that move back up above, what was it? I think it was 112, if I remember correctly. There it is. Yeah, not what the bulls wanted to see. Why do I say that, Caroline? Because take a look. We were balancing at lower and lower levels, so we were trending lower while we were establishing that range, talking May, June, July, around 112. The bears wanted to see it break down, form a new area of value at a lower level. We did. Same thing at 103. They wanted to see the staircase continue to downside, not reversal. And in fact, look what happens. This breach of 112, not what the bears wanted to see by any means. And the first attempt here now for the bulls to really regain composure and turn this thing around. Let's take a look at the longer term charts, moving away from the 5-minute, the 4-hour candle now into a daily. And you can see again the first real attempts to kind of turn things around. We've now taken out 2 or 3 areas that were established on the way down, but looking at this as a large area balance. Again, we've got a well-defined upper extreme, we'll call it 160, lower extreme around 40. Take a look, you can see right in the middle is that middle of the range, and we just touched off of that. That could provide a nice little trampoline.
I'm going to look for pullback, guys. I want to start looking for a pullback here. Let's look real quick. See, this is what I don't like. Like, I need to look real quick. Actually, you know what? This might not be a good idea. Because I don't want to give anything back.
But literally, they had like 10 open bars, serving like Grey Goose and Reserve, like top shelf stuff, and food, and like they built stages. There's a skate ramp. It was wild. And Top Golf was releasing their new club that anyone can go. So this new design they came up with, this new club where you can walk in there and smash balls. Okay, so it's promoting that. It's a thing. Yeah. And it was an invite only. This was all influencers and industry people, and it was sponsored by Visa and Cash App and Pepsi. So for your block party, you can't eat like liquor. No, there'll be no liquor, but we can have like things. It'd be cool. No one's ever done this for the automotive industry before. No one, in LA anyway. So we will become like the epicenter for car culture. So basically, DDB the melting pot. So the idea is like on a Sunday morning or a Friday or whatever day.
All right.
Drive up Angeles Crest. Where do you meet? DD first. Grab a coffee from a coffee shop. Grab some merch if you want. Check out, hang out. Big couches. It'll be a vibe. It won't be like a store where it's just come buy shit. It's like it's a vibe. Come hang out. Right? Be respectful. Chill. Check some of the cars. Race cars for you is giving us race cars. We have an LMP3 car. We're getting an Indy car. We'll have an F1 car there eventually. So you can see some cool shit.
As soon as I figure out if I end up making something happen here, which I'm just waiting on the opportunity to strike, I'll let you guys know. Until then, hit the like button, subscribe. If you have questions, if you want to give back to the stream, if you guys want any tickers, if you guys want to look at anything or do anything, let me know. It might start to happen now. Again, I made money on the Qs this morning. I don't want to give anything back, but let's see here. Can we get a pullback to VWAP? 452 is what I'm looking for. Just looking for a little pullback here. You gotta be kidding me. The second that I get up, it pulls back. You gotta be fucking shitting me. Guys, I literally got up for 1 second, just went right to the restroom. Let's look for a bounce back. You gotta be shitting me, you fucking asshole motherfucker. You gotta be shitting me. You gotta be shitting me. The very second that I fucking get up. What a dickhead. You gotta be kidding me. Oh my god, you asshole. This is literally happening right now. Unfucking believable. What a kid. You gotta be fucking kidding me, man. You gotta be kidding me. I told you guys to be careful. I'm not sure if this is Israel related or Middle East related or what. Don't get sucked into it just yet. Wait for the bounce back. Alright, wait for the bounce back. Can you believe that? I literally just told you guys that I was looking for a fucking short. 452s. There's nobody even here, I don't think. I don't even think there's anybody here. Is anybody here? Hello? Check my chat mic. Anybody home? Nope. Nobody here. Come back tomorrow. What the fuck? You fucking dickhead motherfucker. I swear to God. What a dickhead. Sorry for the language, but... like, guys, you can't make this up. You can't make this up. I literally get up for 1 second. The second that I get up, this thing starts. I just got done saying how I wanted to short this thing. We're underneath VWAP. It's getting pretty decent here. As we sell off like this is not cool. This is not cool. I knew it, man. These things, just be careful, guys. You're going to be paying a lot in premium. It's just a pullback. Holy shit. I told you guys. I told you that sell side volume was there to watch out. Gotta be fucking kidding me, you asshole motherfucker. Fucking asshole. Fuck you. What's up, man? I'm sorry to cuss. Oh my god, man. You gotta be kidding me. This is what it's gonna do. It went right back down to that support level right here at 450. Well, I tried, guys. I tried, but I can't even get up. I can't even get up to fucking just... I can't get up for 1 second. I just told you guys I was looking to get short and looking for that pullback like the time was now. And I get up and it fucking starts. It's all good. Let's look for this reversal here. Let's look for a reversal. I told you guys this morning that that volume this morning was a little worrisome. What is this? 446. They still want too much for that. They still want too much for that. Give me a 1 minute there. This is why we take our money. Yeah, I'm gonna try for a I don't hear anything for news, so it's not like I can say or verify anything right now. Like an attack, something.
The Dow futures down 225, Nasdaq futures down 22. Crude is up $1.38 at 78.
Let's look for bounce backs.
Natural gas up 3 cents at
$2.53, no.
Gold is up 24.20 at 24.9760. Bitcoin futures down 1,235 at 59,755.
I told you that sell-off this morning was a little worrisome with that volume. That's why I was a bit hesitant to go long. But again, in markets like this, you're going to have big up and big down moves. Bro, come on. Did anybody get the opportunity and was anybody here listening to this analysis up here at that wedge that we broke down from? I'm going to tell you right now, I got to be honest, I would put our calls up to anybody that's live on YouTube. I would. I would. I would. I would. We've been waiting for that pullback. We've been waiting for that pullback to VWAP. I can't even get up for 1 second. All right, so here's the problem now. It looks like we're underneath VWAP now and the 9 EMA. So I would look for that 450 150 area for a possible second entry if that's what you want to do. But if you want to watch it. Take notice to what time is it? It's 11:30. We could just consolidate, but I don't know. Where's the SPY? Give me the SPY here. QQQ. I gotta move all this stuff here. Come on, let's do it. Let's fucking hit this thing. We already made that support. Making that area support now. All right. I think you gotta watch for bounce backs to like 452. See if you reject there, because that'll be a potential breakout. That'll be a breakout, a failed breakout that you turn back into resistance. I can't believe it. I can't believe that. Okay, so maybe this is a really nice set up for a long position to catch a reversal, but you got to take your profits in front of that 452 level. You got to take your profits in front of it. In front of 452. Let's see. I want to see what happens here. All right, I want to see what happens up here, if we can reclaim VWAP or not. Oh, come on. So I'm just being patient. I'm just being patient.
It's actually not that unique. We've heard some chatter around this over the last couple of months here, but Wolfe Research is downgrading the stock to a peer perform from outperform without setting a price target on the shares. They do believe that the Apple's internal modem that they are developing right now is going to be a game changer and actually could take away from revenue from Qualcomm here, especially starting off in the Apple iPhone 18 series here. That's going to be selling outside of the United States. They're going to be utilizing, Apple will be utilizing their own in-house modems instead of utilizing Qualcomm's. And so that could be an immediate impact to not only just the top line, but their further earnings moving forward here. Now, once again, this is kind of something that has been talked about. Qualcomm has actually adjusted their forecast and has been doing so over the last year, anticipating this shift in market share here, and they're going to try to double down in other areas of their business. But once again, this is going to be a little bit of a headwind for them. That's why Wolfe Research is a little bit cautious. But seeing the shares down about 1.5%, it's not too surprising. It has been able to come off the lows. But once again, this is something that other research firms have been noting, and I think Wolfe Research is just kind of capitalizing on the fact that this could actually accelerate a little bit quicker than what the market has expected.
Yeah, certainly could hit the top line if that actually comes to fruition. I was taking a look. 65% of analysts still have a buy rating on shares. You said Wolfe Research doesn't have a price target. The median price target, though, is 210. It's currently trading around 162 right now. So the majority of analysts see quite a bit of upside from current levels. That all being said, and taking Wolfe Research's note into account, what would be your example trade for Qualcomm?
Yeah, well, if you do expect that the stock could continue to slide to the downside here after hitting some of its peaks about a month or 2 months ago, you could look at doing a bear put spread, looking at buying the 155, 145 put spread expiring on August 23rd, doing this for a debit of $2.40. So the max loss would be $240 and the max gain would be $760. And you would max out on this trade if the stock is actually below the 145 strike price at the time of expiration. That also brings a break-even point of $152.60. Once again, trying to take advantage of maybe some of the short-term weakness, short-term volatility that we've seen in the broader equity market, as well as what we've seen from pressures on semiconductor companies and technology companies. So this would be, once again, a downside move. You want to see the stock move around, let's say, $10 to $11 from where it's at right now.
Okay, Kevin Green, thanks for the trade and that breakdown. Appreciate it. Coming up next, it's time for our 360 round. We'll cover the latest in gold, with the commodity remaining range-bound since April. What could drive it higher? Our panel is standing by to break it down. Stay tuned.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network. Ethan! How's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. It's time for our 360 round. Let's bring in our panel for that. Alan Hibbard is precious metals alternative money specialist at goldsilver.com, and Kurt Nelson is founding partner, CEO of Summerhaven Investment Management. Alan, Kurt, great to have you both with us. Alan, let's start with you. I'd like to just touch upon the broader market to start, because what a difference a week makes. Today looks a lot different than last Monday. But given the volatility that we did see, do you think now is the time to be talking about safe haven investments?
Hi, Carolyn. Thank you for having me. Absolutely, yes. I think we should be talking about safe haven assets. So last week, a week ago today, we saw the VIX up over 65, and it's really only hit that level twice in its history since 1990. And that, of course, was during two crises, right? The 2008 global financial crisis and the COVID crisis of 2020. So we're up at crisis levels of volatility. And when we think about what is volatility, well, it's the most common way to quantify risk. There's all different types of risk in the system, and we could spend 10 minutes talking about what all those are. But really, that's where the volatility is coming from. And so, yes, it is time to talk about safe haven assets. And of course, the most popular safe haven in the world is gold. So I think that should be on everyone's mind right now.
All right, so Kurt, let's talk about some of those safe haven assets, including gold. What is your outlook for gold, given the run-up that we've already seen and kind of the more range-bound action that we've been seeing lately?
Yeah, hi, Carolyn. Great to be here today. I know that you mentioned that gold has been range-bound. That's true, but we're only talking about a few months since it broke out of its prior range. It was kind of stuck around $2,000 an ounce for almost 3 years. And it managed this year to break to all-time highs, and it's been consolidating just below $2,500 an ounce. I think there's a couple tailwinds to gold from this point, and suggests that a breakout above and through $2,500 an ounce is perhaps in gold's near future. And there's two main reasons to hold gold in the first place. One is as a risk-off kind of safe haven asset, and as you mentioned earlier on this call. Last week was extraordinary. We had the Nikkei fall 12% in a day. VIX screamed higher. Now, much of that has moderated since the kind of fireworks of Monday over the weekend a week ago. However, what it's shown is the volatility that's embedded in the system, the potential volatility, and that scares investors. Gold has often been used as a preservation of wealth. The second thing that I think is a competition for gold as a safe haven is dollars and dollar-based assets. Gold doesn't pay an interest rate, doesn't pay a dividend, and you pay storage costs and cash. In U.S. dollars, you earn interest on. Now, that wasn't true, a few years ago, but now you can earn 5% a year. But with the dovish kind of sentiment coming out of the Fed and from other economists advising the Fed, it suggests that we're going to see maybe as many as 3 rate cuts between now and the end of the year in the U.S. That reduces the opportunity cost of holding dollars, like, for example, holding a money market or treasuries versus gold, and it makes gold a little bit on the margin more attractive. I think both those things are very supportive of gold to break out of this recent range.
So, Kurt, sticking with you for just a second and building on that, are you saying that Fed interest rate cuts will be bullish for gold, and that's what's going to continue this run higher?
In the near term, yes. I think that we often see that when inflation is going higher, the initial reaction in the gold market is a concern that rates are going to move higher, cash is going to become more attractive, and dollars will become more attractive than gold. And remember that gold, like almost every commodity in the world, is priced in US dollars. So if you hold everything else equal and dollars increase in value, and different ways you can measure that, like the dollar index, gold price will go down because you can buy more gold with each dollar. So yes, I think interest rates are going to be a big factor in these short-term gyrations in the gold market. I think this fundamental use of gold as a risk-off asset, we saw its tremendous performance during the financial crisis in 08, 09. That was not true for most commodities. Most commodities are driven by other factors around supply and demand. We saw demand just get destroyed during the financial crisis. Supply was constant, so prices across most commodities and risky assets fell. That was not true for gold. It did a great job of preserving wealth during that event.
Okay, so Alan, I want to get your take on where gold is going, because you're obviously, you're bullish. You said we absolutely should be talking about these. So how much of a portfolio should be designated to gold? And if investors aren't already in, did they, miss the boat?
Yeah, great question. So, I mean, typically over the long term, allocations for gold range between 5 and 10%. Those are pretty common. And during those risk on periods, you're at the lower end of the spectrum, maybe only 5%. And during the risk off periods, you're up at the higher end. And I think right now, with all the volatility we've seen, all the uncertainty, all the different risk factors, it makes a lot of sense to be at the higher end of that 5 to 10% range. I've seen some investor portfolios much higher than that. My personal portfolio is 10% gold. So those are some common allocations. And is it too late? Well, I mean, you've got to ask yourself all these different risk factors we've seen. Wars, are the wars around the world in Europe and the Middle East and so forth, are they becoming more peaceful, or are they getting more violent? I think they're getting more violent. You look at assassination attempts and regime uncertainty in all size countries. Are they getting more peaceful, or are they getting more violent? They're getting more violent. You look at migrant crises. Are they under control, or are they getting out of control? They're out of control. There is so much uncertainty. And of course, all that translates into financial markets. There is so much uncertainty. The outlook for gold is extremely bullish. And if you look at some of the biggest buyers of gold, it's central banks. They were net sellers of gold for over 35 years. They've now become, over the last few years, net buyers. Why would central banks all of a sudden buy gold? To protect the stability of the financial system. It is not too late to buy gold. Investors should be doing the same thing that central banks are doing, building that rock, building that safe haven in their portfolio. 10% makes a lot of sense. It is not too early. There's a lot more coming.
All right, so Kurt, how do I buy gold? Should I go get some gold bars or invest in other ways?
I think buying, actual physical gold is attractive for some people. But realistically, it's not the most ideal way, I think, the most convenient way to purchase assets. There's a number of ETFs that are available that make this really easy and simple for investors, both to buy and sell. It gives you transparency, and it gives you regulation around the product that you're buying. I'd like to amplify this notion about central bank buying. That is a big reversal, general trend towards central banks buying rather than selling. And a factor you might consider is this geopolitical uncertainty and how it affects central banks. If you hold treasuries as a central bank reserve asset, you might think of that as an alternate safe haven to holding gold reserves at the central bank. However, if you happen to be a country like Russia with significant geopolitical tension with the United States, holding US dollar assets means that US regulators and US say government policymakers can seize those assets and actually make them not safe for the Russian central bank. Same thing in Europe. If you have euro-denominated assets, the European regulators may be able to seize those assets. If you hold physical gold in Russia, it's sort of immune from those geopolitical concerns. So I think that adds another kind of case for why gold is interesting and appealing to a number of different actors in the markets right now.
Really interesting insights there. Kurt Nelson, Summerhaven Investment Management, Alan Hibbard, goldsilver.com. Thank you both so much. And thank all of you for joining us on Trading 360. Stay tuned. Fast Market is next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network. Good afternoon, traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today, including discussions and option strategies and some earnings names. We'll cover Home Depot, which has traded relatively flat so far this year into their quarterly report, and Starbucks, which has fallen nearly 20% this year, despite the rally that we're seeing today as activist investors are circling the stock. And like Folio, break down consumer sentiment data on Holdings, which has rallied about 50% so far this year into their earnings. Now let's take a look at the major indices, which are mixed as we speak. We've seen some strength in the S&P 500, up 0.3%. Dow off about 32 points, slightly in the red. NASDAQ 100 up 0.5%, leading to the upside. And the Russell 2000 small caps down just over 0.75%. To help me break down the market action, let's bring in my co-host, Kevin Hinks. Kevin, we expected more choppiness after the volatility spike last week, and we're getting it today. Futures were just down 0.5% from their session highs about 10 minutes ago, and now we're seeing them rally back into positive territory.
About between 15 and 30 minutes into the trading day today, there was a pretty violent sell-off that didn't look like it was going to stop, and then halted on a dime and rallied back. So what does that tell you? Other than, traders from last week into this week are going to have whiplash collars on. If you see a guy walking around with a whiplash collar, he's probably trading the markets.
That's me.
Yeah. Now, that said, the number one theme there is these markets are going to stay choppy, and understand that and act accordingly because of what they're doing. So I just think rallies and sell-offs are tradable events, and this is a choppy market, and you have to understand the market you're in. Now, I'm with you on that. I thought when this market started selling off about 20, 30 minutes into the trading, I'm like, uh-oh.
Yeah.
Because they sold off hard and then rallied to up 0.5% on the NASDAQ. They're up 0.5% now. So it's been pretty resilient, but the choppiness remains, Tom.
Yeah, there was a report, Alex Coffey actually, who we're going to bring in here, said there was some news out of Fox Business that said Iran could attack Israel in less than 24 hours. Sources say, you know, who knows if that's founded at all. But let's bring in Alex Coffey, senior equity contributor here on the network. Alex, it seems like the choppiness is kind of conducive to the fact that it doesn't feel like anybody wants to stick their neck out. There's no depth or liquidity to markets right now, whether it's futures or equities in general.
Yeah, you talked about some of those geopolitical tensions that certainly have not resolved themselves. I think the bid in crude oil reflects that. Just to go to kind of illustrate that, if we were just looking at supply and demand for energy leading to, you know, an increase in the price of crude oil, you might see similar for some of the ags in terms of corn, beans, and wheat. We just got the WASDE in the last couple minutes. Initial reaction, despite all those different products being on their lows for the last year, all of them initial reaction was lower. So I haven't had a chance to go through the report. Not even sure that I really will dive that deep into it, but to me, if I see a reaction lower in an already oversold product, it's saying that the supply is much greater than the demand when it comes to those estimates. So doesn't lend a ton of credence to crude oil being up because demand is robust. I think crude oil is higher because of geopolitical tensions. Those reports drop. You saw the market move pretty sharply. But to your point, I think it is a thin market in the higher end of its recent range, volatility on the lower end of its recent range as maybe things got a little bit crazy a week ago. Things got overdone to the downside, overdone to the upside in volatility. But that doesn't mean just because we've rallied back now that it's over, it can get overdone the other way too. So I think this is, to Kevin's point, perhaps a more range-bound market, and we find ourselves in the upper end of that range at the moment.
Yeah, VIX down back below 20 level, near 19. Down another 6% after falling over 14% last Friday, Kev. But, you know, if you look at I think what's driving markets or the optimism in markets maybe has been earnings season. We got a 91% beat rate on EPS, according to FactSet, but the beat rate on revenue is only 59% out of all the S&P 500 companies that have reported so far. So I think earnings allowing the market to gain a little traction and bounce back relatively quickly?
Earnings, it's been a good earnings season. I think the problem with some of the names, remember, earnings beat is a good data point to look at. What did the stock do on the days that they beat earnings? Right? Because they seem to set the bar low. I'd like to know what's the percentage of stocks that rallied on their earnings event and sold off on their earnings event. Because I see everything through the prism of trading. I don't care what your numbers are. Is your stock going up or down when I'm trading it is what I care about.
Is the bar low going into earnings or is it high?
Do you set the bar low every quarter so you can beat it handily? Because, you beat and then you give a conservative guidance and the stock gets killed. Well, I don't care about your earnings per share if the stock's crashing. So
sorry guys, I ran to the
understand
store
what that
real
is
quick.
by earnings, but I'd like to see more data, like what did the stock do on your earnings release?
And
Because
we
you
ended up
guided
bouncing
poorly.
back. Okay.
I got some context for that. If you
Look
look at it sector
Watch
by
this level
sector,
here at 453.
these are aggregate
We're getting a
earnings
little volatile
surprises.
here.
There's only 3 that have had price disappointment. All 3 of them, though, do have positive price or earnings surprise. So,
why is the sound like this?
Thinks the technicals in this space are turning negative as well. So you've got Jeffrey's warning of fundamental slowdown, and then you have DeGraff talking about the technicals turning negative.
I think in this space, well, first of all, when Surratt buys something, I think it's always interesting. I like him walking through Workday. I think you really want to look at this space security specific because, for example, Workday, he sees an opportunity. I own Palantir. I own Microsoft. Those have done very well. I think to have this homogenous view on software isn't a great
Look for
place
high
to
a
be
day
right
to
now. I
hold.
think you want to pick your spots very specifically with individual names versus having like an overall sector
Sorry, I
weighting,
don't even
because you
have the
really
chat up
have,
or
if
anything.
once again you look at the Palantirs and the Microsofts
Just give me
versus
1
a
second.
Snowflake or Salesforce, it's like the haves and the
give me 1
have-nots,
second.
but they're all lumped in together. So I would be very security specific in this trade and wouldn't try to do a broad brushstroke in or out.
All right. So, Carrie, you want to, you want to use this as an opportunity to sort of reset the conversation as the week begins on mega caps, whether it's, Microsoft or some of these other names. I mentioned NVIDIA today is the standout. It was up about 5%. It's up about 4% now. We're about 2 weeks and 2 days away from NVIDIA's earnings report, which is widely viewed, I think, as the next great catalyst for these stocks. Jefferies today, I mentioned them once already, they said that Meta, your Meta, was the biggest winner post-earnings, that this is the stock to focus on more than any other right now. Does that make sense?
It makes sense to me. I mean, if you look at the mega caps and you think about how they behaved up until the beginning of July, and then what has happened since July, they all fell, and they've all tried to recover. Meta's recovery has been good. Apple, of course, has been phenomenal.
Meta's
really
and Apple's, by the way, since you point that out, I'm sorry, I don't mean to interrupt you. I'll throw it back to you in a second. Those declines from their recent highs, Meta's only down 5% from its recent high. The point you're making, Apple, just to put some numbers behind what you're talking about, and then I'll give it back. Apple down compared with an Amazon, for example, which is down 16.5%. So they've recovered better than some of these other names.
Of course, Apple hadn't gone up as much as some of them, so it had. It's from a lower base, so to speak. I think it's interesting that they're recovering. They're trying to get over their 50 or 100-day, 200-day. NVIDIA, how big is the appetite for these chips? And what we seem to understand, and it's really hard to get through to who is making money from the AI world other than NVIDIA, but Meta is ahead or feels ahead of the others. They've talked about how they're utilizing AI on their different platforms, whether it's Instagram or WhatsApp. And I believe that to be true, or we are expecting that Meta will be a recipient of AI benefit before some of the others. It's important for these stocks to stabilize technically over the next couple of months before we get into the fall, in order for them to follow through in the autumn and through the end of the year as outperformers without losing momentum. This market needs them to keep momentum because they represent so much of the market capitalization.
So, Sarat, you have this stock too. The reason why Jefferies looks at Meta of all the stocks that have reported, and again, NVIDIA is not for 2 weeks and 2 days, so we'll take that out of the conversation. Because they say they continue to hit the higher end of their guides. Their numbers moved higher post their print. All the while, their earnings multiple is the same as the S&P 500. So you have a higher guide and the same multiple.
Yes, and look, we own it. We cut it back, and I think it's a fundamentally really good company. And they've done very well with they're really using that data to make sure that you're getting the right target audience. I think the negative part on it, Scott, is because we don't know when Zuckerberg comes out and says, I'm going to do something else. And so you have this overhang of management in there, because we know that on certain calls where he'll just say, I'm going to spend now $10 billion doing something else.
Do you want them to, what's the something else? I mean, they seem to be fully in on, I mean, why do you even own the stock if that's your great concern? You're worried he's going to come out at any moment
because the stock's cheap. That, to your point, why is the stock so cheap? Because there's the always, hey, I'm going to go after something else, and I'm not just going to be focused on my business. If the stock had a higher multiple,
go, guys.
it would be because he kind of says, I'm not going to spend money where I'm not.
So I'm just going to let you guys know right now, I'm still in oil, and I'm still in energy. And it's looking like this is going to turn out okay. At least I'll be able to get back. I'll get that get back. You know what I mean? Let's get that get back. I think we should have room to 79.80. Let's go. Let me put out a limit order here. God damn, I paid so much more than I should over this. Holy cow. I'm going to be lucky, but because I've been doing so good on these other trades that these losers are like, I'm still in the green, and when they come back, it's like it's just, I can just see in my account, I'm like, damn, yeah, damn. So, this one is down, but again, you guys could have got it down here and had this monster move. Even if you just bought it on that down day just for a mean reversal, I think USO is going to be something I start to trade, you guys. For real. After watching this play out, like this, like energy and like USO is volatile, and these little ass moves, you know, don't get too blinded by the 72 to set like a $2 move on a $70 stock. It's actually not bad. You know what I'm saying?
Headlines from Reuters now. U.S. State Department deeply concerned by reports that Iran is planning to deliver hundreds of ballistic missiles to Russia. Such a move would represent a dramatic escalation.
Okay. What did you expect? What did you expect? You haven't tried to help solve the problem. You just tried to make the problem worse. You just tried to make the problem. What did you think was going to happen? Why would they put out a headline like that? Like, duh, what the fuck would happen? You start moving back east in NATO, taking Ukraine and shit. What the fuck do you think's going to happen, bro? Come on. Fucking retards. I swear. Like, why would they put out a headline like that? I need to tag Benzinga and say, please, next time, could you keep it to yourself that common sense statements like there's a war going on and they're going to get some help with some ballistic missiles and shit's going to go down. Like, obviously. Like, what would you expect? It to not happen? Like, come on. Like, let's be real. Oh, shit. What is this?
Just sell it. Which Dave am I today? Stocks only go up. Chicken season. Honey crispy chicken wrap. Oh, they have wraps. Crispy chicken poblano. This is gonna be a monster score. Whoever you are, make it just salad. This is a legit 9-3. Just sell it. Which Dave am I today? Stocks only go up. Chicken season. Honey crispy chicken wrap. Oh, they have wraps. Crispy chicken poblano. This is gonna be a monster score. Whoever you are, make it just salad. This is a legit 9-3. Just sell it. Which Dave am I today? Stocks only go up. Chicken season.
They're going to wait. They keep saying, oh, they could. Yeah, they could, but I think it's going to be next. Like, I feel like it's going to happen over a weekend or something. I don't know, though.
It's a lifeline for reducing cost of money for consumers, which helps the banks. You have huge exposure in the Russell, so I think when the market believes the cuts.
Oh, come on, man. Like,
maybe it's September. I think that's when the small cap call.
You understand it takes time to put things in place. So why wouldn't they stop it before it happens? Or like right as they go to start it, like have that shit, like, because we've already gotten some, we got some submarines that are already on the way with some GPS guided missiles and stuff so that we can, I guess exactly what I'm about to say, everything's got to get put into place. It's got to get sighted in, targeted, like GPS coordinates, like, so as they set these things up, why are we not just damn near out of this earth in the atmosphere, right? Pushing boundaries of space and sky. Just, you know, drop a couple hellfires on them. You know, without the bomb in it. You know what I'm saying? Just go with the, I mean, those things are so expensive. Those bombs are expensive. But, so, I don't know. Again, guys, listen, I've been on this earth for 30 years. This is why I'm voting for Trump. I didn't vote for him the first time. I didn't even vote the second time because I don't vote. The only person I voted for is Ron Paul. When I was a kid. It was years ago. But I will be voting for him again because I'm just so tired of this. I'm just so tired of politics. All of this could have just... We could still be in a position where things are kind of quiet. It's hard to say. You can't, go for the future. But as soon as Joe started going right back into his old ways, this is what you get. This is Bush. This is Obama. This is O'Biden. I said O'Biden. This is them. This is... I will say even Bush's dad and Bill Clinton. This is what you get. You get politicians who just... I don't know. I don't understand it. I really don't. I don't understand it. Like, there's always little things that are going to go on, but there's always been Desert Storm for Iraq. Just all of these things over and over. We had a little period in time where we had nothing. There was nothing. So when you have an agenda and you try to push it, this is what happens. When you think you're just going to be the world's police and tell other places what they can do and what they can't do. I just feel bad for people that fall for it. They're so stupid. They watch too much fucking TV. You watch way too much TV. All these people that are against Russia, they weren't saying shit when they were fighting right alongside of us for terrorism in the Middle East. I want to ask them where were they then? Where was that shit talking then? And this is not me sticking up for them. I'm just saying. I'm not going to get mad at a country when another country goes in to try to take one of their, alliances, right? That's like China coming over here, taking Mexico, and them two getting together. That's right along our borders. How do you think the United States would take that? They wouldn't like it very much, now would they? China goes to take Taiwan. I don't know. That's really irrelevant. I just think you putting your nose back in old business, it's not ironic. Your son is on a board of an energy company based out of Ukraine. You find somebody to replace the old leader and you start making relationships, but then you continuously say, no, we're not making a relationship with you. Like, you're creating the divergence. Alright, you're creating that divergence. And guess what? They think you all gonna pay for it. You guys can pay for it. I'm not paying for that. I'm not paying for it. Alright, let me move all this shit here. So, this is what happens, right? People get killed. And day after day, you hear him say how he wants to solve the one war, but he don't want to solve this one. I wonder why. I thought they were for equality and for doing what's right, right? There's men and women, teenagers, young, all getting their heads blown off, their limbs blown off. Kids getting killed. Kids getting killed. But we want to solve the one war, but we don't want to solve the other. Like, just take a look into that type of... Just think about the psychology of that, is what I'm saying. You're okay with with these other people dying because you have a personal biases, you have a personal little beef with the guy over there in Russia. So you're okay with that war, but you want to solve the other war because these retarded ass college kids want to come out acting like fucking retards because they have no life, they don't even know what they want. Because they fucking, excuse my French, but they don't come out the womb half decent looking and they're upset at the world because they're ugly and they think they just got to be a sheep and follow what everybody else does. So, I don't know. It's just crazy. I don't know why the media or anybody hasn't even said anything. Like, why do you keep saying you want to solve this Israel war, but you have not once said you want to figure out a way to solve this Ukraine and Russia deal, and like come to an agreement? And again, this is taxpayers' dollars. This is energy. This is them. If they can figure out a way to not be able to charge you and everyone else and myself find ways to, because this is what they're doing. They're finding ways to charge you more money. Crypto. They lowered the threshold of a transfer to $600 that the IRS is going to come knocking on your door asking you to pay taxes on it. Like, what are we coming to? Like how is everybody okay with this? All right? I don't understand why everybody is okay with the ATF thinking they're going to go apply laws and become lawmakers to try and get rid of some triggers in different parts to guns that they wanted to ban. Thank God the Supreme Court turned it down. But if they fill those Supreme Court seats up, the Supreme Court's not going to turn that down. Right? That's big government. That right there is big government. Giving IRS agents guns. Having the ATF thinking that they're lawmakers and trying to pass laws. Like, what the fuck? I don't get it. Like, anybody that can stick up for Obama, Biden. Like, and the thing that gets me, it's so funny, is that they think, like, people were so happy, this, that, and the third. Like the idea that they can give you the right to get married, whether you're gay or a lesbian. It's just the idea of that. It's just funny. It just shows you how narcissistic they are, and thinking that they are above everyone, that they hold that power to give you, right? It should not be up to them. It's not up to them to be able to give or take. It's just crazy, man. It's just really fucking crazy that anybody can seriously put in a vote for Joe Biden and or Kamala Harris or anybody of the sort and think that it's okay. And they always say to these billionaires, pay their fair share. What is fair share? It sounds to me like you want them to pay more, and it actually isn't fair. Right? Like, because you as a little person has not created a business or even attempted to build a business and really start a company and a corporation and really try to get some cash flow up under that ass. Oh, it's gotta be fair. How about you worry about yourself and study those corporations and start doing what they're doing? How about that? And the government's like, yeah, fair share. We're right there with you. Fair share. Yeah, give us that money that we didn't deserve and we didn't earn ourselves. Right? Yeah, we're gonna start this war over here, and we're gonna just clean you all motherfuckers out. We're gonna charge you more on energy. You're gonna have, which I'm not gonna pull in rates because rates have nothing to do with the government, but energy policy and energy, absolutely. It's just funny. It's just funny, man. And they're right along with it. Oh, you talking about giving us more money? Oh, hell yeah. Hell yeah. Let's do it. Let's do it. Whatever we can do to raise taxes. Fucking, like, people are so fucking retarded. They're fucking idiots. They really are. And what's crazy is when they say they want to raise capital gains tax, but we're going to raise the capital gains tax. We're going to raise corporate tax, and it's not going to affect you. They're going to pay more. Well, like, the idea, once again, we're back to the idea of why is it okay, and where does this government think that they have the right to demonize and separate success versus not success, or just an average person who hasn't tried to expand their life and build a team and build a business? I mean, it's just so funny. It's so funny, this fair share. Holy shit. Trust me. If you saw what's fair, or if you saw what actually goes out into the government in so many different aspects of a business, you're going to be like, damn, actually the business is getting taxed like 5-6 times. They only tax you once. All right? They only tax you once, maybe on your retirement too. Maybe there's 2 right there. If you own a home, okay, you're going to get paid. You see how the government breaks it down? So a fair share, like, that doesn't make any sense. Because at the end of the day, if a business has made money and they have some expenses that they can write off, right, that's going to be used to their business. So it's either it goes to the government or it goes to the economy. And that's the sole purpose, is that it goes back into the economy. It always will. This idea that people think that these businesses will just make money and not pay anything, it's just ridiculous. And this is why you also don't have, it's not the whole reason, but, it's going to come to a point where when it gets too aggressive, they're just going to leave. And they're not going to be incorporated from here. They will figure out a way to go to Puerto Rico, right? The Bahamas, wherever. And they'll figure it out. And they'll do what they need to do. All right, and that's the same business and that's the same businesses that has provided the innovation and has spent billions of dollars to help continue to help us be number one in the aspect of innovation in our military. So it's not the government, it's not the government, but it's just really funny. There's just so much. Like I forget. See, I wish I could think of what it was, because this weekend, this person was on TV talking about fair share, this, that, and the third. But then, I can't remember what she said. But in the same sentence, she was contradicting herself, and I'm like, explain to me what is fair share. Like that I don't understand. I don't even know what the fuck that means. Trust me, the government gonna go after them and get their money. If they don't, once again, the difference between Biden and a government that should act as a government is not force the hand of the business to force it to the government and pretty much take out the, buying, putting the money back into the economy, whether it's buying different things for your businesses. They want to force feed it into their hands so that they can continue to fucking do this stupid shit with Ukraine and fucking Russia. This shit's been going on since Obama. And personally, I'm tired of it. And I said this over the weekend, was that I feel like they're getting... they're okay with letting a lot of migrants in and a lot of people that aren't from here, because it feels like, at least to me... Now, some people are just, in my opinion, watch too much TV and have an emotional bias towards a person instead of looking at the shit for what it is. And it's the majority of people over the age of 25, 28, that 30 area, are tired of government or big government. Because this is what we've had our whole lives. That's why Trump got elected the first time. And I think that they know this, right? They know that category from 25, maybe 25 to 30, they're done. They're so tired of this government, really, first off, just lying to everyone. Everybody that sat here and said that Biden was okay, I've told you guys, Biden hasn't been okay. Anytime I hear somebody say that he is fine or whatever, just shows me that they have never been around him in real life, in the flesh. They haven't. They haven't sat at an event. Either they haven't or they're lying. It's one of the two. And you can't tell me fair share when we talk about equal rights and a law system, when again we go back to two gay motherfuckers having sex in the White House or in the House, in the Senate, wherever, on federal grounds. Nothing happened to them. Number two, you had two separate occasions of cocaine found on the White House grounds, in the White House or wherever the hell it was. It was the secretary, whatever building it was, doesn't matter. It was on federal grounds. Guess what? Nobody got in trouble then. So where's that fair talk now? Right? That's what I'm talking about. Shit is so ass backwards. Right? I'm going to get off of it, but I'm going to tell you right now, you should feel bad, and you should really look deep down into yourself, into what it is and why anybody would vote for Biden and or Kamala. They've sat there and lied to you. You see high energy prices. They have been in office for 12 years. Shit should be fine. They should. If it takes you longer than 12 years to do what you want to do, you're lying. You're just flat out lying, and it just shows year after year that you're a fucking failure. You're a failure. you want to have big government so banks and other businesses can't get too big because they might fail. Guess what? It's a free market. I was actually thinking about this in the shower. It's so funny. I was wondering if we could get a presidency or somebody to come in and give us a 2-tier banking system, right? Because back before 2008, you could have almost unlimited margin. There was a lot of trading. There were a lot of things going on where people were able to make money. And I always wonder if we could go back to having that plus a regulated system, and have that other side to the banking system where people, are warned if they have a bank account here, hey, this is what they do. You may want to just go over here, and kind of still have access to that part of some of the things that we had, and kind of like start to like undo, not necessarily undo the Dodd-Frank Act, but I guess, see, it comes with like, I don't know, it's, I don't know, because then it could cause problems, but still, like, that's a free market, I don't know. It was just something I was thinking about. It was something I was thinking about. If we could I was always wondering if we could just, like, if they could go to, like, a 2 different type of risk banking system, because it could open up a ton of opportunity for people that don't have it, right? I don't know. But things got to be fair, right? Things got to be fair, right? Like, things got to be fair. Like, people that aren't over PDT have to sit underneath that damn PDT rule, right? But things got to be fair and equal. We want an equal system. But PDT, it's fucking hilarious. These people are just doped into, like, the most idiotic. I forget, didn't Kamala say she wants to do a permanent gun buyback or something? They announced assault weapons ban. I don't even know what the fucking assault. Can somebody tell me what an assault weapon ban is? Like, look. Kamala once backed mandatory assault weapons buyback. Not anymore. Not anymore. Just let me get your vote. And once I get your vote, I'm actually going to go back and change my mind. Here's the thing. Why? Listen, this is a personal, this is a personal ideology of her. So, I guess this could go to the Supreme Court, because this is where the law part of it should come into government, that you cannot, and should not, or you would, things would happen if you put your own personal beliefs and personal decisions upon everyone else as a government. None of this should be here. This should be, like, this is not where they're focused. These are not the things that they should be doing at all. Just because just because less than 1% have no responsibility for firearms does not mean the 99.9% of people don't. Like, the prime example, the fact that you brought a rapper from Migos on stage and he's only upset because his mans was out hanging out on the street where they don't have respect for firearms. Now we need gun control when you made your living off of that. Talking about cocaine, hustling, trap house, guns, gang banging, this, that, and the third. And now you want to go crying to the prosecutor and the police What a fucking sorry dirtbag, right? To make millions off of that same shit, like, it's just funny. But still, it goes to the point. Less than 1% are at fault for these type of things here. Why? What is the sole purpose that they would do this? Because they do not think you are responsible, and they think that it is their job, number two, to think that they can solve every single problem that is. That's not their job. They're not this idea that you can solve, and or even just the thought process that it's up to the government to solve every single issue is not how it's not why government was built in the first place. Right? It was for trade, it was for businesses, it was to get a little bit of some guidelines with properties and all of the things that can get where there's law. But this is just a personal opinion that they just want to get rid of it because they don't want you to have it. It should not be up to them or any other president. It's a Second Amendment. You lose that right by breaking laws and becoming a felon, or if you do something stupid and you get in trouble, that's how you lose your right to have a gun. Right? It should not be, we're going to go get rid of all of them because less than 1% don't respect them, and because they harm other people, we got to take it away from everybody because that's going to stop the violence. That's going to stop everything. When it all circles back down to why they're killing each other in the first place, and that's because of the war on drugs. Because you're forcing drugs and ingredients, really, into the hands of people that do stupid shit. You know what I'm saying? So, like, I just hate a government that has a personal opinion getting placed onto it. It's just, I don't know. I don't trust them. I don't trust them at all. I don't trust them. She's a dirtbag. And so is Biden. They lied to everybody. And they make up all these things. It's okay for Donald Trump to be indicted and they find a judge. But yet we still have not seen any charges or a federal... Pretty much somebody be given a felon, right, to the person or the two people having gay butt sex on the federal grounds, whether it was the Senate, the House, wherever it was, and they recorded it, so you have the proof, and then the cocaine that was found. So they should never be able to own a gun or vote or be able to step foot back on federal grounds. So where's the all the stuff that you say, Joe, where, justice should be served. No one is above the law, remember? Well, it sounds like that they are. Sounds like they are. And I can't, I don't know. You know how many people, how many men and women and kids Obama has helped kill because he wanted to be in these fucking Midwest. He wanted to be in Ukraine and in the Middle East and all these things. Like, we got Obama. We got Saddam Hussein. Like, it's just so funny because all the things that were, right? All the things that were, they were because we got a person that's not a politic and things calm down are starting to come back. Right? It's just proof that these are what politics do. This is what they bring. Higher taxes for you guys and everyone else to pay for war, sticking their nose in other businesses that they don't even belong in. Okay? I get you want to have alliances and stuff like that. Cool, great, grand, wonderful. We do business around the world. I get being in certain places to make sure products and there's an order flow for shipment and nothing stupid's going on. Get it. But to think that you're just going to buddy up with like Ukraine and think that, you're going to force your hand and start forcing a NATO alliance into Russia and say, no, Russia, you can't come join, or there is no agreement, and don't think that there's going to be repercussions or some type of retaliation is just fucking stupid. People are already dealing with high inflation. People are already dealing with higher rates. People are dealing with higher energy costs. Why would you decide to do stupid shit like that on account of the people? You couldn't wait until things calm down? Like that's the shit that's the point that I'm getting at. You know, they have failed you. They have failed you. They failed I. They have. All right. So USO, we broke above this level here, guys. Keep an eye out for energy here. This thing is just on a runway, on a one-way ticket. This thing's on a one-way ticket here. Let's see. So we got above there. Let's look for a push into 80. Let's go, man. Let's go. Bro, these things, I'm going to, like, part of me kind of wants to hold because I feel like I'm just like that TLT, how I got in early. It feels like we might, man, this is such a big run here. We might end up getting this green. Like, we might be able to take this thing all the way back from being dead and back into the money. Just, you got to understand, if you do try to trade USO, understand that you need to know when future contracts end. You need to know that you know, there's a couple things you need to know. Just be careful. If things can go south really bad. All right. Yes, today we came in with a gap and go. So, I wonder what's going to happen here if, again, if something happens. Let's look at LMT real quick. Start looking at some of these defensive names. I got to put my watch back real quick. I'll be right back, guys. So LMT's breaking out. This was one that was on the watch list from this morning. I'm not sure what happened this morning. There was like nobody was trading it. It wasn't coming up, at least on my charts. Looks like we're rejecting there. Looks like we're pulling back. Because this is an all-time high here, I'm pretty sure. Close to it. You're coming into the all-time highs. I want to see if we reject up there or not. Doesn't have volume, so I don't assume that it's going to break out or anything. There's also news with gold too. There's also news with gold. I saw it over the weekend. I guess some Africa guy is like not letting any gold go out. This could have a real impact, guys. This could have a real impact on gold. Now I know over the years there's already been a shit ton. It may not have that much of an effect, but at least for their country, they could very well help their country out a lot. It's just they have to know what to do with it. And they still have to be innovative. Like at the end of the day, energy and gold, they're cool. They can provide you with some money, but what really does it is the businesses, right? Having big business is really what can propel a country, and that's why we're still on top. And we'll actually get that this week. So if you don't know, I'm going to teach you guys something right here, right now. All right. Some of you guys may know because you went to school. I didn't learn this stuff in school, though. All right. I didn't learn this stuff in school. So and I told you guys yesterday, where is it? Imports and exports. Okay. Imports and exports, we're going to get, when is this? Wednesday, I think. I thought it was Tuesday. Exports. What? Retail sales and import. Oh shit. So we're gonna find out if we're running a deficit or a surplus. All right. Right here with this import and export prices, we'll be able to get our balance of trade.
Zelensky said Ukraine controls districts in Russia's Kursk region from where Russia launched attacks on Sumy region. Operation in Russia's Kursk region is question of Ukraine's security.
So I'm interested to see that. It's going to be an interesting week. It's going to be an interesting week. So gold, energy, I think. Let's go look at the news really quick. Again, I got to put my watch back, so if you guys could just give me 1 second. But if you guys don't know about this gold news, I think it's, I don't know if it's somebody from, I don't know if it's like in Africa, like if it's the governor of Africa or, let's see here, hold on. But it's important to know because this could have an effect for the next rip higher. It's important to know this. Let me see here. Okay, no fucking Olympics. Safe. Come on, man. Africa gold news. I think it's Africa. I think. So what they did was they said that they would not let any export or any export out of the country. South. Oh my God. How could I find this? How is this not? Like, of course Google is going to go right to the fucking Olympics. Like, let's see here. Here, let me do this. This should have it. This should have it. This should have it. I could go to Yahoo.
CING, Singulate, shares moving here up about 24% now. Charlie India November Golf, just off the highs.
What's the company behind about Asian broadband? What would you guys think if I got me a gold gilt? I mean, not like that, but
E190-E2 jet order from Virgin Australia. That's Echo Romeo Juliet.
well, if you guys didn't see it, I'm not sure exactly where I'm going to find this at, but how is nobody posting this shit? This shiz, dude. I don't know. There's here. You know what? Let's go here, and then we'll go to here. No, not hotless. What's the news? What's the word? What's the word? What's the word? What's the word? No. I'm sorry. I do apologize. How this is not coming up is beyond me. I don't understand. I don't understand. Or GDX. I could probably type in GDX. So anyway, I think it was Africa, guys. Don't quote me, but there's some. One of them said that they're like banning exports or something of that nature, and yeah, so that could have an effect. Oh my God. Stolen from Africa is the Bank of England gold vault. The vault is hidden demon blah 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 blah. Okay. Don't care. Alright, really trying to get out of South here. I don't blame them. Okay, so Goldfields to buy, hold on, Goldfields really trying to get out of South Africa. Here, you know what I could do? If that's where it was. Let me make sure I'm correct here. As China scrambles, Zimbabwe's lithium small miners are left behind. So why is
$3 billion sale of Dutch salt and chemicals produced in Nobia.
now,
That's
look,
Charlie
they're
Bell
talking
Capital
about the same
Financial
stuff. Oh, so here it is. Here it is. So Ibrahim Traoré issues a ban on gold exports. So here, I'm gonna go put my watch back in the box real quick, and we can all. Oh hell no, dude. Look, I'm gonna cheat code this shit, just like everything else, bro. Cheat code everything. Cheat code your life, alright? Cheat code your life.
Did you know that many African nations with significant gold reserves export nearly all their gold? Essentially, foreign companies, predominantly from Western countries, come to these African nations, mine the gold, and transport it to their own countries. In return, only a small fraction of the value is paid to the host countries, rather than sharing profits or providing pure gold. This exploitation is a major factor in the economic instability faced by many African nations. However, Burkina Faso's president, Ibrahim Traoré, has taken a stand against these exploitative practices. Recently, he implemented a policy banning all gold exports. Instead, Burkina Faso will retain this gold and use it to support its currency. This move aims to make Burkina Faso's currency unique, as it will be backed by gold, potentially increasing its value significantly. But how has President Traoré managed to enforce this export ban, and what has been the Western reaction to the upheaval in gold markets? In this video, we will explore Ibrahim Traoré. The official announcement from the government reveals that President Traoré inaugurated the Treasury Deposit Bank, BDT, on Friday, August 2, 2024, at its headquarters located within the public treasury in Kuluba. This event marks more than just the establishment of a new bank. It represents a significant move towards reclaiming the nation's financial independence. The BDT aims to offer accessible banking services to all citizens, with a network that spans regional, provincial, and departmental treasuries to ensure widespread availability. As a public financial entity, the BDT will serve a diverse clientele, including public institutions, state-owned enterprises, local authorities, international organizations, private businesses, NGOs,
right there's your
and
target,
individuals.
right there.
The bank's
Watch
core
VWAP
mission is to
at
oversee the
451.
banking operations of the public treasury, providing services such as account management, resource collection, and transaction processing. Moreover, the BDT will implement digital payment solutions and develop new banking services to adapt to the changing needs of its customers. The creation of the Treasury Deposit Bank marks a pivotal moment for Burkina Faso in its pursuit of full monetary independence. Historically, Francophone nations like Burkina Faso have lacked true central banks, instead depending on institutions like the Central Bank of West African states, which are often viewed as extensions of the Bank of France. This setup has enabled European nations, which do not have their own gold resources, to amass substantial gold reserves that are largely extracted from African countries. President Ibrahim Traoré is acutely aware of this exploitation, where foreign firms extract significant amounts of gold from Burkina Faso, while the country reaps minimal benefits. In response, Traoré has taken firm measures by implementing a ban on gold exports and reclaiming control over the nation's resources. Under his leadership, the military junta has halted the issuance of export permits for artisanal and semi-mechanized gold operations and other precious commodities, effective immediately. In practical terms, this means that gold mined within Burkina Faso will no longer leave its borders. Ibrahim Traoré has stated that this suspension is intended to clean up the sector and improve the organization of the marketing of gold and other valuable resources. Here's a reminder to like and share this video and subscribe to our channel for more content on Africa's geopolitics, economy, and evolving landscape. Now, let's dive into the details. Burkina Faso currently mines approximately 10 to 30 tons of gold through artisanal methods. Going forward, the country will retain this gold, in addition to the gold extracted by foreign companies. President Ibrahim Traoré is clearly committed to taking decisive action without delay. In the Bakol du Muhin region in northwest Burkina Faso, 43 gold mining sites have been closed immediately due to security concerns. But the changes go beyond just a ban. The junta-led government of Burkina Faso has achieved a major milestone with the inauguration of the country's first gold refinery.
It's time. It is time. Wait, or is it past 12? It is. It's 1 o'clock. All right. Let's go. Oh,
this is madness!
This is madness. Well, that's not going to happen. Sorry, guys. Did anybody here take that short on LUMN today? I think there was someone from last week that was still in it. From what at least from what they stated. I know somebody, I thought somebody asked me if it was going to break 5, and I said, I would hope it would, but, it should. I think it could, but either way, nice job. Especially if I think they went out to the end of the month, or if not, or even like went into September, which is good, giving yourself time. But it's here's what I need to do better too, right? If you write this stuff down or have a way to have it in front of you, like days that you use weeklies, like choosing to trade a weekly.
Biden spoke to leaders of France, Germany, Italy, and the UK to discuss Middle East and Gaza ceasefire.
Derp. Is that how that phone call went? Derp. Joe, over here. Nope, that's the wrong. Nope, that's that's the office. That's not the right. Joe, come. Give him the ice cream. Give him the ice cream. All right. Anyway, so I forget what I was saying after that. That was ridiculous. That was ridiculous. I forget where I was. All right. Okay, so Roblox got a pop higher. I was actually watching this area. I was actually watching, 2 different areas for some of these watch lists that I gave you guys yesterday. And that's why I was a little nervous about trying to short Roblox, because it was like here this was the area that I was like, okay, if we can't get back up here, then it just felt like, if you look at the daily chart, it just felt like you were trying to short the low. You know what I mean? So Oh, I don't have the moving averages on. What happened to my moving averages? That's so weird. That's so weird. Like everything else except the top two, like the 15-minute even has the 20-day, 50-day, and 100 and 50-day, 100-day, and 200-day.
There are two stocks in particular in Magnificent Seven land that were the best performers. Over the last week, it is NVDA up roughly 9% and Meta Platforms.
Let's go look at NVIDIA.
Up 8%. Meanwhile, the Mag 7 with the worst relative performance is Tesla, which has lost about 1% over the course of the last.
You know, I am actually wondering if Tesla could get a breakout, and if it does it overnight. Dude, what is going on with my charts? I don't understand.
But overall, KeyCorp benefiting from some of that minority investment coming from Scotiabank. We'll see whether or not that spurs a little bit more activity in the other smaller mid-sized regional lenders. Kelly, I'll send things back over to you.
Very curious to see if that's the case down banks. My next guest says when it comes to these markets.
There was something I looked at this weekend that it had. It might have been Meta. And I kind of want to like start relating this. Yeah, right here, Meta. Meta. So you can see I had this area down here at 480, 479.50, 480, and you'll see how we broke out. You know, you rallied, kind of just consolidated, right? Held the consolidation. It took off out of that level. Then 2 days later, comes in with a gap up, and then it just sells off all the way back down to retest that level. But it does it after hours, and then it comes in with a huge gap up. So it's like,
What's more significant, the fact that policy is still tight, or the fact that they're embarking? Does the yen volatility last week say to you, when you say expect the unexpected, that the cuts aren't some panacea? You know, are you seeing them as a sort of catalyst and a trigger in a positive way, or something to kind of be on the watch out?
Seen a report from Nikkei that Zeekr to roll out, ticker ZK, Zulu Kilo. Zeekr to roll out high-end EVs in Japan next year, including model that sells for over $60,000 in China, according to an executive. That's ticker ZK, Zulu Kilo.
So we're dealing with a lot of issues, I think, that still emanate from that period. And so that's where I get to, like higher inflation, structurally higher inflation. And we've sort of called it generationally higher inflation. And what I mean by that is, in the past 20 years, 15 plus or so, that if you have very low inflation, Fed funds rate very low, you had a good productivity. And what we see today, in our opinion, is a commodity cycle that's a little different, right? It's a little more uncertain, and you see, I think, structurally higher labor costs. And so those two things to us are going to cause inflation to remain higher, which means that has to thread the needle.
And we should talk about your stock picks, because that's where the rubber hits the road. But I just wonder if the data the last couple weeks or months is pointing toward, hey, maybe it can be more disinflationary than we thought. You look at commodity prices, maybe China's a big part of the story. I mean, even there, they were supposed to be behind the structurally higher labor costs, and you're like, I'm not so sure. So, but either, I mean, do you think the names that some of your favorites, well, I mean, just your portfolio have to be positioned for that thesis to be the case, or can these stocks work either way?
I think you have, like I said, very restrictive policy globally. So I think reducing that a little bit is going to help.
I want to know where NVIDIA thinks it's going. Like, sure, it's really, you know, connected with the 20-day, but
And we would also barbell this with some other ideas as well, because we think it's going to be very volatile.
You mentioned one of the.
how can I do this? What could I do here?
Which is around, if you wanted to get defensive, what would that look like? I mean, should you be in staples, for instance, when there's some disinflationary risk with packaged goods? Should you be in utilities? But wait, then do you want to be kind of riding the tails of the AI innovation for better or for worse there?
Yes, so we've been writing about this for a while. We're actually far more interested in utilities here. And we see here, there's going to be an inflection in demand. We're on the industry, whether it be data center related. It's, you know, we had really flat electricity demand for quite a long time because of energy efficiency. So we're very positive on sort of the demand underlying current for utilities. We think that's coming. And all the investment that has to happen for that to occur is also very interesting. And that's what we see in the market. We're seeing people really invest in industrial.
Let's see. No. Okay.
But in our opinion, Staples
All right.
challenged here relative to utility. So I'd rather own a utility.
That's not happening here. Man, that was a big trade this morning that I missed out on. I didn't miss it. I obviously took it, but it's just a prime example of, you know, me personally as a person and knowing myself. I need to get my entries, like, as best as I can because I won't feel too comfortable. It's not that I won't feel comfortable. It's just I don't know. I can't explain it, I guess.
For significant Iran attack on Israel.
Let's go look. Let's go see, guys. Let's go look and see if we have what's going on here with this Iran news and stuff. Hold on 1 second here.
precipice of rate cuts in the US, some of those capital flows can start to reverse, and that can be a boon for emerging market policymakers.
Yeah, so they always, with emerging markets, it's a little bit of a boom and bust type of cycle. Which ones now do you think you could own and kind of experience some exciting returns? Well, maybe exciting, the right kind of exciting, not the wrong kind.
So when we look across various emerging market middle-income countries, we think that there are a certain subset of countries where the
right on.
This is my favorite guy to work with.
Take a look at the city of Ismailia inside Egypt, located right on the Suez Canal. This is a location where an organization called the Muslim Brotherhood first originated in 1928. It was founded by a teacher named Hassan al-Banna as a response to the poverty seen in Arab countries during the early 20th century. They denounced Western values like secularism and preached a return to traditional Islamic principles. The Brotherhood advocates to establish a government that would implement Islamic Sharia law. They established a network of schools, hospitals, businesses, and mosques throughout the 1940s with the goal of alleviating people's poor living conditions that they blamed on British colonialism. So, how did this Egyptian organization, over 100 miles away from Palestine, eventually split into an armed faction known as Hamas? And how did that group eventually come to rule the Gaza Strip? During the 1940s, the Muslim Brotherhood expanded across Egypt's Sinai Peninsula, bordering Israel and Gaza. The Brotherhood opposed the UN's partition of Palestine, so when the Arab-Israeli War broke out in 1948, 10,000 of their members volunteered to fight against Israel. In the aftermath of the Arab-Israeli War, throughout the 1950s, the Muslim Brotherhood continued their resistance against Israel through various means, including labor strikes, protests, and diplomatic lobbying efforts. Between 1959 and 1967, Egypt then occupied and controlled Gaza, which made it easier for the Egyptian-based Brotherhood to set up roots and create lasting ties there. In 1967, the Israeli and Egyptian military fought another war, and as a result, Israel occupied Palestine's Gaza and the West Bank. This increased tensions between Israel and the people living in Gaza. Then, in 1967, a Palestinian cleric named Sheikh Ahmed Yassin helped establish an Islamic charity organization called Mujama al-Islamiyah as an offshoot of the Muslim Brotherhood. This group is often cited as the precursor to Hamas. But where did the founder, Yassin, come from? He was a refugee of the Arab-Israeli War. When he was about 12, he had a sporting accident that left him wheelchair-bound. And so he decided to devote his life to Islamic scholarship and studied at a university in Cairo, Egypt. Yassin's charity organization officially registered with the Israeli government in 1978 as a non-profit, non-government organization. According to this congressional research report, the Israeli government approved licenses for the Mujama charity to operate as a provider of social services, establish schools, and build mosques. For example, under this authorization, they built the Islamic University in Gaza. While Israel ruled Gaza during the 1970s, they loosened previous restrictions on Islamic organizations. They aimed to allow peaceful religious organizations to grow. This change in policy allowed the Mujama organization to be able to build goodwill and develop a network of local institutions aimed at helping the people of Gaza. Originally, Mujama was best known for building medical centers and offering welfare services. The Israeli government showed indifference to this organization throughout the 1970s and early 1980s, at a time when Israel occupied and ran Gaza. With the benefit of hindsight, we know Mujama eventually becomes Hamas, but at the time, it was just a peaceful religious charity. It's possible Israel was hoping to promote a more moderate, non-violent counterbalance to the secular Palestinian Liberation Organization, because the PLO were locked in a violent armed resistance against Israel at the time. But when did Mujama split into Hamas? There was some evidence to suggest that Mujama charity had started to get involved in armed resistance by 1984, because that's the year when Israeli soldiers raided one of their mosques and claimed to have found a cache of weapons. The leader of the group, Sheikh Yassin, was arrested for stockpiling these arms and munitions. By the late 1980s, the Mujama charity controlled 40% of the mosques in Gaza. Officially, all signs appeared to show that the Mujama charity was still a peaceful group. But that would soon change. With Palestinian territories split between the Gaza Strip and West Bank, unrest and growing resentment over Israeli occupation broke out 2 years later in 1987, during a massive wave of riots and protests called the First Intifada, which means uprising. On December 10, 1987, an Israeli army truck crashed into a car at a Gaza checkpoint, killing 4 Palestinian workers. This is often cited as the catalyst that sparked protests and riots of the First Intifada. It was a full-on revolt against the Israeli occupation in the West Bank and the Gaza Strip. According to this paper written in 1993, for the Journal of Palestinian Studies, 6 members of the Muslim Brotherhood met at Sheikh Yassin's house and wanted to join the reaction. But the Muslim Brotherhood and the Mujama charity had chosen to not violently resist Israel. This is when they're said to have co-founded the Islamic resistance movement as an offshoot from Yassin's Mujama charity. This move was potentially a step taken as a way to separate their actions from other organizations.
I'm not sure if
the acronym for the group that they created in Arabic was HAMAS, which also meant zeal or intense enthusiasm, passion, or fervor for a cause. Although the name wouldn't officially be used until January 1988, when they published their charter outlining their reason for existing. They called for an armed resistance to establish a Palestinian state and the destruction of Israel. Hamas envisioned a Palestinian state that would cover all the territory that had previously belonged to the British Mandate for Palestine, from the Jordan River to the Mediterranean Sea. In 1989, the Israeli government arrested Sheikh Yassin and sent...
Remember that this stuff could be false, it could be telling half the story, he could be 100% true, it could all just be fully documented and he's just, reiterating an encyclopedia or something. I just put it on here because I like to learn. I don't know. It's an important thing, so let's kind of want to know how this stuff started.
Sentenced him to life in prison for allegedly ordering the killing of Palestinians who had collaborated to help the Israeli army. In the summer of 1991, for the first time, they organized into armed militia units called the Al-Qassam Brigades. Hamas condemned the 1993 Oslo Accords. This Oslo Accords agreement between the Palestinian Liberation Organization and Israel created what's called the Palestinian Authority, that was intended to be an interim self-governing body with the main responsibility of managing certain aspects of civil governance inside parts of the West Bank and Gaza Strip. The expectation was that the Palestinian Authority would eventually be replaced by a democratically elected government by the Palestinian people. The idea was that it would help Palestinians reach self-determination for their government. From these accords, the PLO officially dropped their official stance of armed resistance against Israel. However, this is where Hamas would pick up and carry that torch going forward. Hamas believed the PLO had signed away the rights of the Palestinian people by agreeing to work with Israel. An engineering graduate named Yahya Ayash joined Hamas and put his engineering skills to work for the group building bombs. Nicknamed the Engineer, Hamas first used these bombs in kamikaze attacks starting in April 1993. In response, the United States government designated Hamas as a terror organization in 1997. That same year, the group's founder, Yassin, was released in another prisoner exchange. By now, in some circles, his popularity and prominence had grown to rival Yasser Arafat. He was seen by some as a symbol of terrorism and by others as a symbol of resistance. And this is when Iran first took note of that. They started to fund Hamas and supply them with weapons. As early as 1990, Iran hosted Hamas leadership at conferences in Tehran. A senior leader in Hamas named Musha Abu Marzouk met with Iran's leader Ayatollah Khomeini in the early 1990s. Iran pledged military and financial support, including $30 million annually to Hamas. They granted advanced military training for thousands of Hamas militia at their Revolutionary Guard bases located inside Iran and Lebanon. Hamas opened an office inside Iran. Iran was interested in promoting a more hardline alternative to the PLO, who is engaged with peace talks with Israel. What this shows is Hamas taking its first steps as an organization towards taking on a diplomatic and foreign affairs presence. But how did this armed militia group become a political organization that would run Gaza? But first, I want to highlight the importance of preparedness in these uncertain times. Our sponsor, Parcel Safety, offers products that are essential for any emergency kit: the NB100 tactical gas mask and the ST100X respirator. Since 2006, it's clear that ensuring the safety of tactical gas endure the toxic anti-fog feature to prepare was exclusive in a world. Several known Hamas members had declared their intentions to run as independents in the 1995 Palestinian elections. But the Hamas leadership didn't want to legitimize the secular Palestinian Authority by participating in those national elections. Hamas pressured those members to withdraw from the elections, and instead, they chose to participate in local elections for municipal government positions in what you might call a grassroots effort. Between 1993 and the year 2000, the majority of international aid was sent through the Palestinian Authority and the PLO, which was run by President Arafat. Since 1994, the United States alone has provided over $5.2 billion in aid to Palestine, but the Palestinian Authority was starting to gain a reputation for corruption. Its leader, Yasser Arafat, would allegedly keep a portion of that money for himself. This CBS News article reports that Arafat diverted $1 billion in funds for his political campaign, with far more money unaccounted for. Hamas saw a chance here to gain public support by distributing 95% of their funds directly to the Palestinian people who were in the greatest need. This resulted in them gaining a reputation among the people as fair. This tactic is commonly used by cartels, criminal organizations, and terrorist groups to gain public support. We start to see how Hamas was setting the groundwork to argue that they were a legitimate political alternative to Arafat and the PLO. But Hamas still wasn't strong enough to take on the PLO head-on. Something else would need to happen first to make the conditions and factors more favorable for them. This event was about to happen because during the late 1990s, Palestinian groups accused Israel of not upholding their end of the bargain from the Oslo Accords. This disagreement led to another uprising in September 2000 called the Second Intifada. The Second Intifada was way bigger than the first. Hamas and groups like Fatah, who were part of the Palestinian Authority, joined forces together against Israel. In response, the IDF mounted Operation Defensive Shield in 2002. It was a months-long operation that did succeed in reducing violence in Israeli cities by 70%. This military operation eliminated so much of the secular Palestinian Authority inside Gaza that it created a power vacuum. The political vacuum and the mounting toll on Palestinian civilians empowered Hamas. So why did Hamas survive the conflict better? They dug a network of tunnels in the Second Intifada and claims of widespread corruption. Due in part to these factors, in 2006, the Palestinian elections stunned the entire world when Hamas won a majority of the seats in a general election in Gaza. Hamas member Ismail Haniyeh became the Prime Minister of Gaza.
Tonight, coming up.
In just
In 1967, Syria started a process that would stir up Middle East tensions and unite the Arab states in a war against their hated neighbor, Israel. But they underestimated the military strength and cunning of the tiny state. And after 6 days of fierce fighting, Israel had destroyed 3 Arab armies and shown that it was a force to be reckoned with. With water in the Golan Heights, which was then in Syrian possession. Syria disputed this exploitation of a shared resource and began to dig a canal which would divert the Golan streams away from the Sea of Galilee. As soon as the digging started in 1964, the countdown to war was triggered. For 20 years, Israel had been on a war footing with its neighbors. The United Nations resolution of 1947, which turned a thin slice of British-controlled Palestine into Jewish and Arab states, had been rejected out of hand by Palestinian Arabs and most of the Arab world. As the British left in 1948, 7 armies invaded Palestine, overrunning the territory meant for the Palestinian Arabs and attacking the new state of Israel. Ever since that war ended in 1949, a state of uneasy truce had existed on Israel's borders.
Between 1948 and 1967, Israel had a problem with defense because unless you're willing to conduct a First World War style attrition to defend it.
So the Jordanian artillery in the Judean hills could actually drop shells onto the coastline of Israel.
She had a very small population. She had a very small landmass, no strategic depth, but very long borders. And she also had a relatively weak economy, very narrowly based. And this meant that she couldn't fight long attritional wars. She had to fight
financial crisis.
Wow, is that so? I in some cases we have to say, okay, well, they were so high during the pandemic, a sugar high, if you will. I think maybe Jamie Dimon once used that term. So a reset is to be expected to some degree, but this is still quite a significant one. If you look out then and say, okay, when do you gain exposure? If the rate cuts are coming next month, why not step into the stocks now? We're getting close to that point at which you think then all of a sudden they could take off, right?
Well, we definitely want to get tomorrow's catalyst out of the way and next week for Lowe's and see what they have to say. Even once rates start moving down, it's usually about a 6-month lag before you start to see backlog fill in with projects again. So I would sit on my hands at least for until we get to next month. There'll be time. I don't think now is it.
So we've seen, every now and then, stocks like the home builders can take off literally 20, 30, sometimes 40% going back a few years from the lows. You don't think this is going to be something like that?
I think that it will be once we're certain of a turn, and I think we're not quite there. If you think about it, this makes sense because COVID, there were so many renovations. You're not going to go back and replace your kitchen and bath twice in a 5-year period even. So it might take a while for demand to recover. Most of the investors we talk to are thinking about, will next year even be an up year? We think it will be for Home Depot and Lowe's, but it is getting close. We'll need a reversal pretty soon on rates.
And given that most of your coverage universe falls into this category, are there any stocks where you feel relatively more optimistic?
Look, I'm going outside of home for our buys. I really love off-price. I think TJ Maxx, Ross, Burlington start to report next week. We think they're taking a lot of share, picking up, especially from the department stores who've been donating share for a couple of decades now. But it seems to have hit sort of an inflection point, and they've learned to update their assortment for higher price points to help that trade down customer when they come into the store. So
if I asked you, if I'm the president or whomever, head of the Federal Reserve, and I call you and say, what's going on with the consumer? Can you tell, or can you disaggregate it from the post-pandemic hangover effect or normalization effect?
It's not getting better. Seems to be getting worse sequentially. And some of that may just be a stretch of inflation, energy bills with the summer energy bills coming in. I think it's some exhaustion around discretionary items. But except for that trade down customer, we think the consumer's under a little bit of pressure right now.
And any idea why that is? I've mentioned this a few times, but we saw this note from Barclays last week, more for specialty retail, where they said, look, the positive catalysts are kind of behind us now, and we're just going to have to move into a holding pattern. So, for the macro takeaway, is that because excess savings have run out? We've had real income outpacing inflation for the past 9 months or so. Is the labor market slowing more than we realize? I wonder.
I wonder that too, but remember, election years are never great for the consumer. So we're not in a great period in Q3. Then we hit the holidays, and we've got 5 fewer days this year between Thanksgiving and Christmas. So we're just not getting any help from the calendar, either electoral or just the calendar in general.
Yeah. So you think there's a measurable effect? Because Amazon called this out in its earnings and said there's the Olympics, there's the election cycle, people are distracted, and critics weren't so sure whether to take that seriously. But you think that's a real effect?
I'm not so sure about the Olympics, but I'm pretty sure about the election. I think just so many consumers on edge, whether rational or not, just worried about what's going to happen, whether it's tax policy, trade policy. This level of uncertainty, especially how polarized we've gotten, it's not great for consumer spending.
All right, and we'll leave it there. We'll see what happens with these results, and then in the weeks and months to follow. Laura, for now, thanks so much. Good to check back in with you.
Thanks, Kelly.
Laura Champagne with Loop. Let's turn to travel now, where Expedia beat on both the top and bottom line late last week. Management says they've seen a more challenging macro environment like we just heard about. And in an interview with Squawk on the Street today, the CEO said she remains optimistic for the longer term, but there is recent softness. Take a listen.
On the air ticket prices, those have been coming down for a number of quarters. Car rental days, which had gone way up during sort of the post-COVID recovery, are also coming down. On hotels, it's early days. As I said, some of what we're seeing is a consumer trade down.
Let's bring in Daniel Kurnos for more on this. He's a media and internet analyst at Benchmark, covering the online travel names like Expedia. How did they set themselves apart in what's turning out to be a tough quarter? Daniel, welcome.
Thank you. Thank you for having me. Look, Expedia is kind of
in a different spot than maybe the others. They're actually in sort of a turnaround plan. A lot of the pain they took last year was self-inflicted, and so they're kind of coming out. Platform was seeing negative growth. It just started to turn positive before the economy started to slow. They're not the only ones that have said it, right? We've heard Airbnb talk about domestic slowdown. We've heard Booking talk about European slowdown. So we'll see how this all plays out. I don't know that I would call it recession fears. We're still seeing really strong hotel pricing at this point, which suggests that there's a really strong underlying level of demand, but certainly we are keeping our eyes out on sort of consumer demand at this point.
Is it possible this is sort of like a two-humped camel where during the pandemic we saw this surge in spending on goods and then that's been coming down and that's a problem for stocks like Home Depot? Then perhaps we're seeing this surge in demand for travel and now are we going to be facing a kind of lagged disinflationary or recessionary type of environment like we've been going through for physical goods?
I would maybe call it or characterize it more as a potential normalization. I think you're right about the higher level of spending, and that probably wasn't sustainable. I mean, you can look at all the credit card data, you can look at all the debt data that's out there.
Volume dried up.
But, you know, is it are we going to see this two-hump camel, as you say? I don't know.
You know, like, I figured today we would consolidate between this area yesterday on the watch list. Now, like, I'm wondering if it's going to attempt to, like with the volume that we've had today, are we going to attempt to, like, run another test, you know, maybe down to, like, Wednesday's close, Thursday's low? I'm not sure. I'm not sure. So that's kind of what I'm like. Even if we run back down to like low a day just to bounce back to VWAP, and we just spend a day consolidating, that kind of looks like that could be an option because, you know, again, you got to get above this level here and start making upside into the end of the day, and then I would change my mind. But even then, I would. You have outside of just even having the 100-day and all these moving averages and resistance, I think you have this 15-minute VWAP trade line that's getting ready to. I want to see if this is going to cross down or not. And this morning, let me see. Let me put this right here. I'll play this. I'll just let you guys know what I do. If you guys have questions, just let me know.
Israeli military says we are at the highest state of alert.
Sure, and just like look at Amazon, right? Look at I can't even think of a single company which hasn't ultimately, had to pull the purse strings that way. Real quickly, while you're here, why is Paramount in your coverage universe? And do you have anything to add there in kind of the weeks ahead about what strategic direction it might need to take, or if it should? How long can it wait?
I mean, I think it's taking the right strategic direction. It's in my coverage universe because I'm TMT analyst. I cover internet and advertising, so we kind of have broad brush here. We've covered media stocks for 2 decades as well. And look, I think Paramount absolutely said the right things. They're following, I would say, Skydance's plan. At least it looks like that on the surface. I think, honestly, Kelly, just look at the space. I think, frankly, that's just the first shoe to drop. I think we're going to see massive consolidation in the space, whether it's consolidation on the streaming services, whether it's actually additional M&A. We all know Warner's in a tough spot right now. So I think in aggregate, I think Paramount's taking the right steps to improve profitability, and we'll see where it all plays out. But, you know, I think this is what the space needs to have happen for all these guys to justify the high cost they're paying for live sports.
Any theories about first movers here?
Well, I do think that, theories on first movers, Netflix has clearly dominated the market from being a first mover. So I think there's a benefit to that. I do think we're going to move to a consolidated bundle over time. Kelly, I think this is going to look like TV looked like, 10, 20, 30 years ago, where you're all going to get it in one bundle. So I do think it will help them if they consolidate. And I do think that will give them a leg up. And I think at some point it will force the other chips to fall.
Do you think it will be lucrative enough?
That is the multi-billion-dollar question at this point, since they've lost so much money, all of them. Look, yes, I think these are all lucrative businesses at some point. I think, frankly, they all made maybe a bit of a mistake following Netflix down the rabbit hole too quickly and forcing this streaming turn. But at some point, all of these guys get rational. They take a look at the market, they cut spend, and they say, okay, this is what I need to do to make money. And we've always believed that content is king. And I think that at the end of the day, the consumer will pay for good content and will find the right level. And whatever level that is will be a level that people can make money. And by the way, if that involves sports contracts coming in on pricing at some point, because those prices can't go up forever, then that may also be what has to happen.
No,
We'll
how dare you? That could never happen. I find it interesting that we'll often read about one of the big tech giants say, oh yeah, they're contracting with CBS to produce such and such a game. Or as we know, Amazon already uses NBC to do the Thursday night game. So there's clearly still a role there. I just don't know what the economics are.
Yeah, it's tricky. It really depends on the paywall. And I think, Kelly, you could argue that a lot of the deals that these guys have done for carve-outs have been uneconomical. And I think the numbers probably bear that out. But this is a long-term consumer game. This is, frankly, about reach. And until CTV gets to become more of a performance medium, I do think that reach is going to matter. And you will start to see CPMs slowly rise over time. I mean, we just saw linear price to CPMs rise in the recent upfront for live sports. So advertisers will pay for good content that people are watching and where the eyeballs are. And I think as long as you're reaching everybody, and the NFL set the gold standard for that, and the NBA is just starting to figure it out, I think that there is a path to profitability for everyone involved.
All right, lift all boats. It sounds wonderful. Daniel, thank you so much. Really appreciate your time today.
Thank you.
Daniel Kurnos with The Benchmark. Coming up, it's been a rough month for Robinhood, whose shares are down 26% since hitting a 52-week high back on July 17th. But Piper Sandler is upgrading Hood to buy today, writing that the pullback is a buying opportunity, and they expect any headwinds from rate cuts to be mitigated by increased trading activity and margin loan growth. Robinhood pairing gains now about 2.5%. And another look at JetBlue, whose losses are accelerating after announcing new debt offerings. The shares are now down 20%, making it their worst day ever. We'll have a check on some of the other big movers of the day next. Welcome back to the exchange. We were down 246 points at the session lows. Off that now with the Dow down 154, and a lot of differentiation here. The Russell 2000s are actually the worst performer, down 0.8%. The S&P fractionally higher right now. The Nasdaq up 0.25%. And keep an eye on the 10-year Treasury yield, which is actually down considerably today. Several basis points. Could have something to do with the inflation expectations. The New York Fed survey down, I think, below 2%, maybe for a 3-year basis. In any case, they were definitely at one of the lowest points we've seen in the last few years, and that could be helping these disinflationary pressures. By the way, oil is still moving higher for a 5th straight day, though, so this could also be something to counterbalance that. It's up 3.5% to 79 and change after already coming off its best week since March. That snapped a previous 4-week losing streak. We're nearing $80 a barrel as the Pentagon sends reinforcements to the Middle East amid rising tensions in the region. On the flip side, the retail names are seeing some weakness today. Ulta, Dollar Tree at their lowest level since 2021. Estee Lauder at its lowest since 2017. Walgreens at 1997 lows. We were talking Ulta this morning. Some analysts think maybe it's just a competitive issue with Sephora as opposed to a macro read-through. But again, keep an eye on Tree and some of these others for that tell. And coming up, Supermicro and NVIDIA are among the top performers on the S&P today. It's back to the future. And our trader has bulked up his position during the recent rout. We'll talk about it. NVIDIA is now at 4.5%. But with the shares up 9% in the past week, is it still time to get in? We debate that next. Welcome back to the exchange. NVIDIA shares are up nearly 5% today and more than 9% despite last week's sell-off, while the volatility left some investors. Our next guest saw the dip as a buying opportunity, upping his fast money trader, Steve Grasso. Give me the deets, Steve.
How you doing, Ken? I always love hindsight when this could have went very market sold off. It didn't, so I looked great, on a micro basis. I own NVIDIA. I originally owned it in the 120s with and I expanded that position. Now my average is around 1. So that's how much I was buying on that dip. Once again, it could have, that dip could have gained more strength. Sold off. So once I solidify, I lean for NVIDIA.
What's the exit strategy?
Yeah, so normally, you know, when those are the people that follow me on Twitter or watch me on Fast Money, I found a core position, which means that I'll have my core position around it. The tail actually became the core. The stock probably trades the 120 range and 115. That was just a blink of an eye of where it was today. You're going to see higher prices. I think it has to perform well. Well, this is definitely, you're going to see a 120 print.
Yeah, because I wonder, you know, is coming off the rose, but that there's a sense of intelligence coming out without being trained on NVIDIA chip. I'm going to be other rollouts that don't necessarily workhorses. Are they kind of telling people that there's a way to buy rush without it necessarily NVIDIA share price doubles and it becomes a $6 trillion company? Or dialed that back a little bit, I wonder.
Yeah, I think that's a valid premise. But when you think about it, they still own 85% of the market share in AI. So maybe to the extent of the chip that's going to be used could change, just depending on what sector of the economy that you're in. But ultimately, if you want free media, everyone that we heard tech, then they all need the high. All going to be buying some aspect of NVIDIA. Sky, Kelly, to your point, but I think it's pretty effective, and I think people are getting back into it. Also, still sound.
Yeah, thing that's just the future to me that it, you know, and say, okay, time to rotate into the small value. This, you know, the Nasdaq's outperforming the off, and what does that tell you? Or is it ahead?
Look at the chart on the IWM. If you look at those percent are unprofitable companies, that number was 15%. People want to travel where they have balance sheet, where they have earnings, where earnings are growing. Is still large cap whole. So yes, future, and no matter what are investing in, it will evolve. That takes technology to do.
Steve Grasso doubling down this, all of the good things. Thanks for it for the exchange. On the other side of this quick break.
we're back underneath.
Good afternoon, everyone, and welcome to Power Lunch. I'm Tyler Matheson, and we start with a check today on the markets. After a volatile week, stocks are a little bit mixed right now. Dragging on the Dow today, the safer defensive plays like Procter & Gamble, Johnson & Johnson, and Coca-Cola among them, all with red losses there, as you see. Walmart, the biggest percentage gainer on the Dow today, on pace for its third straight up day. Its earnings come out later this week. We'll have more on retail coming up shortly. But let's start with the setup for the markets following last week's big moves. The major averages down 3 or 4% for August so far.
Tesla may
but
break
even
down.
with those losses, let's keep perspective here. The S&P 500 and NASDAQ are up 12% or thereabouts for the year so far. Let's bring in Mike Santoli for more. Mike, welcome. Good to have you with us. As we look into this week with a couple of key earnings, most notably from Walmart and a couple of others, what are you seeing?
Right back. I'm just going to go run the trash
mostly what we're
out.
seeing, Tyler, is some apprehensive action.
A little short today, and we'll go on to PPI and some other things here. I'm going to look at a few names here at the end of the day. We'll see, though. We'll see if we can get ourselves something.
I think what the market needs is some kind of...
I don't mean to pause this on you, which I'm not going to pause it. I just turned it off. Look, take notice to where we're at now. You're back underneath Friday's high. Back underneath of it. We're back underneath of it. So now the question is, are we running to 449 for a test? Are we going to start to break? Is this going to be a false breakout? You know, we'll find out very soon. I have way too many lines on here, and I do apologize. Because it's even hard for me to see this. And I can't imagine anyone else trying to... You know, technically, you still have 449 would still technically be support until 449 breaks. So... You know, yes, we're underneath Friday's high, but 449 is the level you got to keep your eyes on for the QQQ. I'll be right back.
It was a lot of buffeting up and down, but by the end of the week, you didn't feel like you had sustained major flesh wounds.
Not much, no. And I think that really time helps when these types of episodes happens. If you feel as if it's forced mechanical selling, at least in part as an exacerbating factor for a day like last Monday, the more days you go without seeing one of these storms unleashed again on the market in terms of heavy pressure on the sell side, it makes you feel as if, okay, we can sort of have regular old two-way activity in the market and not have to worry about it. The question is always, you know, are we in the middle of the horror movie where we think we've outrun the monster, or are we at the end where, in fact, we know he's gone?
All right, Mike, stay there.
So there was some news here with Meta and Apple. Keep your eyes on them. Not really anything major. I don't think it's anything.
Economic data closely. He's David Spica, Chief Market Strategist at Turtle Creek Wealth Advisors. So last week, David, nothing really to get terribly excited about. A little bit overdone, you say?
Yeah, I think the yen carry trade was a big part of it, Tyler, which I'm sure you've talked about ad nauseum at this point. But when you look at where the economy is today, unemployment is still very strong at just over 4%. Wage growth is growing at just under 4%. The Atlanta Fed is estimating third quarter GDP of 2.5%. And let's don't forget earnings, Tyler. Earnings growth came in double digits for the second quarter. But importantly, the non-Mag 7 companies produced the best earnings growth they've done since the fourth quarter of 2022. And that's one of the things we've been worried about, is we needed to see that broadening out. We're seeing that now. So that gives us confidence that there's room to run here.
And yet there has been some earnings caution, hasn't? Commentary of
yeah, there absolutely has, Tyler. Think of where we are in the cycle. I mean, the Fed last raised rates over a year ago, so we're really starting to feel these rate hikes. But one of the things you need to do in this part of the cycle is look for companies that have visible revenue and earnings growth. A lot of the commentary was around cost cutting and AI capital expenditures slowing down projected AI growth. But there's still plenty of good companies out there. And like I said, you're seeing good earnings growth and good revenue growth out of the non-Mag 7. And I think investors need to start being a little more particular about where they're putting their money. We can't just throw it all at the Mag 7. We need to look for other opportunities in the market, the values, the cyclicals, the small caps. And it was good to see those companies start to outperform the Mag 7 even before this most recent downturn.
Presume that the Fed does cut interest rates. We'll learn a little more when they go to Jackson Hole, I suppose, in terms of context. But let's assume the Fed cuts rates a month from now. Is that probability all but already priced into stocks? In other words, would you expect to see certain subgroups of stocks or stocks generally go higher on a rate cut, or is it all sort of already in the numbers?
That's a really good question, Tyler. I would say 25 basis points probably is priced in, and you're going to see home builders and consumer stocks and certain companies do better on a rate cut, banks, financials. The one thing we don't want to see is we don't want to see the Fed overreact and cut 50 basis points, because that would indicate that they're panicking, that they believe they're behind the curve, and I think the market would take that negatively. So let's stay the course. Jackson Hole probably won't tell us a whole lot. We're going to get CPI this week. We're going to get August employment report in early September. And these are things that we need to be looking at. But 25 basis points is probably priced in. And quite honestly, we think that's probably the best case right now. And that puts us on that rate cutting cycle, which eventually gets us to the neutral rate for the Fed, which over time is probably around 3%.
So, Mike Santoli, are you with the idea that rate cuts are that at least a quarter-point rate cut is probably already priced into stocks, and to address David's other point, that a 50 cut, a cut of a half point, would be maybe a sign of panic?
I don't know about panic, but I would say resolve. I think there's an acknowledgement out there that Fed funds above 5.25 is way above the 2-year Treasury yield, way above the rate of inflation. So there's a lot of room in there to cut. To me, it's all about whether, when the Fed eventually does ease, is it in the context of an economy that's still hanging in there so that they seem as if they're doing an optional, deliberate, orderly easing cycle as opposed to really rushing because they've fallen behind. So that's, to me, what, you know, the next 5 weeks or so, or whatever it is, until the Fed meeting in September, as the data come in, and that's going to fill out the picture as to whether, you know, they're kind of still in their preferred path of doing these insurance cuts and just making the policy less restrictive, as opposed to chasing a failing economy.
Yeah, back to you, David, for a couple of stocks that you like, and one of them would be a direct beneficiary, I suppose, of an interest rate cut, and that is Lennar, the home builder.
Yeah, that's a good example of a company that's growing the top line, one that will benefit from a rate cut. When you look at where we are in the cycle, Tyler, we've still got an undersupply of houses in this country, have since the housing bubble collapsed back in 2008. Filing mortgage rates have already started to create some activity there. Fed rate cuts will improve the landscape for home builders. And we like Lennar because they're vertically integrated. They're doing more than just building single family houses. They're doing mortgages, multifamily, land deals. And so they've got an opportunity to really benefit from lower rates and from a need that we have in this country for more housing.
All right, David Speaker, Mike Santoli, thank you very much. Appreciate it. All right, and now let's turn to the bond market as yields are falling ahead of the key inflation data that comes out later this week. Rick Santelli is in the center of the country, Chicago, for us. Hi, Rick.
Hi, Tyler. Indeed. You know, tomorrow's July PPI reading might not get the same scrutiny, attention, or move the markets as much as the following day's CPI, but it is coming first, and it does draw many eyeballs to one situation, and that is April, May, and June on year-over-year ex-food, energy, and trade have all been over 3%. 3 in a row over 3%, even though last November we're all the way down at 2.5%. So this is very interesting to pay attention to because these year-over-year readings are running a bit warm. Now, we look at the VIX. It did some trading under 20 today, and some of the agita that we've been discussing from last week might be dispensing, leaving the market for a brief time. But we are definitely hovering, idling, right around 4% in both 2s and 10s. And if you look at a 3-day chart, 2s, they stuck. 3 days ago, they popped over 4%, and they have been closing over 4%. That same 3 days ago, the 2s and the 10s were hovering in positive territory briefly, but the 10s have reversed down a bit. And as you look at the wider charts going back to May of last year, you can see that 2-year are definitely hovering at 15.5-month lows, 10-year around 1-year lows, but they really are giving up some big ground on the rate side of the equation. And it's causing many to think that should we start to see some convincing trade under 4% in twos, that really would trigger a lot more buying. And I think that goes along with your last discussion. If we get a rate cut in September, look for the market to think we're going to get lots of rate cuts to follow. Tyler, back to you.
All right, Rick, thank you very much. New numbers from the Treasury Department on government spending, we can only imagine. Megan Casella has those details from D.C. Megan.
Hey, Tyler, so interest costs on the national debt keep on soaring. That's the top takeaway here. The U.S. government spent $89 billion in interest on the public debt in July, according to new Treasury data out this afternoon. That's a 21% jump from July of last year, as the debt has grown and interest rates have stayed high. For the fiscal year to date now, interest costs are now 32% or $231 billion above where they were this time last year. Some of the biggest line items on the spending side are directly tied to higher interest rates. Spending at the Department of Health and Human Services was up 10% last month versus last year due to higher costs for Medicare. And spending on Social Security was up 6%. Those are rising both because of the higher cost of living and because more people are now receiving Medicare and Social Security benefits. But tax receipts were also up 11% overall for the fiscal year so far, while total spending is up only 6%.
Watch for longs, guys.
So
Keep an
top
eye on
line,
these
Tyler,
longs.
for the
I'll be
fiscal
right
year
back.
so far, the government is running a roughly $1.6 trillion deficit. That's 5% smaller from this time a year ago. Tyler?
Well, I guess we can take a little solace, a little heart from that. Thank you, Megan. Megan Casella. All right, coming up, some key retail earnings on deck. Over the last couple of weeks, we've seen some cracks forming around the consumer, especially here in the U.S., and specifically on the higher end. So what will we learn from Walmart? Not exactly the higher end. That's next. All right, welcome back to Power Lunch, everybody. A big week ahead for retail earnings as they kick off this week with some of the big box retailers, including Home Depot and Walmart, reporting their sales. Retail data sales for July also out later in the week. Investors will pay close attention as we will get a read on the consumer and the economy. And let's talk a little bit more about that with retail expert Brian Gildenberg, Managing Director at Retail Cities, and our own Melissa Repko. Welcome to both of you. Brian, let me start with you because I thought there was one thing that was very interesting in my notes, and that is your view that Shein and Temu, the two Chinese retailers, are kind of resetting the bar for where a discretionary treat may be. And I assume that means in terms of price, they're bringing that bar down lower and that may ripple through the system.
Yeah, I think first, good afternoon, everybody. And yeah, I think there's a chance that if you think about discretionary treats and purchases as a category, that the mix in that category is shifting to lower ring items. And I think Shein and Temu, and then their cousin, which is basically TikTok and the commerce enablement of TikTok, all of those things I think are changing the dynamics of how treats are affordable in the United States and what people expect to pay for a pleasant surprise or discretionary purchase. And I think that ties out really well with shoppers that are being anxious, nervous, or cautious about discretionary purchases.
So it's an interesting thesis, Melissa, there that Brian has. But how big are Shein and Temu, and are they big enough if this phenomenon is true to move the needle for other retailers?
That's a good question, Tyler. When I think of Shein and Temu, I really think of the apparel space with Shein. And then also Temu is a lot of the things that are kind of commodities that you get on Amazon. So the question is, how much are they pinching Walmart? And will that become more of a factor over time? Something to watch for sure, not so much the case with Home Depot. So Home Depot is kind of in a different category. Tomorrow when it reports, it will be talking more about the interest rate and the pressure on that, more so than the pressure on the consumer.
Well, Brian, why don't we take up where Melissa just left off and talk a little bit about the home stocks, which would be Lowe's and Target. Excuse me, Lowe's and Home Depot. What are you expecting there?
Yeah, I think certainly with Home Depot and Lowe's, they continue to be, and I agree with Melissa that Temu and Shein are not the relevant dynamics for them. They're much more sensitive to interest rates and what's happening in the housing market, which does not appear to be changing dramatically from where it's been. So you had some commentators on earlier in the show that talked about expecting some continued softness, and that's what we would expect to see as well. I think for Target, I think both Target and Walmart might benefit from the fact that their quarter ends in July, as opposed to Amazon, who reported it ends in June, because their Prime Day shopping season is going to be in July. And I think there's a chance you'll see that Target and Walmart, that both had encouraging quarters in terms of how shoppers seem to be responding to their messaging around their equivalent of Prime Day. You might see a little bit of an upside in discretionary spend with them because of the overall impact of basically the middle of July turning into a shopping holiday for Americans these days.
Brian has given us his view on those stocks. What is the street expecting from, let's say, Walmart and Target?
So with Walmart, there's a pretty optimistic take in general on Walmart, and there's a couple of factors. Not only is Walmart better positioned as the nation's largest grocer, so it has more staples, but also it's been making some of its own strategic moves, growing its marketplace, growing its advertising business, some different factors that make it a little bit more resilient even in a tough economy. And it's even introduced a private label that caters a little bit more to both customers who want more of that Trader Joe's fun meal solution and to people who may be looking to an alternative to fast food, because fast food, as we know, has been stubbornly more expensive. And that's why McDonald's has introduced the value meal. They're competing a little bit with Walmart as people might cook more at home. So that is one positive thing working in Walmart's favor. With Target, they lean a little bit more heavily on discretionary, and that may make it a tougher quarter for them as they report next week.
In other words, they don't have the same footprint in grocery, particularly as Walmart does have. So, Brian, final thought here on Home Depot and Lowe's and the effect that a falling interest rate cycle might mean for them.
Well, I think in general, what needs to happen, not just for Home Depot and Lowe's, but for the economy in general, both for the housing market and for renters who are paying a ton at the top end of the rental market, a reduction in interest rates that improves liquidity in the housing market will create sort of more of the natural movement in the housing market that Home Depot and Lowe's rely on. Also, by the way, Target does as well. Target does a remarkable amount of business when people move. Like if you think about it, the first place you go after you move, if it's not Home Depot or Lowe's, is Target. So that stagnancy in the housing market and the lack of mobility, I think is impacting all of these businesses. I do think a reduction in interest rates will free up more home purchasing, and I think that will help all of those businesses.
I'll tell you another place Target cleans up. I'm taking my son through his freshman year of college.
Back to college,
Let me
yes,
tell you,
indeed.
Target is going to clean up this weekend. Get ready, Bloomington, Indiana. All right, Brian, thank you very much, man. Appreciate it. Melissa's going to stick around because we want to ask you about Macy's. That stock is down 20% this year as it continues to struggle with the retail environment, the real estate environment as well. Plan to close now 150 more stores by 2027, literally changing the landscape. You got a story on .com telling us more about it. What's going on there?
So as Macy's closes nearly a third of its stores, if you think about the size of the boxes it will leave behind, it raises a lot of questions about what will malls look like in the future as those boxes become empty. And I spoke to a lot of real estate experts that were saying that a lot of the use cases are very interesting. In Utah, for example, a former Macy's is becoming a practice rink for the new NHL team in Utah. That's an example that's very creative, but we're also seeing things like housing moving into that space. There's a need for housing, and apartment complexes can be tacked onto a mall, or that box can be demolished and turned into something new, even retirement communities. So this is becoming a whole new amount of square footage. And I've seen this play out even in my own hometown. I'm from Northeast Ohio. There was a former mall that was dying, and it was demolished, and ultimately it became an Amazon fulfillment center. So these are examples of how you're kind of seeing the retail circle of life as a big anchor moves out. And in some cases, that Macy's will be the nail in the coffin, but also it could be a chance to reinvent the mall with other use cases like entertainment, restaurants, bowling alleys, and things like that.
Yeah, it's interesting. You see it happening all over the place. And I see a lot of big gyms going into those spaces. I see urgent care centers going into some of those stores, some of those spaces. Maybe not at the scale of a Macy's, but you subdivide the Macy's and you get several.
The other interesting piece here is that historically Macy's has owned a lot of those spaces. So it hasn't been a normal agreement like a landlord would say, hey, we want to get a new tenant in. So the landlord, which is the mall owner in a lot of cases, will have to be buying out Macy's. And that could be a cash infusion for Macy's as it tries to restore and revive some of the stores that it keeps open. It's going to keep about 350 namesake stores open, and it says it's going to invest that money back into the mall.
Back into the mall. Will they be adding their other brands like Bloomingdale's and was it Blue Mercury?
Yes, those two names will be opening new stores, whereas Macy's, its namesake stores, will be shrinking in size.
All right, Melissa, thanks.
Thank you.
Appreciate it. Melissa Repko. All right, coming up, what are your options when trading Google? The Market Navigator is next.
Look at all those tails on the hourly chart. I'm really debating getting short NVIDIA. For just a small trade. It has so I'm actually kind of conflicted here. Because you broke above this level, and it would more so just be a pullback. To give you guys an example, like looking for a short up, like you'd have to do it like now, or if you could get another pop back into the 20-day and just look for a move back down into like 108. So it'd be like a 2-point move, 250, take what you can get, and then see if that level breaks. That could be a failed breakout. Or it may end up just hanging out up here, but I think let's see, Friday's high. I don't know. maybe if I have to be, if you want me to be quite honest, it's not really a trade. I wouldn't look for a trade there. I think TLT has more room. All right, and by the way, great job for anybody that watched the watch list last night and was able to get their longs at these levels, 96, 95.50. I didn't think we were going to get 95 because that was done and gone, and you weren't going to see that again. But now we get that pullback in the 96.50. It's about $1 wide, 96.50 to 96 or 95.50, but we haven't tested 95.50 actually. Since we left it, so I wonder if that's an inclination on higher inflation data and Fed Fund futures pricing in a no cut yet. But I don't think that is really going to be the case. Even if it comes in a little bit higher, they'll want to break down which part was higher,
Now. Welcome back to Power Lunch. And today's Market Navigator, one options trader thinks last week's re-rating of Google has made an already attractive stock even more so, but he's wary of lingering volatility. Tony Zhang is chief strategist at Options Play and a CNBC contributor. He joins us now. So, Tony, welcome. Good to have you with us. What is your Google trade?
Yeah, here we're going out to the September 13th weekly expiration. We're selling the 160 puts. Earlier today, you can collect about $3.33. And with this type of strategy, what it does is it obligates you to potentially buy the stock at effectively around $156. If Alphabet's below 160 by that September 13th expiration, it's a strategy where for every contract that you sell, you can potentially acquire 100 shares of with a pretty significant discount when using the strategy.
All right, so then what are you seeing here that tells you this is an opportune time to execute this kind of strategy? Are you seeing that Google is back at a key level?
Yeah, absolutely. So first of all, you're at pretty compelling valuations. Even before the volatility last week, we're already at selling Alphabet at pretty compelling valuations. But the fact that we've had this sell-off, you're trading at about a little over 20 times forward earnings at the moment. And given the fact that it's expected to grow faster, both top and bottom line than its industry, and it has better margins than the rest of than the industry, I think that it's the fact that it trades at a pretty significant discount at this point, about a 20% discount to its industry, means that just from a valuation perspective, it's quite compelling. Out of the Magnificent Seven, it's by far the cheapest stock to look at, but also the volatility last week has made options very expensive, and that's to the advantage of an options seller. And that's what we're doing here is we're selling put options to potentially acquire the shares, and now we're actually collecting more premium, which means that we're going to get a bigger discount on the stock purchase. So if this put gets put to you on the September 13th expiration, which is about 30 days away, you're going to be able to potentially buy Alphabet here at just a little under 20 times forward earnings, which I think is downright cheap, not only relative to the industry, but also relative to the market as well.
Quick answer, if you can, for those of us like me who need to slow down when we start talking about options. How does this trade make money?
So this makes money in two ways. Either the stock stays put where it's trading right now or moves higher. In those two instances, you're going to collect $3.33, which for each contract that you sell, which is about 2% yield on your cash in just 30 days. That's a really nice yield if Alphabet simply stays where it is or moves higher. In the other instance, if it declines below 160, now you own the shares at 20 times forward earnings, which I think is a good long-term investment.
All right, Tony, you win two ways. If it works, it's great. Tony Zhang, thank you very much. We appreciate it. Thank you. All righty, two controversial figures sitting down for an interview. One is Donald Trump, the other, Elon Musk, one-on-one. We will discuss what to expect. Will there be fireworks, and of what sort? Interesting stuff there. The must-see interview.
Watch for the break here on 150 or 451 on the Qs. So you rallied, you pulled it back. You rallied, double top, pulled it back. Okay. Rallied, turned pre-market into resistance, pulled it back. And then you rallied, you turned this and that, that, and the third back into resistance. Are you going to go down further and start turning like 490 into support again? Like you can see, once you're stepping down, right? Buyers aren't stepping up. It looks like they are stepping down. So that psychology right there is enough to tell you kind of the direction. Again, this is still, at the end of the day, just a consolidation day. Just, you know, like I said yesterday, I figured we'd have like an inside day. The markets had moved a lot. You're having a day where, you know, you were coming into catalyst, so the market could kind of take a breather, collect the data, figure out, okay, what are we doing? Are we going to go back test the highs? Are we just going to go stay down here and possibly go lower? What's the deal? What's that deal, EO? We might be able to catch, if we, I was going to say we might be able to get one more opportunity at a 449. But you guys can see here, trade line, support. But if we could, that would be nice, right? It's 233 right now. 233, so let's see if we can start to change the sentiment here going into the close. I want to look to see if we can. Here, let me get rid of this. Let's go here. Let me pull this up. Sorry for all the clicks in front of the mic. My bad. Dude, come on, bro. I guess I gotta go slow. Is that slow enough for you? So you can see we have not like cared about VWAP at all today. At all. Not once did you stop and say hi, you know, give it a high five, something. Didn't do nothing. Just up through it, down through it, up through it, down through it. And that was it. It was like VWAP stopped the Qs. It was like, all right, now, bro, you ain't just gonna walk by me 5 different times and not say good morning, hello, how are you? So I'm gonna stop you myself. You might not be having the best day, but you ain't taking that shit out on me. That's what VWAP just did there. So let's see here. I wanna see if we end up getting a rally going into the end of the day. I would again be mindful of what we had earlier. All right, low volume bounces with an increase in volume to the sell side. That's key. That is key. And once again, we are back below VWAP. Back below the 90 MA and VWAP. Damn, that sucks. All right, here we go. Can we break through this level? Can we break through it? So if we break through it, my goal is to look for a pullback into 449, guys. Even if we break through this level and run a test of VWAP 542, I still think up there is. I still think it looks like it's going to 449. All right, I'll be back. I'm gonna go do a couple things here. The market's not really doing anything, but I won't be far. I want to go grab a bottle of water real quick.
It looks so great, but the fact that the namesake of that company is now going to the rival platform to do this, what I guess is a campaign event or campaign adjacent event, tells you a lot about, the power he thinks of the platform.
Relative power.
Or it could just be, playing up to Musk and cozying up to Musk. Musk is, of course, providing a lot of money that Trump needs.
The guy's going to write you $45 million every month. That would be a reason maybe to patronize his service.
And maybe put some ads on there as well.
Or he just has respect for somebody that
Well, let's get to Bertha Coombs now for a CNBC News update. Bertha.
Tyler, voters in North Dakota will decide whether to legalize recreational marijuana during this November's
just because
election.
He's giving him money.
The
Like,
state said that nearly
instead of just saying what it is, like they fucking are just two humans. Like they both have actually a lot of common in one another. But it's not that. It's not that they get along. It's got to be because one's giving them money. That's it.
Brazilian authorities over the
media.
weekend retrieved the remains of all 62 passengers from the wreckage of a plane crash on Friday in the state of Sao Paulo. Investigators removed the plane's two engines from the site and recovered the black box containing voice recordings and flight data. The cause of Friday's crash still unknown,
That's why they need to let you
but
guys,
a preliminary report is
something.
expected within the next 30 days.
So you just,
And gym operator Blink
something.
Fitness has filed for Chapter 11 bankruptcy to help facilitate a sale of its business. Equinox-owned chain said its gyms will stay open and that it received $21 million in new financing from existing lenders. Employee wages and payments to vendors are expected to continue without interruption. And presumably, Tyler, you would need to keep making your membership payments as well.
All right, Bertha, thank you very much. Bertha Coombs. Up next, when it comes to climate change, we often focus on carbon emissions, but methane is even more destructive to the planet. We will dive deeper in today's Clean Start.
Parachutes for everyone. In every plane.
Welcome back, everybody. We talk a lot about reducing carbon emissions, but methane is actually even more destructive to the planet. One company, however, is working on technology to eat methane. Diana Olick has the details in her continuing series on climate startups. Hi, Di.
Hey, Ty. Yeah, it sounds gross, but I'm going to introduce you to something called a mem. Not a meme. I promise I'm saying it right. A mem is a methane-eating microbe, much like yeast that eats sugar in bread and produces substances that make it rise. Mems eat methane and produce fertilizer, all the brainchild of a startup called Windfall Bio. Methane is a potent greenhouse gas that traps far more heat in the atmosphere than carbon dioxide. Getting rid of it is essential to reaching global climate goals. And while much focus is on reducing methane emissions, California-based Windfall Bio has come up with a way to get rid of existing methane. Naturally occurring microbes that live in the soil and eat methane as food.
We provide those packets of MEMS, and then whoever has access to that methane can capture the methane themselves, turn it into fertilizer, and create the value from it.
If a farmer is using the MEMS, they can turn around and use the fertilizer themselves. If it's an oil producer or a landfill, Windfall will buy the fertilizer back from them so they get paid for capturing methane.
So it's still a profitable, useful process for them.
Windfall has been researching this for a decade, but just launched 2 years ago.
I've actually been honestly fairly shocked at how high the demand is. We have customers now on basically every continent, and we have more inbound interest than we can even supply.
Investors, however, say they are not concerned about it scaling quickly.
We've seen the data and feel very compelled by what we've seen thus far. And we'll continue to progress this in a number of pilots across a number of different industries going forward.
In addition to Cavallo Ventures, Windfall is backed by Prelude Ventures, Amazon Climate Pledge Fund, Breakthrough Energy Ventures, and Mayfield. Total funding so far, $37 million. And another benefit from using MEMS is that traditional fertilizer production requires a lot of energy and produces huge carbon emissions, especially in making ammonia fertilizer. Windfall Bio says they're soon launching a program with Whole Foods market suppliers, specifically their dairies, to eat up the methane. Tyler?
Di, I don't know whether you know the answer to this, and forgive me for asking if you don't, but how are these MEMS deployed so that they gobble up the methane? What, do you just sprinkle it around places that methane is produced, or what?
Exactly. Okay, so let's say you're on a dairy farm. You could put the MEMS at the end of an exhaust pipe that comes out of the dairy farm. Or if you're putting them on agricultural land, you could use tarps and put the MEMS underneath the tarps, and they will then suck up the methane. If it's at, a smokestack or something where they often do carbon capture, and they do different types of pipes that come out of that smokestack, you put the MEMS there. You put the MEMS wherever the methane is so it can have its dinner.
Is there competition in this space? Anyone else in the methane-eating game?
Not in the methane-eating game. There's, of course, a lot of competition in the fertilizer space, and there are different methods now being used to either capture methane or reduce methane, but not methane-eating microbes. No other MEMS.
No other MEMS. All right, the MEM stocks. All right. Di, thank you very much. Diana Olick. Still to come, Starboard betting big on Starbucks. We will trade that name and others in 3 stock lunch.
hero.
Welcome back. Time for today's three-stock lunch, where we look at Starbucks, Eli Lilly, and JetBlue. Here with our trade, Scott Nations, president of Nations Indexes. Scott, welcome. Let's start with Starbucks, which is up today on reports that the activist investor Starboard Value has added a stake. Elliott Management also in that stock. Wells Fargo optimistic on both activists' potential in a note this morning. Are you quite so confident?
No, I'm not quite so confident. Tyler, this is a hold. Starbucks is a hold. You don't want to be the focus of activist hedge funds, and Starbucks is the focus of two right now. As you pointed out, latest one is Starboard, probably best known for being the ones that told Olive Garden to start salting their pasta water. They both want the company to make changes to boost the stock price. Instead, the company has reduced guidance 2 times this year. It's down 20% year to date. Same-store sales have disappointed. And let's face it, Tyler, if you are a consumer who's feeling pinched by inflation, a $5 coffee is probably a pretty good place to start. And with the forward PE at 20, you can't even say that the stock is cheap yet.
All right, so that would be a hold, which sounds a little like a sell there, Scott.
Not quite a gentleman's sell, because we're going to let these activist hedge funds do their work. But if we get back to unchanged on the year, then I would be a seller. Right now, I think everybody is saying that they don't care so much about the cheese. They just want out of the trap when it comes to Starbucks.
All right, let's talk about Eli Lilly gaining 10% last week. Huge earnings beat. Deutsche Bank upgrading the name to buy this morning on strength in Mounjaro and Zepbound. Do you like what you see in Lilly?
I do. Eli Lilly is a buy. Sales are surging because of their weight loss drugs. That is no surprise. But the recent EPS beat was a pleasant surprise. Additionally, concerns about capacity constraints are easing. It would be horrible for a company to have a high margin drug that everybody wants and not be able to make enough of it. The option market, the only one of the 10 biggest names in the S&P where the option market is bullish. It is certainly not cheap at a forward PE of 52. You're paying for growth, but Tyler, so far you're getting the growth you're paying for.
You're getting the growth, and they seem to be, as opposed to some of their competitors, a little ahead on being able to meet the demand, the capacity question. All right, finally, let's move on to JetBlue. The shares there having their worst day ever after announcing a $400 million in 5-year convertible senior notes. This comes after posting a surprise profit at the end of July, but a capital raise here on JetBlue, Scott.
Yeah, this is a sell. The company is not profitable. They're raising a total of nearly $3 billion in bonds and loans backed up by their frequent flyer program. Moody's just downgraded the company even further into junk. And their analysis was damning, saying it would likely take years for the company to increase its metrics enough to have some sort of reasonable positive cash flow and earnings in the near future. Listen, all the airlines, Tyler, are really tough businesses to be in, but you don't have to swing at every pitch, and you don't have to buy JetBlue just because we're talking about it. If you felt compelled, just had to invest in an airline, I would focus on one of the ones that had much more foreign exposure, foreign routes, because those tend to be so much more profitable.
All right, let's get a quick thought on the markets generally. The Dow is down about 1/3% right now, a little bit off its lows. NASDAQ and S&P are slightly higher. What are you looking for as we sort of wrap up the summer?
Yeah, Tyler, we've been back and forth, at least in the S&P, above and below the unchanged line today. It's nobody can seem to really get any sort of momentum going. I'm disappointed that that the market has not been able to sustain rallies recently in the S&P. The option market is still not just scared of volatility, but terrified of it. And so I think that we're going to see more of this as August continues. You know, a lot of people away. It's going to be tough to sustain much of any move. So I think that until we get a little bit more guidance from the Federal Reserve, 25 basis points, 50 basis points, I think it's going to be a pretty sloppy August.
All right, sloppy August. Scott Nations, thank you, my friend. Nations Indexes.
Thanks, Tyler.
And remember, folks, you can always hear us on our podcast. Always. Be sure to follow and listen to Power Lunch wherever you go. We will be right back. All right, let's give you a quick check on the markets right now. The Dow Industrial is off 161 points, about 0.5% at 39,335. S&P 500 wobbling a little bit between positive and negative right now. A second ago, up just a little bit. And NASDAQ slightly higher. This would be its fourth up day in the past 5 sessions, following that huge 3.5% drop that occurred last week. Up 0.25% right now. Meantime, shares of Disney are lower by nearly 20% over the past 6 months, as there are concerns about nearly every segment of its business, including even the money-printing theme parks. Julia Borson has more on Disney's future plans. Hi, Julia.
Well, Tyler, Disney's theme parks division did show a slowdown in its earnings report last week, but the media giant is betting that the parks and cruises division will drive growth for the company over the long term. This weekend, at its fan event D23, showing how it plans to invest $60 billion in its Parks and Experiences division over a decade, a commitment which it announced last year. Now, the Magic Kingdom is getting a new Villains Land along with an upgrade to Frontierland to expand the Florida park. California Adventure is building 2 new attractions, and Disney announced 4 new cruise ships in addition to the 4 others already in the works and the 5 already at sea. Morgan Stanley with an overweight rating on the stock, saying they see the expansion of Disney's experiences division as notable, given its long history of high and rising return on invested capital. As the company's linear TV businesses struggle, CEO Bob Iger showcased new films designed to keep up the box office rebound that we've seen this summer, led by Inside Out 2 and Deadpool vs. Wolverine. Building on the success of those franchise films, 5 of the 7 films Disney featured were from popular franchises, including Toy Story 5 and Frozen 3. And as Disney makes its diversification push into the fast-growing Epic Games with the strategic investment into the company announced earlier this year, now they unveiled how they plan to really integrate those characters into Fortnite, starting with some new Marvel characters, which will be part of the game as early as this week. Back over to you, Tyler.
Julia, one of the things that really leapt out at me there was how much they're investing in cruises with 4 new boats in addition to the ones that they're already building. They're going to become a big cruise line, not that they aren't already.
Yeah, this is really part of their whole experiences business. The idea that if you are interested in bringing your family to the park, whether it's in Florida or California, then those big Disney fans really want to spend more money and more days and have this really immersive Disney experience while they stop off in various ports. So this is really based on all the research and the data of what Disney has seen about their fans. And what's so interesting to me is the fact that now they have this additional touch point with their fans. They have the direct relationship with the fans at the parks, but also through the streaming service, and through those dedicated to those dedicated fans, they could really start to market things more through Disney Plus. So that's another advantage of having this D2C relationship with the streamer, that they can market things like a cruise ship experience to them.
A little bit short on time, but in terms of scale, the expansions or the new features at the parks, how do they rank? Biggest ever or what?
So when they announced this last September, they said they were doubling their investment in the parks to $60 billion over 10 years. So really doubling down on that parks and experiences division.
All right, very interesting. Always interesting to hear about what the House of the Mouse is doing. Julia Boorstin, thank you very much. And thank you, folks, for watching Power Lunch for a Monday. Closing bell will start in just a few seconds' time. We'll see you back here tomorrow. Thanks for listening.
Tyler, thanks. Welcome to Closing Bell. I'm Scott Wapner, live from Post 9 here at the New York Stock Exchange. And this make or break hour begins with the risk reward for stocks, whether it's gotten better following last week's volatility. We'll ask our experts over this final stretch. In the meantime, check out the scorecard with 60 minutes to go in regulation here. The major averages are sort of taking a wait-and-see approach to this week's data deluge. We have inflation data, we have retail sales, we got some key consumer earnings as well, all lying ahead. Will be a good test for the markets for sure, given all these questions now about the direction of the U.S. economy. NVIDIA, it is one of the standouts today, along with other chip names like Micron and AMD. They're all positive across the board. Apple's higher too. That's his analyst Dan Ives. He's upped his iPhone 16 sales numbers. That stock's good for about 2/3 Takes us to our talk of the tape. The outlook
Let's see
for
what
stocks.
happens. See if
We
we
have a
can
lot
rally
riding on
here.
these next
Watch
several
the
days.
SPY.
That's an understatement. Let's ask Cameron Dawson what's really at stake. She's the Chief
Cameron
Investment Officer
Dawson.
for New Edge Wealth.
Ow!
Joins me here at Post 9.
Yeah, I
Welcome
didn't
back.
do
It's
that
good to see you.
correctly.
Good to see you.
Did we solve whatever issues we needed to solve last week?
We definitely solved some of the issue with positioning. I think that is the one silver lining that came out of last week, is that if you look at that Deutsche Bank consolidated positioning report, it went from being way extended, way overweight, 96th percentile. Now it's just 31st percentile. So that just suggests that you shook out some loose hands, and that does set the stage to draw more money back into the equity market. Now, there are still overarching concerns. Do we have a growth scare? What's going on with earnings? But I think at least from the positioning front, it's good.
Yeah, what about the carry trade that got all this attention? I guess no one really knows whether it's fully unwound or what else may lie overseas based on other central bank moves. We're so fixated on the Fed here, but we're learning that other central banks hold the key very much so to where this market may go too.
Certainly. If we look at things like CFTC positioning, which is not perfect for looking at yen positioning, it has bounced back a lot, meaning that a lot of shorts have been covered. But it does raise the point that we could still be in this world of higher volatility in FX markets. And we note mostly this week, high volatility within fixed income, because we get CPI, PPI, and retail sales.
What do you think is most important, the inflation reads or the retail read, given this what felt like a panic attack we had a week ago today.
Because we think that there's a greater risk for downside to growth than there is a risk for upside to inflation. We think retail sales is actually more important. Of course, if CPI or PPI comes out hot, that could spark a lot of volatility, mostly in the bond market. Remember, the bond market still has quite a few cuts priced in, 4 cuts priced in through the end of the year. But if we think about that growth story, it really will give an eye to how accurate is the labor market data. If retail sales falls off, then we might know that the labor market could be weaker than maybe some of the headline data suggests.
The way you put this to our production team was what happened last week, quote, reset the clock for equities to give them more room to run. So it got through a lot of the issues that needed to be taken care of. And now what kind of runway do you actually see existing?
Yeah, so in theory, it resets the clock, meaning because of that positioning reset, it does help to at least start from a point where we're not as stretched. I think one interesting observation, though, is we went from very overweight positioning to now neutral, slightly underweight with relatively little pain. So as people get brought back in, do we get the same kind of boost than if it had come with a bigger drawdown and within the market? The other thing to note is markets got a little oversold last week, but on things like percentage of names above their 50-day moving average, we got not oversold at all, which just suggests we really didn't see a true flush.
What surprised you more, do you think, the magnitude of the Monday sell-off or the magnitude of the rebound, where we finished the week, let's just call it for the S&P at least flat?
Yeah, I think that it is absolutely incredible that you saw it end flat, given the amount of pain that was absolutely it anticipated at the beginning of Monday, and that you quickly threw away this idea of growth fears. It really helped to focus in on that maybe all of the much ado that happened on Friday and Monday was just about positioning, and maybe the growth fears were just a narrative. But that doesn't mean we can't ignore growth risk, as we hear from companies like Walmart and Home Depot this week about the consumer.
So let's go positioning then. I mean, what are we supposed to do now in terms of what the best portfolio might look like? We went from overexposed maybe to mega caps at the expense of a lot of other stuff. Then mega caps sold off in July, and we had a nice reversal for some of these unloved areas. Now we have reintroduced volatility, so I'm not sure what we're supposed to do from here.
Yeah, for us, regardless of what the overarching narrative might be, we think quality is just so very important, because what we found over the last week in our quality-focused portfolios is that because we had valuation discipline, we had really good downside capture. It just means that we go down less than what the market goes down, but you can still participate in the upside because you're not full defensive. So it's that needle to thread of saying we want companies that can block and tackle if the economy is weakening, but we don't want to be crowded in areas like utilities or staples, which we know are perking up, which does get our eye about the risk appetite in the market, but those tend to reverse gains if you do see a better growth environment.
What about growth versus value? Predisposed to one side of that trade versus the other?
We've been neutral growth versus value this year.
Why?
And that,
Why?
Because if you look at growth, what it has going for it is better earnings, but it's also very expensive and very crowded. If you look at value, it's had worse earnings revisions down, but it's under-owned and under-loved. What we've seen over the last couple of weeks is growth versus value has reversed sharply, where value has outperformed growth. It is sitting right at its 200-day moving average, so it is the most critical point to see the direction of that trend. We think it all comes down to earnings. Unless value can get its act together and have better earnings, which some of that relies on things like energy and commodities, then we think that growth can still outperform, maybe not to the magnitude, though, that it did at the first half of the year.
What about small caps? Everybody's weighing in at the worst last week. The Russell was down 5.5% last Monday. It finished down 1 1/3. So it had a nice comeback, but it didn't have as great a comeback as some of the other of the majors. Did you? I don't know if you saw the interview that I did with Tom Lee to end the week, but he's still optimistic, and you know he made a really big call months ago on where he thought the Russell could go, up 50%. I said, Tom, it's getting a little late for that. He said, well, rate cuts are going to be good nonetheless for small caps. Let's listen to what he said, and we can react on the other side. Tom Lee on Friday.
It's a lifeline for reducing the cost of money for consumers, which helps the banks. You have huge exposure in the Russell. So I think when the market believes the cuts are imminent, or maybe it's September, I think that's when the small cap call works. I think we've been wrong on the timing. I would like to have seen us to be up 20% at this point, but I still think 50% could happen before year end.
I was kind of surprised that he said that. I still think 50% could happen before year end.
Yeah, mostly after we've already seen a big positioning reset. Since that early July kind of rebound within small caps, you've seen positioning get back, almost back to the levels it got to in December of 2023. We think small caps have to have a very, very specific circumstance in order to outperform. You need rate cuts and you need lower yields, but you also have to have a strong growth backdrop. You can't have one or the other. You have to have both at the same time, because if you're getting rate cuts because the economy is weakening, small caps are the most cyclical parts of the market. They're economically sensitive.
Let's see if we get volume here and it starts to sell
right
off.
For small caps.
Watch for the SPY to see if we can get a little bit of a sell-off here and a pullback into the 100-day. Dude, come on. We need volume, though. You see how they're like the volume did not pile on there? The volume's just poop.
Caps even with rate cuts because of exactly what you said.
Yeah.
You need everything to go right. You can't have any concerns about growth and then want to go into small cap stocks, can you?
You have to believe in a true economic acceleration. The only time we see sustained outperformance for small caps is really at the beginning of an economic cycle. Fed cuts rates, you have interest rates that are low, and you're rebounding off of the lows, and economic growth is improving and accelerating. That's the time to go way overweight small caps, not when we're having this debate as to whether or not we could be near the end of the cycle and slipping into a recession.
All right, let's bring in Ayako Yoshioka of Wealth Enhancement Group and CNBC contributor Greg Branch of Branch Global Capital Advisors. It's good to see you both. Aya, it's good to have you back. You say to our producers today, volatility is likely to be with us for a while, so we're still going to be stuck on a bit of a roller coaster for a while?
I think so. I think we've got a lot of, global macro headline risks that could always, disrupt markets. I think there's, the focus, though, on the long term and the fundamentals that can sort of balance those out so that we don't have too much volatility, over the long term.
No, I want volatility.
Greg Branch,
QT.
a week ago today, you were thinking what? Excuse me. And given the comeback that we've had, did that force you to change your view? For our viewers who have followed our conversations, you've been largely cautious for a pretty long time. I'm sure Monday was one of those instances you said, okay, this may be what I've been talking about, but what now?
Yeah, Monday was a surprise to me. And to go back to the question you started the show with, I think it revealed a problem. And I think Cameron hinted at some of this, is that I think we are, at least parts of us are in denial that a cycle needs to occur. So nothing happened 2 weeks ago that should have been surprising. The Fed has always represented to us that they needed to get to mid 4% employment for price stability. 114,000 jobs number is not out of line and certainly not even reaching neutral yet. We saw 150,000 in October. So I was surprised at the reaction when all we saw was the evidence that the Fed's program was working and what we should have expected when we saw the inflation numbers put up a very stark pivot for May, where we had 0 bips of core month-over-month growth, and June, where we had 10 bips of core month-over-month growth. But a cycle needs to happen. And because a cycle needs to happen, I agree with Cameron that I'm cautious of any permanent or long-sustained rotation into small caps at this juncture. And I think that once we realize that a cycle needs to happen and that growth will in fact slow and that it's the only way to embed a sustainable 2% inflation, that investors will flock back to where the earnings are. And there will be a stark difference between those companies that can grow 20% and those that will grow mid-single digits.
But are you implying that the cycle is ending now? Because the data doesn't necessarily confirm that. Slowing, yes. Ending, no. How do you respond?
Not ending. The slowing is in front of us. The Fed will not cut rates unless it needs to reaccelerate the economy. And it's unclear, and I'm in the minority on this, I'm unclear if that will be September. We had 2.8% GDP growth in the second quarter. The Atlanta Fed projects third quarter to be at 2.9%. Earnings growth is going to come in at 11%. We've had 90% of the S&P report. We're at 11%. That's the highest since the fourth quarter of 2021. Consumer spending is basically unchanged the last few months. Yes, we had a contractionary ISM manufacturing report, but that's in line with what we've had the last year. The services report was 51.8%, which implies, roughly speaking, a 1.2, 1.3% GDP growth. So we haven't seen the economy crack yet. It's in front of us. And we're talking about rate cuts as though it will automatically alleviate that slowing, and it won't, because the hiking cycle will be slower. Sorry, the cutting cycle will be slower than the hiking cycle will, and it will take its time to work its way through the economy.
Cameron, you want to take issue with anything that Greg said? The Fed will not cut interest rates unless it needs to reaccelerate the economy. Does he have it backwards?
I think it's this great debate as to where we are versus where we're going. And it seems that the Fed is looking at where we are. They're looking at the data today, and it seems that they don't have much urgency. The bond market is looking at potentially where we're going, and that's where the urgency is being priced in. The bond market still has one supersized cut priced in into 2024. And the bond market has been getting ahead of itself multiple times. There's been many pivot parties over the last few years. And so it seems like those two are at odds. And that the Fed saying really no urgency, even dubs on the Fed like Goolsbee not coming out and sounding the alarm suggests that maybe the bond market will get disappointed.
Aya, how do you see this playing out? Because I have people coming on the program suggesting that you should sell the first rate cut, not embrace it and buy it.
Hi, Scott. Yeah, no, I think that the labor market is going to dictate a lot of this. I think why we had the sell-off on Friday with the labor market data, and we're going to be paying attention to all the weekly jobless claims data that we get. That's going to really dictate how quickly the Fed moves, how much they move, and that's going to determine more than anything else.
I mean, Greg, the Fed, I think, is making it clear they're not going to wait around and let the economy fall apart and then first cut interest rates like you're implying. They want to prevent the whole thing from happening because I think they feel pretty good about where they are, where they somehow have been able to bring this plane along a way that many predicted was going to be a much more difficult landing than may be in the cards.
Right, and I'm not being critical, and in fact, I was very specific about what I was implying. If we have 2.9% GDP growth in the third quarter, as the Atlanta Fed is projecting, then we haven't seen the economy slow yet, Scott. And so when we're putting up 114,000 new jobs, that is not a neutral number. Is it coming? Sure, of course. 80% of Americans have liquid assets that are about 13%. This was a study from the San Francisco Fed, 13% less than what they were projected to be pre-pandemic. So, the bottom 80% of earners are certainly stretched. But even in the retail numbers, they're the same. They're unchanged. Is it coming? Of course. Can the Fed avert it? I don't think that they want to. You got to remember, one of their mandates is price stability, and they have a failing grade against that for 3 years. So will they endure 4.3, 4.2% unemployment to make sure that our newfound price stability, which is probably imminent, is maintained? I think that they will.
A failing grade on price stability for 3 years? I mean, I think anybody would admit that they were sort of late to raise rates, but they seem, by virtue of their efforts, to be both swift and large in what they've done, that they may actually be winning.
Yeah, look, it is going the way that they anticipated, but we're not at 2%. And we had generational inflation for 2 years. So, look, I don't mean it to be minimizing. It's a hard job. But, yeah, we're not at 2%. We've had generational inflation for 2 years. I would call that a failing grade in terms of price stability. I think if you ask 80% of Americans, they'd agree.
Well, I mean, people who are sick and tired of paying higher prices for so many different daily products, I hear you. But they're also going to cut rates before inflation gets actually down to 2%. So anyway, when you look at positioning, because that's ultimately, I feel like, what the last week has been about, as Cameron said off the top, what positioning is best right now?
I think we have to remember that diversification is your friend. I think we got lost in focusing so much on the mega cap tech companies that have really been the workhorses of the market for so long. But we can see that the broadening out of the market is actually a good thing for all of us. Diversification is positive for everybody in their portfolio.
Yeah. And we have, what, 2 weeks and a couple of days, Cameron, lastly to you on NVIDIA.
Yeah.
Is that the next catalyst for mega cap stocks? Is it the only sort of thing that's going to be the determining factor as to whether this trade has a renewed leg, whether it truly is in trouble? Is that the moment?
I mean, we are in this August quiet period, and so all eyes will be on it. And we do think it could be a source of volatility, and it will be probably more interesting, not the numbers, but the reaction to the numbers, because there's pretty high confidence that the numbers will be good based on all the trends intra-quarter that we've heard from NVIDIA. It's the reaction, and is good enough for a stock that's trading at these levels?
Good reaction today. You see it up better than 4%. It was a wild week, obviously, within the last 7. We'll see what happens. Aya, thank you very much. Greg Branch, good to see you as always. Cameron Dawson's good to have you back here at Post 9 as well. To Pippa Stevens now for a look at the other names moving into the close. Pippa?
Hey, Scott. Well, shares of Hawaiian Electric are sinking, on track for the worst day of the year after disclosing a going concern warning, saying it doesn't yet have a financing plan in place for the $1.7 billion in fees for the Maui windstorm and wildfire settlement. The company also suspended its dividend and posted a consolidated net loss of $1.3 billion in the second quarter. Shares of Marathon Digital also in the red after the crypto miner announced plans for a $250 million private debt offering, which could later be converted to stock. The company said it plans to use proceeds from the sale to acquire additional Bitcoin as well as for general corporate purposes. Those shares down 9%. Scott?
All right, Pippa, thanks. See you in a little bit. Pippa Stevens, we're just getting started here. Up next, your pharma playbook. Eli Lilly seeing some serious gains over the last week. STEM Point's Michelle Ross is back with us today to break down that rally. Find out if there's any more room to run there and where she sees big opportunities elsewhere in the biotech and pharma space. We're live at the New York Stock Exchange. You're watching Closing Bell on CNBC.
hers.com.
Welcome back. Eli Lilly taking a breather today after a scorching two-day rally. The stock up more than 14% in the past week. And that's after hiking full-year guidance on demand for its weight loss drugs. Deutsche Bank upgrading that stock to buy this morning, calling it a, quote, low beta, high growth unicorn. Joining me now with her outlook on the stock in the broader biopharma space is StemPoint Capital's Michelle Ross. Welcome back.
Thanks so much for having me.
Okay, what is our big takeaway from GLPs last week, whether it's Novo or Lilly?
Yeah, so I think Novo set the stage, and I think it caused a little bit of concern in the midst of what is a tremendous growth market in anticipation of this growth to what is the pricing dynamic on these specific drugs in this class of drug. And that was a fair question. I think as you bring in more exposure to patients, when you include Medicaid coverage and Medicare coverage, you are talking about potentially different price points. However, when Lilly came out and discussed their view of the market, what they are seeing currently, I think they really did dispel any major fear that we were going into really a reversion to pushing on price. You actually had Dave Ricks, the CEO of Lilly, on the show after their earnings, and he defined this as maybe late in the first inning in terms of the growth dynamic. They are not promoting this. There are many different options and optionalities of how they can grow this product going forward.
Okay, so you're as bullish today as you have been, it sounds like, about GLP-1s.
I believe that the GLP-1 class has multitude of additional areas that they can keep moving into, and we're going to see that card turn on more indications and more potential areas for expansion going forward. Yes.
Okay. What about healthcare as a space by itself? It's in the lower part of the middle of the pack, if you will, right?
Yeah.
It hasn't had a bad year.
No.
But when you look at 9.3% year to date versus some of these other sectors, it just doesn't really excite you.
Yeah.
Is that going to change?
There's a little bit of an identity crisis in healthcare broadly. If we are talking about the pharmaceutical complex, especially in weeks like we had last week, I think there's an element of the defensive nature of those companies that really stands out and stands true. And you saw that during a very volatile week, in fact, and the liquidity, the cash flow parameters around those companies. And then on the flip side, you have something near and dear to my heart, which is mid-cap biotech.
Okay.
And it is almost the poster child of what we are seeing when we talk about the small caps. You were speaking to the guests earlier about that front. The volatility that you expect to see from the small cap universe is going to be just that, and then add in the idea of the volatility of clinical trials and catalysts, and that's what mid-cap biotech has offered this year. So extreme growth potential with large amount of volatility, and then the defensive characteristics and nature of large cap pharma have been the barbell effect we're seeing right now.
Where do interest rates come into this conversation, if at all, when you're talking about enormous sums of money that are being bet on these drugs eventually coming to market? Theoretically, you're going to have to borrow money at some point at what was high rates. Does that play into this picture?
Absolutely. And I think one of the issues for biotech over the last number of years has been how it is the poster child for that long duration asset. Biotech typically is raising money consistently from the equity capital markets and investors to fund these trials. They are long term. It's not a fast adoption to be able to bring something to market. It can take upwards of 5 to 10 years. So when you do talk about the correlation of the XBI, the biotech ETF, to the rates markets, it is real. It's an inverse correlation. And what we have seen historically in prior periods, and what many are expecting going forward, is that when rates start being cut, you will see a tailwind to the biotech sector.
How active have you been of late in the space? Are you an active, looker for names,
Always.
a buyer?
Always.
Give me a name from one of the most recent purchases that you've made.
Yeah. So one name that's relatively new, I would say, in the last couple of quarters is based on a large theme that we've been following. And it really is a cornerstone of biotech is the regulatory environment. And the regulatory environment in biotech is very much predicated on the FDA. And when you see major changes or ways that the FDA is streamlining the ability to bring a drug to market, you take notice. If there's new people at the helm, if there's new approaches to create pilot programs. And we saw that in the rare disease and orphan disease category. These are diseases that usually affect less than 200,000 patients. The ultra orphan can be less than 15 or 20,000 patients in the US. And the question is, how do you bring drugs to that market. It's a very small market. One such company that's doing something in this space is called Applied Therapeutics, APLT. And they may be a very large beneficiary of some of these changes that are occurring. They are going in front of the FDA over the next couple of quarters with 2 different programs in the rare disease field. And it is incredibly volatile. It will have a lot of binary outcomes here going forward, but that's something that has definitely caught our attention for the potential outcome for patients here as well.
Okay. A name Syndax I have on my list. Is that something you've owned for a while?
We have owned it for some time. It is one that I absolutely believe is going to see some major inflection this year on the back of their 2 late-stage programs. And they are also going in front of the FDA regarding 2 different drugs in the oncology space. One is for pediatric AML, acute myeloid leukemia. They are set to get a decision before year-end on that front, and graft versus host disease. This is a company that we believe has the potential for multi-billion-dollar peak sales of these 2 products. And again, very importantly, the demand and the necessity is there for patients. So we're excited about that.
I'm sorry. You still own Maris?
I do.
Yeah.
I do.
Still is optimistic about this name?
Still as optimistic as ever. They're going to have additional data in the head and neck cancer space going into the end of the year. Again, the platform that Mirus has, not only do we believe that what they showed in their trial in head and neck cancer was a success, but we believe there was a validation effect to the platform they have in oncology in bispecifics. So very, very excited about what they're doing there.
Thanks for coming by and visiting with us
Absolutely.
again. We'll see you soon.
Very nice to see you.
Michelle Ross joining us here at Post 9. Up next, the case for caution. Stocks lower after a very volatile week, as you know, on Wall Street. Rockefeller's Jimmy Chang is back with us today. He'll have his latest forecast for the market and the sectors he says are seeing some serious strength right now. He'll make his case after the break.
PowerLunch.com.
We're struggling today to hold on to the momentum from late last week. Seesawing a bit here as we head towards the close of trading on this Monday. Investors looking to this week's critical economic data, including CPI on Wednesday. Joining me now at Post 9, Jimmy Chang of the Rockefeller Family Office. Welcome back. It's nice to see you. You say in the notes today that the market psychology has been altered. In what sense?
Yeah, I think prior to the recent sell-off, there was this expectation of a Goldilocks environment with the Fed about to cut interest rates. At the same time, people expect a soft landing. But then we got a number of economic releases that tend to point to a somewhat weaker than expected environment. You saw the city surprise index already falling below zero for about 2 months now. And then on top of that, the trigger for the sell-off with the Bank of Japan, unexpected rate cut, along with a weak jobs data. So that led to this so-called unwinding of the yen carry trade. But I think while that issue is put to rest for now, given that the BOJ has capitulated and indicated they're not going to cut interest rates, given the elevated volatility, I do think there's a sense of less conviction about the state of the economy. There's more concern that bad news could potentially be bad news for the market.
Do you think that the upset last week in the market was warranted? Was it justified, or was it an overreaction to, let's be honest. I mean, the labor market, the labor report may have been a touch disappointing, but it's kind of a stretch to suggest that it was really weak.
Yeah.
Still at 100 and something thousand jobs.
Right. I do believe that coming into July, the sentiment was extremely euphoric. And you start to see a little bit of correction leading into month end. You saw the big tech selling off. You saw the rotation into small cap stocks. And back then, they were also doing the Trump trade. But since then, a number of things have changed. I think the election is now too close to call. There are actually people talking about a potential blue sweep now, with Kamala Harris gaining a lot of momentum. So I do believe that the market was due for a pullback. And this was just a catalyst, happening with the BOJ being, given this unexpected rate hike. So that was an easy excuse. And I do think what happened on Monday was overdone, especially that 12% drawdown in Japan that bounced back very quickly. And that was all tied to the yen's action.
You point to the debate over mid versus late cycle. I don't know if you heard the conversation we had at the very top of our program with one of our guests making the argument that all cycles come to an end, and this one's probably getting close to the point that it is, certainly implying that we're more late cycle than maybe some would like to believe. How do you weigh in on that?
Yeah, that's the big question right now, and there are no conclusive data at this point. We have very mixed data. If you believe that we're in the mid-cycle, meaning there's several more years of expansion, every pullback is to be bought, because in that context, earnings will continue to grow. You're still in the middle of a bull market. If you're more cautious that we're perhaps close to the beginning of that late cycle or already in the late cycle, then the pullback may be part of a topping process, in which case you want to get incrementally more cautious. And again, at this point, it's hard to say because we do have additional stimulus coming into the economy. If you talk about the employee retention tax credit, the IRS just announced on Friday they're resuming payment of that very strong, very powerful stimulus, and that's coming to the rescue. Beyond that, we also have another $300 billion in the overnight reverse repo that will get shifted into the market between now and year end. So those will keep the market somewhat elevated. But beyond that, I think it gets really tricky after the general election.
Your positioning perspective sounds to me to be cautious. I mean, income-oriented investments are better than equities, you make the argument. Defensive parts of the market are better than perceived offensive parts of the market. Mag 7 stocks are likely to go sideways. Have I characterized your view correctly?
Yes, indeed. And that stems from the valuation differences. If you look at interest rates, we have normalized to the pre-great financial crisis levels, and the Fed is about to start cutting interest rates. So that makes fixed income relatively more attractive. Equities on the index level still look pretty expensive on a valuation basis, and part of that is due to Mag 7. I do believe that Mag 7 is likely to mark time for a while to let the earnings catch up to valuation. And at the same time, the other part, the rest of the market looks more interesting. And indeed, some of these dividend-paying stocks, telecom equipment stocks, for example, you get PE below 10 times, you get 5, 6 percent yield. That combination is pretty attractive in a normal market.
What kind of volatility do you think we're going to have between now and the election? Was last week a warm-up act for what you could have based on polling as we get closer to Election Day? You referenced some of the more recent polls, which suggest a much tighter race, if not a different potential outcome than some were gaming out not a month ago.
Yeah, I do believe volatility will be elevated relative to where we have been in the first half. However, I doubt that we'll shoot up to 65 intraday like we did on Monday.
Yeah, that was something.
Right, but something between 20 and 30 is likely.
20 and 30 is likely. Let me ask you something. Yes, a week ago this morning, okay, markets are going haywire. There's like a panic attack over just about every carry trade unwind. We're worried about the economy. What was happening in your on the front lines where you were? Were you thinking this, okay, this could be something more substantial than maybe we were prepared for? What was the note to clients? Put me inside the room.
Yeah. So our stance was that as long-term investors, we're not going to look at the knee-jerk reactions in the market to certain catalysts. Our view has been that we're perhaps getting late in the business cycle. We favor fixed income. Equities look somewhat more elevated on the, on the valuation side. So it wasn't a surprise that we have a pullback. And in fact, our message was try not to catch a falling knife. But individually, as a portfolio manager on the equity side, that's the time you look for opportunities.
Jimmy, we'll talk to you soon. Thanks for being here.
Sure, pleasure.
Jimmy Chang. All right, up next, we're tracking the biggest movers into the close. Pippa Stevens is back with us once again. With that, what do you see?
Well, Scott, one financial player is banking on another, taking a stake and sending shares soaring. The bank stock to watch coming up next.
4:15 from the closing bell on this Monday. Let's get back to Pippa Stevens now for the stocks she's watching. Pippa?
Well, KeyCorp is the top performer in the S&P 500, with shares pacing for their best day since November 2020 after Bank of Nova Scotia took a 14.9% stake worth $2.8 billion in the regional bank. KeyCorp CEO Chris Gorman telling CNBC it gives the bank strategic latitude to look at and restructure some of its balance sheet. And shares of Monday.com are having their strongest day since May, hitting a new 52-week high after the Israeli-based software company posted better than expected second quarter results. Needham and Piper Sandler both boosting their price targets after the report. Those shares up 12%. Scott?
All right, Pippa, appreciate that. Thank you. Pippa Stevens still ahead. JetBlue shares are pacing for their worst day ever. We're going to break down what's driving the stock lower today. We're back on the bell right after this.